it's going to take every job that's available for humans right now.
G2, that's a pretty extreme prediction. There is this question of who potentially benefits within the labor market and who is left behind. And I wonder, at Cisco, you talk to a lot of companies. How are they preparing their workforces, and are they aware of how much retraining is necessary to keep their humans relevant?
Yeah, I think there's, most organizations right now are thinking about how is each job going to get reconfigured, and what are we going to need to do to make sure that the augmentation of AI to a human makes the human more productive. What we want to do ultimately is make sure that AI can reach its full potential. Humans can reach their full potential with AI. So, for example, at Cisco, we are hoping that there's going to be a lot of code that gets written autonomously. That doesn't mean that we're going to have less engineers. That means that the engineers will provide more insight, more oversight, and they'll actually think about new ideas because we are currently so constrained with engineering talent that we're not able to prosecute all the ideas that we have, and now we'll be able to actually get more throughput capacity as a result of having AI being a companion for every engineer. And so I feel like every single job will need to get reconfigured slightly, will need to have be adjusted, but this is no different from any other previous technological revolution that we've had. With the internet, you had to have the same. With the personal computer, there was the same kind of reconfiguration of jobs. And yes, some of those will, those jobs will go away, and there'll need to be some retraining. But frankly, there'll be new jobs that emerge that we haven't seen up until now that allow us to actually move even faster.
One of the issues and one of the differences now versus the internet or the industrialization or even the engine when it came out is the speed of how quickly this is getting implemented, of how quickly the development is going. And we're getting to phase 2 before some people even understand the potential of phase 1. And by the time we get to phase 3, there are going to be a whole host of people that don't even realize how behind they are. Just how big is that mismatch in terms of the speed of the evolution and how behind a lot of the workforce is to meet it?
This is actually a really important point, Lisa, because the speed of the pace of change is something that we've never seen before. And frankly, that's why sitting on the sidelines and waiting for this thing to kind of play out before you jump in is exactly the wrong strategy. What we need to do is make sure that everyone's actually getting dexterous with the use of AI, because there's only two kinds of companies in my mind: those that are going to be extremely dexterous with the use of AI and others that will actually really struggle for relevance. And we want to make sure that there's more and more companies that are in the first category, not the second. And so I do feel like speed's an important dimension. And in order to tackle that, every company just needs to make sure that they're actually thinking about getting in, not sitting on the sidelines, but immersing themselves and experimenting with AI as quickly as possible so that they can get an instinct, they can get some kind of judgment of what this is going to look like over time.
G2, you're not just working with companies, you're also working with governments. Front page of the Wall Street Journal today is talking about how China's AI companies are basically challenging U.S. superiority. Who is doing it well? Who do you think is winning this race?
Well, I think right now, while U.S. is in the lead, China is actually catching up fast, and so we need to make sure that we continue the pace of innovation that's there. And what you want to see is that the U.S. companies are becoming some of the standards for infrastructure build-out that might be all around the world, for safety and security all around the world. You want to make sure that that happens, and that's why it's so important that the companies that win and the countries that win with the AI race are the ones that are also going to win economically. They're also going to win from a national security standpoint. So there's a lot of benefit to making sure that you're kind of immersing yourselves in an AI. I was recently in the Middle East, Lisa, and we announced some partnerships with the Saudi government and with the Kingdom of Saudi Arabia, as well as with the United Arab Emirates, where we're going to help with data center build-outs. And if you think about what the constraints of AI are, there are three things. There's power, there's compute, and there's networking capacity. Those are the constraints, and we need to make sure that this infrastructure gets modernized and that we have American companies that are helping in participating in these massive data center build-outs, which actually provide the infrastructure necessary for everyone to be able to have access to AI.
G2, just before you go, we're focused on payrolls this week. Lisa's been doing a great job over the last week or so, just bringing up, highlighting continuously, repeatedly, how difficult it is for graduates to get a role at the moment. And I just wonder how this is going to impact hiring. at the entry level over the next several years or so. As companies figure this out, they'll invest a lot in software, invest in the current staff to learn how to use some of these things, but I'm not sure they're going to hire at the same pace, G2, and I wonder what your experience is now, both within Cisco and looking out speaking to other companies.
You know, John, you and I talked about this last time as well. I actually tend to learn so much from the people that are AI natives, that are just coming out of the educational system, because they think they use AI very differently than folks that have been around for a while. And so I actually don't think it's a good strategy to not hire entry-level candidates and just think that AI is going to replace those jobs. Frankly, I feel that you have an entry-level candidate with AI as a companion, you can start to see meaningful levels of compounding of value. And so I do feel like there's two categories of people that are actually doing really well with AI. The early entrants who've actually been AI native, that know and have a very different instinct for how to use AI. And then the second ones are the highly experienced group of people that are using it well. What we need to do is we need to make sure that we train the people in the middle so that they're all not fearful of AI, but they're in fact starting to think about this as an accelerant to their personal productivity as well as the productivity of the companies.
You're slowly converting me, G2. It's wonderful to catch up. Enjoy London, sir.
I'm so glad, John.
We'll see you in New York soon. G2 Patel there of Cisco. Thank you, sir. He's wonderful when he breaks all this stuff down. I think a lot of people still fearful.
Yeah, if you're not an AI native, I think about AI natives versus someone like myself who's kind of right off the boat trying to figure it all out. But I do wonder, what this really does to the dynamic of a labor market and how you factor that into some of the payrolls figures that we're seeing. I mean, what's a good job at a time where the job description is changing so dramatically?
So true. We'll look at those job numbers a little bit later this morning and again tomorrow with an update on stories elsewhere with your Bloomberg Brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. President Trump says Israel has agreed to conditions for a 60-day ceasefire in Gaza. In a post on Truth Social, Trump said mediators will now deliver the proposal to Hamas and warned them the deal will not get better, only worse. Israeli Prime Minister Benjamin Netanyahu is set to visit the White House on Monday. Meanwhile, Columbia University was the victim of a hack. A Bloomberg investigation revealed that 2.5 million students and applicants' information were stolen. We reviewed data provided by a person who claimed to have hacked the school back in June. It included university-issued ID numbers, citizenship status, and application decisions. The data stolen dates back decades. And season 3 of Squid Game shattered records, drawing over 60 million views in just 3 days. The final season of the Korean dystopian thriller also hit #1 on Netflix in 93 countries. Netflix says 80% of its members have watched Korean content since Squid Game debuted in 2021. That is not me. That's your Bloomberg Brief. John?
It's not me either. Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes. Up next on the program, 1 week and counting.
Mr. President, are you thinking of extending the pause on tariffs beyond July 9th?
No, I'm not. I'm not thinking about the pause. I'll be writing letters to a lot of countries, and I think you're just starting to understand the process.
Up next on the program, Wei Li of BlackRock.
Incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from New York City, welcome back to the program. Under surveillance this morning, 1 week and counting.
Mr. President, are you thinking of extending the laws on tariffs and bonds allowed?
No, I'm not. I'm not thinking about the pause. I'll be writing letters to a lot of countries, and I think you're just starting to understand the process. We've dealt with Japan. I'm not sure we're going to make it. I doubt it. They and others are so spoiled from having ripped us off for 30, 40 years that it's really hard for them to make a deal.
It's the latest this morning. President Trump threatening Japan with tariffs up to 35% while doubling down on his self-imposed July 9th deadline for trade talks. Where Lee of BlackRock writes, in a world of weak macro anchors, mega forces like artificial intelligence are the new long-term anchor for achieving durable returns. Wade joins us now for more. Wade, good morning.
Good morning.
Is it getting harder to find a long-term macro anchor in this environment?
Well, long-term macro anchors have been lost. You look at inflation anchors, you look at long-term growth anchors, you look at long-term fiscal anchors, you look at even anchors in institution confidence, right? Like the safe haven status of the dollar, but maybe also independence of the Fed. So it's really hard to find long-term macro anchor, which is why we actually think that it's easier to think about tactical asset allocation because of the immutable laws around U.S. debt and global supply chain. Paradoxically, there is greater certainty in our assessment in the near term than in the long term, which is the opposite of what has been always the case, which is why we're moving risk targets in terms of the budget deployment from longer-term strategic asset allocation towards tactical asset allocation. This is one of the best tactical investment environments.
So what's the tactical approach currently for you and the team?
Right now, we are investing for the here and now, which is to recognize that so far this year, we have focused a lot on tariffs, and we're still focusing on tariffs, which is very different from Trump term one, where we had tax cuts first, and then we had tariffs. But now focus is going to shift also towards tax cuts, also towards deregulation, potentially unleashing animal spirit. And yes, tariffs headlines are still flying around, but we do think that because of the constraints and immutable laws that I just talked about, we're going to get to some sort of landing spot, not likely derailing the tactical kind of risk-on view that we still have. So right now we still like U.S. equities, and I would observe that at this juncture is no longer consensus. I speak to investors across the world, Europe, APAC. I would think that it's more divisive right now, but we still like it. The condition for sustained rest of the world, Europe outperformance over U.S. haven't been met, which is why we haven't chased the European equity outperformance beyond closing the underweight to neutral earlier in the year.
So you keep mentioning the immutable economic laws, and I think this is a really important point. And in the outlook that BlackRock put out, you did write, we think immutable economic laws will prevent a return to a maximal stance. How much does this just mean fade the extremes, fade the tail risks, because they always will come back to the center based on math?
That's exactly right. If we faded extremes, which we did, think about kind of how we up-risked immediately after April the 9th, then we would have captured, and we have the 20%, more than 20% rally from the April trough. So it's really recognizing that even though headlines can be very scary sometimes for markets, there are things governing how quickly things can change from status quo in the very near term. So if we want to close trade deficit, then we lose a lot of the reliance on foreign funding. And given that the US has the highest financing needs among G7 in terms of percentage of GDP and one of the shortest average debt maturity, that is something that cannot really be messed around with, which is why we believe, especially at times of a huge amount of uncertainty in market narratives, this strategy is rewarding and in fact has worked really well this year.
Just quickly, how fragile does that make this market that has become numb to extremes?
I think markets are not yet numb to extremes in that you still see headlines like whipsawing day-to-day market volatility. We see equity sensitivity to incoming data at a much more elevated level compared to pre-pandemic. We see rate sensitivity to incoming data, like we're talking about month-to-month inflation print, but the long-term 10-year sensitivity to month-to-month inflation prints is so much more elevated now, which means that markets are trying to extrapolate from incoming data what it means for the long term, which speaks to the loss of long-term macro anchor, which is why if we have a very clear kind of assessment of the fundamental picture that allow us to play the current environment tactically and reversal strategies in the middle of wildly swinging market narratives has been very rewarding for our active platform.
Super thoughtful stuff. Waitlist, appreciate your time as always. Thanks for being with us here in New York. Waitlist there of BlackRock. We do get more data a little bit later, the ADP employment report in about an hour and 20 minutes. The estimate in our survey so far, 98,000. Last time around, a big downside surprise, 37K. We'll see what we get a little bit later this morning. Up next, we'll catch up with Sarah Hunt of Alpine Saxton Woods. Later in the hour, the former Speaker of the House, Kevin McCarthy, Matt Lazzetti of Deutsche Bank, and Joe Livornia, the Counselor to the Treasury Secretary, Scott Besson. From New York City, this is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Before
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
It's a very interesting dynamic for the U.S. economy right now. The labor market has loosened a lot.
The labor market's still holding up.
The whole narrative of the economy having avoided a recession is a reasonably positive backdrop.
You've seen economic surprises turn much lower. People have been cutting their GDP growth estimates.
Liberation Day is really what drove those U.S. growth expectations lower. And part of that also fed into people selling dollar assets.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P positive by 1/10%, snapping back, bouncing back from some mild losses in yesterday's session. On the Nasdaq 100, down not even 1/10%, negative 0.05%. Things could get more interesting as the day progresses when we get some economic data, 8:15 Eastern Time, the ADP employment report. Later in the week, of course, about 25 hours away, the jobs report in the United States. That's just around the corner. Then through the weekend, looking to see if the president gets his bill.
And this really is going to be key, because the more certainty we get about the bill, what that looks like, what the deficit will be, and then the tariffs and what that deal will be when we get that in about a week, then we can get a sense of what the economic ramifications could be as we extrapolate out and try to understand the new normal that we're in, that everyone has become benumbed to. And that is what people are hoping for. Will they get it? I think still remains a question.
Jim Karen of Morgan Stanley joining us later in the program in the next hour. Jim making the point that he thinks in the second half of this year, you'll see clarity replacing uncertainty. And I think looking down to D.C., that's the hope we all share.
That's a hope that also you see projected right now when it comes to what's going on in the House. There is, from the leadership of the House, trying to project this clarity that they can get the vote today. They're going to reconvene at 9 o'clock. Potentially, we could see a vote as soon as today. Yesterday, it was 8 individuals we were worried about. It's about the same, maybe even 12, a handful. But everyone has different issues. There's individuals that say they're upset about SALT, individuals that don't like the Medicaid cuts. And then the biggest headache for Speaker Johnson has to be the House Freedom Caucus. These individuals are coming out like Ralph Norman and saying that bill in the Senate is a non-starter for us to vote for in the House.
They're focused on the details. I have to say, from the investors that have been on this program, they're not focused on the details at all. They just want to make sure that we see an extension of current policy, and that's secured, the tax cuts from the first term of President Donald Trump, and that we just move on. We just move on from there, do something on trade, move on again, tech's back in a leadership position. That's something people are comfortable with, and stocks are close to all-time highs.
When you say people, when you say investors, I think we're talking stock investors. I think bond investors don't know what to make of this. They don't know whether the bond vigilantes have actually disappeared, whether they ever existed, or whether there actually is a real question around the deficit. And I do go to the Committee for a Responsible Federal Budget that came out with a projection that this would increase the deficit by more than $4 trillion for the next 10 years. And it raises a question of, will there be some acknowledgement of this in the bond market? Are we already seeing an acknowledgement of this, where yields would be substantially lower on the long end should there not be this concern hanging over about the deficit?
Wall Street Journal editorial board this morning calls it the meh tax bill that has to pass, meh, M-E-H. And their last line is the bill is more than anything the triumph of GOP political necessity, and the end of tax uncertainty is its main virtue. This extension of policy, because there'll be tax hikes at the end of the year if they don't do anything.
We can explore the counterfactual. If we weren't extending current policy, we're talking about something much, much worse. We'd be talking about tax hikes for a lot of people, and I think we'd have to confront the idea that we'd be talking about an economic downturn, and you'd have low bond yields for a very different reason, and I would say that would be a bad reason also.
Well, the Fed would be cutting anyway, just putting all of this aside, because inflation is naturally coming down. Now you've got tariffs potentially juicing inflation, and you have a deficit increasing, and you have an economy that's chugging along. So it leaves the Fed in a very difficult position, and that is the reason why they are in wait-and-see mode, even though they're getting handwritten notes over different pamphlets from the president saying, please, what are you doing?
We'll talk about those handwritten notes a little bit later this hour. The pressure building on Fed Chair Jay Powell. More data later. If you're interested where the bond market is right now, just a snapshot for you. Bond yields are actually higher this morning by 5 basis points at the very long end of the curve. So on 30s, your yield at the moment 4.81. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Sachs & Woods, with stocks pausing near all-time highs. Former Speaker of the House Kevin McCarthy as the tax bill makes progress in Washington. And we'll catch up with the Counselor to the Treasury Secretary, Joe Livornia. Joe's going to join us a little bit later this hour. We begin this hour with stocks higher. Investors awaiting June payrolls and more clarity on trade policy. Sarah Hunt of Alpine Sachs & Woods writing, the momentum seems to be favourable as long as the economy holds up and earnings continue to come in with positive trends. Risks are still out there. Sarah joins us now for more. Sarah, good morning.
Good morning.
Question we've lent on a lot over the past few weeks is whether the worst of the data is still in front of us. And if it is, are investors going to be willing to look through it now we get some policy clarity?
I think if you do get some policy clarity, it's absolutely going to help. I think that the worst of the data ahead of us feels a little bit like long and variable lags that we were worried about a year or so ago with higher rates, that we're going to make all these problems. And to the extent that people, including myself, were looking for some of that, it didn't really come through. So I think this is the reason the market is where it is, I think, besides good earnings, is that people are sort of having the realization, well, what if those bad things don't happen? Because if they don't, we've got some relatively decent runway if we get some of these problems solved. Because I agree with you on this bill. If you don't get it, then the tax raises take all bets off the table, and the market is absolutely expecting it to be a done deal.
The stock market is certainly seeing a half glass full and some, both in technology stocks and in bank stocks. And I wonder, of those two rallies in those two sectors, is there a sector that you think is a little bit more vulnerable as we work our way through the rest of the summer?
Well, I think that the banking sector got some relief on some of the issues that were really plaguing that. So I think that the banking sector is in pretty good shape. Technology has been much more run by headlines, where the slowdown in some of the data center spending or some of the data center booking that people were worried about at the beginning of the year had a big effect on that group. I think now we're back to actually it's going to be fine, and there's some bigger use cases, and that's making a big difference. And I think that that's something that everybody was looking for last year. As that starts to come through, I agree with Waitlist, it's a good place to be.
Just to build on that, last year people were looking at the shift from some of the big hyperscalers to the adopters. That was the story last year. It didn't come fully to fruition. It was sort of concentrated in the Magnificent Seven stocks in terms of the rally. Are you actually starting to see that widening out that would justify equal weight, that would justify not just hiding out in the two sectors that John named, which is the bank area as well as the tech sector?
Well, it's interesting to see the leadership come back to the tech sector, right? And I think that that bounce back was so severe this year so far that it's left a lot of people in the dust, because the rest of the market has done okay, but not as well now that you've seen that return to performance. So I think that there is room, but you need to figure out why, and that's got to be on earnings and margins, and that's part of the AI story, that we can help earnings and margins. So all of that sort of comes together, but people are still more likely to be chasing the front runners in that than the people who will eventually benefit, at least at the moment.
How much is the stock market constrained by a bond market that doesn't know what to do? Because that's kind of what it feels like, particularly on the long end.
It doesn't really feel like the stock market's all that constrained at all right now, does it? I mean, we just hit another new high after big concerns and after that huge plunge in April. So I think that it's almost like we're acting in different ways again. Some of those original relationships between bonds and stocks that people look for, some of those correlations are out the window, and a lot of the correlations that we're used to seeing are not feeding the way that they necessarily textbook should. And I don't know that that's really making that much of a difference, but you get huge moves in yields in a quick period of time like we saw earlier, and yes, that can start to affect equity markets as well.
The reason why I ask this is because there was a belief a couple months ago that bond vigilantes would come out and would protest a bill like the one that we're seeing that would increase the deficit this much. Right now, you're seeing a marginal sell-off, but otherwise you're not seeing a lot of action. There's a real question about whether there will be a reaction, and if there is not, whether this is potentially another risk that's been taken off the table. How do you understand the concept of the deficit as it plays into the bond market.
Well, what's interesting is I was listening to Bloomberg yesterday, and somebody made the point that a lot of the bonds are, I think it was Bob Michelle, a lot of the bonds are in hands that are strong hands and not in dealer hands, that are in hands where people want to hold those to maturity. So the trading around them isn't as fast and as much as it used to be. The holders are now in places where they're going to stay there. So that makes a little bit less volatility sometimes, not all the time, because you certainly saw a lot of bond volatility. But the idea that there's a lot of money looking for a home and people put it in bonds, and at yields where they are right now, they feel pretty comfortable with that on the longer term. So that trading fastness isn't quite as bad as it used to be.
If you want to express your concern with the policy in Washington, then where do you do it? Is it just dumping the dollar?
I think that's been part of it, but I think it's hard to express that concern in a specific way because there's so many moving parts outside of the U.S. So what's going on in Europe, there were reasons to say, okay, let's get excited about Europe. Whether or not those reasons come to fruition is always the question with Europe, right? We're going to make all these spending changes. Are they going to actually be able to do it? I don't know what the answer to that is, but there was at least a fundamental reason to say, okay, I can get interested in this market now, and so therefore I can move some of my money and I can change some of my hedging, which is also part of what's going on in the foreign exchange markets. So I think that there are ways to do that, but it's hard to pull apart each causality all on its own. And I'm not sure exactly how you would best express that. And getting out of the market hasn't been the best way to do that either.
When it comes to the question marks in Washington, D.C., these two self-imposed deadlines, we do know that at some point the bill's going to pass, whether or not it's Friday or not, and then July 9th. But after July 9th, how concerned should the market be about the sectoral tariffs that a lot of people say have stronger legal footing?
I think this is one of the big questions that when we start to talk about earnings are the driver of markets, right? So earnings are going to be affected by all of that. And one of the things that people got a lot of comfort with was good Q1 earnings and also the moving of those deadlines and whether or not those things were actually going to happen. As they start to come through, if they start to have a big knock-on effect on earnings, it's going to matter a lot more. Right now, there's still the belief that we're still in the negotiation phase and that even though we're going to have a deadline in another week, there's going to be more room to move around that as we've seen so far. Whether or not that comes true, this is exactly what happened in April. Everyone thought it's a negotiating tactic, then they thought, oh my goodness, this is serious, and now it's not a negotiating tactic. So I don't think we know what the answer to that is, but we certainly have a history to show that maybe there's more room in that play than we had the first time.
I'd take it an additional step as well, just to build on what you were saying. I think the market has also decided that the tariffs that are on and any additional tariffs won't actually lead to the kind of inflation bump that people were worried about. We've taken comfort from the disinflationary trend of the last several months, which is why this market is betting on rate cuts, even as the chairman is still going around saying they're not going anywhere anytime soon.
And part of the reason why is because of Fed officials like Mary Daly, who came on surveillance and said that she seems to be leaning toward this idea that you're going to get a one-time price increase, but after that, there isn't going to be this long-standing inflation that remains in the system. That seems to be what people are coalescing around.
Sarah Hunt of Alpine Saxon Woods. Sarah, thank you. It's good to see you, as always. Let's get you a quick update of news elsewhere with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. President Trump's tax and spending bill is back in the House after barely passing the Senate with a tie-breaking vote from Vice President J.D. Vance. Now it's running into resistance from Republicans who don't like some of the changes made in the Senate. Moderates are worried about Medicaid cuts, and fiscal hawks are vowing to oppose it over its impact on the deficit. Meanwhile, we're just 1 week away from President Trump's self-imposed July 9th tariff deadline. That's the cutoff point for countries to strike deals with the U.S. or see higher tariff rates. The president says he's not considering any delays, and he's renewing his threat to cut off talks and impose higher rates on several nations, including Japan. And Iran is said to be cutting off communication with key UN nuclear officials. Sources telling us here at Bloomberg that Iranian regulators have stopped taking calls from the IAEA after formally ending inspections last week. Tehran had previously allowed an average of more than one IAEA inspection a day, but the Israeli and U.S. assault has changed the equation. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time. Up next on the program, facing opposition in the House.
85 to 90% of this bill is the House-generated product. The Senate made some modifications to it. We're at the 1 yard line in this game that we're going to run it right up the middle and score for the American people.
Unique up insight just around the corner from former Speaker of the House, Kevin McCarthy, live from New York City this morning. Good morning.
our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Quiet morning for the S&P 500 so far, positive by about 0.1%. Bit busier in the bond market, yields higher at the very long end of the curve. Things can change later. 1 hour from now, we'll get some ADP jobs data. Under surveillance this morning, looking down to D.C., facing opposition in the House.
85 to 90% of this bill is the House-generated product. The Senate made some modifications to it. They made it more conservative in some places and moderated it a little bit in others. This is no longer just a House bill. It's not a Senate bill. It's the bill of the people, of the hardworking American people, and we are going to deliver it by July 4th. We're at the 1-yard line in this game that we're going to run it right up the middle and score for the American people.
Here's the latest this morning. President Trump's tax and spending bill hitting a little bit of resistance in the House as Republican lawmakers return to vote for the Senate's version of the legislation. Joining us now is Bloomberg's Tyler Kendall. Tyler, let's talk about that self-imposed July 4th deadline. How are things shaping up?
Yeah, hey, John. Well, it's by no means a done deal, though President Trump is ramping up the pressure on House Speaker Mike Johnson to thread the needle here because he can only afford to lose 3 Republican votes. And we already know of 2 likely no's since they voted against the package back in May. That's Congressman Thomas Massie of Kentucky, who's actually facing a Trump-backed primary because of his no vote. And then also Warren Davidson of Ohio, who has raised concerns about deficit spending. And it is perhaps this group of lawmakers who are pitching themselves as fiscal hawks, many of them members of the House Freedom Caucus, who ultimately say that they're not going to be able to support this bill unless they see some sort of further commitment when it comes to this, since they think that the Senate fell short by about $500 billion in promised spending cuts. Though we should point out that their counterparts in the Senate, like Ron Johnson and Rick Scott, ended up voting in favor of this bill, so they might not have allies in the upper chamber to make any sort of significant changes, because at the end of the day, there's pretty broad agreement about the core pillars of this package when it comes to the tax cuts, but it really is the spending cuts that we're seeing prove the most contentious. And that's why I'd say we should also keep our eyes on some of these moderate Republicans in some critical battleground districts who have raised concerns about changes to Medicaid. Not necessarily tightening the work requirements, but that the bill would actually lower the Medicaid provider tax, which could mean less federal matching funds for these states that expanded coverage under the Affordable Care Act. And John, we actually heard from 16 of those Republicans who signed a letter last week saying that they would not support this bill if it did lower Medicaid provider taxes. But we should say that in the final compromise that the Senate had, it did boost something known as the Rural Hospital Fund in a bid to try to get some of these lawmakers over the finish line. We're going to have to see if it's enough and whether any of them are willing to defy President Trump.
Tyler Kendall with the latest. Tyler, thank you. Hoping to avoid some ping pong between the House and the Senate. Joining us now, a man with experience of all of this, the former Speaker of the House, Kevin McCarthy. Speaker McCarthy, welcome back to the program, sir. It's good to get your thoughts. I want to lead with a question that Anne-Marie asked a little bit earlier on the program. When you're herding cats on Capitol Hill, is it easier or harder when the President of the United States is Donald Trump?
Oh, it's so much easier. President Trump is stronger today than he was at any time in his political career. President Trump is stronger in the House. Remember, just to get this bill out of the House, they all said they weren't going to vote for it. President Trump came down to a conference, told both sides from SALT, it's over. From the Freedom Caucus, that's over. Everyone who said they wasn't going to vote for it, voted for it in 24 hours. So this bill's going to get passed. The only thing that's holding up when this bill gets passed is the weather in D.C. and the attendance of how that people get here.
Well, yeah, people now have to come back to Washington when they thought they were going to have this week off. Speaker McCarthy, so you think the Freedom Caucus will fold again? Will they fold by July 4th?
I believe so. I mean, think about this. Mike Lee Rick Scott, Ron John, all voted for this bill in the Senate, and they're not going to vote for it. So if they don't want to vote for it and they vote no, they're sitting with the Democrats and want to increase taxes. They have no place to be. What they want to do is get the attention they always crave, so they talk about that now. But how many times can you cry wolf and say you're not going to vote for something and in 24 hours vote for it? They have done this numerous times. They want the president's attention. They say this so they can go down to the Oval Office and see the president and go back home and say they saw the president.
So do you think the rule vote, which comes first, will pass? Because we can't see the bill on the floor until that goes through.
I believe, yes, it'll pass. It's all going to come down to attendance today. How many people could make it to D.C.? A lot of flights were canceled, so do they have to delay it a day or not? But this bill will pass. Remember, it already passed the House. It has now passed the Senate, and you've got the July 4th deadline holding right behind you. There's a lot of pressure mounting here. President Trump has done a tremendous job on this, but he has become the speaker in the same time frame. Every time he's leaned into a bill, it's been able to pass.
He's the closer. He's the speaker in chief. How concerned are basically just congressmen and women about being torched on Truth Social like Thomas Massie?
Well, you look at Tom Tillis. I mean, Tom Tillis, who had a lot inside this bill, was pushing people to put more inside the bill, turns around and decides not to run for re-election. I think that plays on the mind of a lot of individuals. And people are now being able to look at the bill. At first, they're always arguing about what's wrong, they're not really looking at what's positive. That you're not raising taxes. You're actually getting the economy moving again. You're keeping your promises. For those who are sitting in SALT districts, and you had a list up there of people who are leaning no. Nick Leilota, he said he's for this bill. That's a big movement for, because he actually improved SALT for his district. When it was 10,000, it's now 40,000. He can go back home and champion what he was able to achieve.
But at the same
while he was in
time,
Congress.
if he votes,
that's a victory.
At the same time, though, there really won't be a cap. The cap expires at the end of the year. So don't you think the SALT caucus does have some leverage?
No, it goes after 5 years. No, from the same standpoint, it wouldn't totally go away, or people going to let these taxes all go away. He'd been able to achieve something while keeping taxes low. If he wanted SALT to go away, he'd raise taxes on all of his individuals and play that way. That's not why people elect him. They elect him there to go legislate, and that's exactly what he did. He improved the lives of his constituents, and he can champion that and actually be celebrated back home.
Each of the constituents were trying to improve the life of their region. From an overarching federal perspective, which is a federal law, do you think that this is a good bill?
Yes, this is a very good bill, because what would happen if you did not pass this bill, your taxes would go up, the economy would spur a little down. I mean, this is exactly keeping the promise. And if you want to put it in perspective, this bill is exactly what President Trump campaigned on, so the American people voted for that. He won the popular vote, something a Republican president has not done in more than 30 years. He says no tax on tips. It's keeping his promise, and it's the first thing people look at. And even if you didn't vote for him, you respect that. You kept your promise. That's a change.
Well,
you said you'd secure the border. You secured the border.
With all due respect,
you said you would move it and make sure the tax are done. Yes, whatever respect you want to give me, I'll take.
I'll give you loads of respect. There's a real question right now about the deficit increasing and the fact that there is a perception, and it was edified by the Congressional Budget Office, saying that essentially this would take money out of the pockets of the lowest income individuals in the United States, and it would add to the higher income individuals significantly in the form of tax cuts and other potential benefits. That isn't necessarily one of the agenda items that was promised on the campaign trail, correct?
Well, all due respect to you, if you look back at the tax bill that we're keeping in place, what happened after it was placed? People actually got more income. Companies gave $1,000 checks to their employees. So the CBO can score it one way, but we know what reality is. We know what we're seeing right now as well, where the S&P 500 set a new record. So I think that lives much stronger to the American public than anything else. When they keep their promise, the economy's stronger, the border is secure, you're watching the Middle East go to a place we haven't seen in a long time, trying to end war in Ukraine. Yes, the world is a much better place because we elected President Trump. And yes, he is keeping his promise, and this aligns exactly with that, and America will be stronger for it.
Speaker McCarthy, I'd love to talk to you about your relationship with both President Trump and your friend Elon Musk. Are you being called in to try to mediate this feud we see?
I have not been called in, and I just know when two bulls fight, the only people who lose is the ground underneath it, and I don't want to be that turf. One thing I do know is when those two work together, there's nothing we can't achieve. So in the same mindset, I think people need to take a deep breath. Let's get back to where we were before. Let's put America first and find the way that we make everybody stronger.
Speaker McCarthy, with respect and thanks, thank you, sir. Appreciate your time, as always.
Always.
Thank you.
Take care.
Thank you, buddy. Thank you very much. The former Speaker of the House, Kevin McCarthy there. I'm still in that line, aren't you?
I think that's great. I'll take all the respect I can get.
I think he loved your first question because let's be honest.
Well, it's your question. Let's be clear.
Okay, but the point of the matter is, it is easier to be the Speaker of the House when the president is President Trump and not when he was Speaker of the House when it was Biden, because Trump basically does so much of the heavy lifting, whether it's Truth Social, having people over at the Oval. He gets these congressmen and women to the finish line without the Speaker having to really do too much.
That, though, is what I think was interesting about the last week or so. Your point is perfectly valid, but the extra wrinkle comes from Elon Musk, because Musk is the money man. And seeing division between those two individuals over this bill is a choice between pleasing the president and upsetting where the money comes from.
And the reason why this is particularly salient is because of being primaried. That is the real threat coming from President Trump. I'm going to put a candidate in there to run against you. Well, if you've got Moneybags McGee over here fueling your campaign, it changes the equation.
This competition will continue down on Capitol Hill. The only thing stopping this bill from passing, apparently, is the weather in Washington. Up next, Matt Lazzetti at Deutsche Bank with markets counting down to June payrolls, plus Danny Berger with your morning movers, looking at shares of Tesla ahead of the company's second quarter deliveries.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Here's a snapshot of the markets this morning. Good morning to you. Equity futures positive by 1/10% on the S&P. Just a small bounce, back from a small bounce of losses just yesterday. In the Nasdaq, we're looking at gains of just 0.02%. Much more interesting in the bond market. 2-year, 10-year, 30-year, steeper curve this morning, led by some losses at the long end of the curve. Yields higher by 5 basis points, 481.41. And over the past week, got to put the spotlight on what's happened in foreign exchange. Euro dollar. 9 days of euro strength, the longest streak, Lisa said it yesterday, since 2004 for the single currency. Some euro weakness this morning. Euro dollar back down to 117.63 after going through 118. Just got to flag some pushback building from the ECB. The vice president saying 118's okay, 120's all right. Anything beyond that, we might have a problem. Another official talked about this weighing on inflation. And another official, Mario Centino, earlier on this morning, the risk of inflation undershooting is greater than the risk of inflation overshooting. The Eurozone in a very different place to the United States.
At the same time, not signaling rate cuts. So it really raises this tension of exactly how they'll respond as Christine Lagarde has her eye on creating some sort of reserve currency in the euro and wants to really bolster it, even if it gets a little complicated over 120.
Euro dollar negative by 1/3% so far this morning. That's a single currency pair for you. Let's get you some single names in the equity market with more. Here's Danny Berger. Hey, Danny.
Hey, John. Just moments ago, Tesla was gaining more than 1%, but those gains starting to ebb. Had a really painful day yesterday, but this morning we got the figures from Shanghai. Their deliveries there ticked up for the first time for the first month of the entirety of the year. Of course, Tesla has been under immense pressure, especially in China, given the competition, given the politics. The issue is, and perhaps why we're seeing some of the gains wane, is that the tick up was only 0.8% year over year. Even so, there was some hope that maybe this represented something of a turning point, or at least things not being as bad. Now, to the downside massively this morning, it continues to be Centene, one of the biggest losers, down just under 29%. This is a health insurer. They've scrapped their guidance for this year because the money that they get paid to take on more sick patients looks like it's going to be less in many states this year. They could see a hit apparently as big as $1.8 billion. So with that scrapping, we're seeing shares trading at a 2017 low. Finally, rounding things out this morning with Adobe getting a cut in guidance from Rothschild's Redburn, downgrading how they see the stock, saying that there is just a lot of competition and it's eating at the moat that Adobe has and their ability to keep up prices. We also saw Figma, for example, file for an IPO yesterday, one of the big Adobe competitors. But the analysts there saying that by 2026, we're going to get fully editable and multi-layered videos, and Adobe is maybe falling behind there. John.
Danny, thank you. With the latest there, Adobe down 1.3%. And I'll raise out this morning, President Trump's tax and spending bill passing the Senate, heading back to the House ahead of a self-imposed July 4th deadline. Speaker Mike Johnson facing an uphill battle with some members unhappy with the Senate's version. Speaker McCarthy speaking to us just moments ago, saying the only thing stopping this bill from passing is the weather in the nation's capital.
Because every congressman and woman were basically back in their districts preparing for their July 4th parades and seeing all their constituents. And now what they're doing is they have to go back to Washington. They're going to be stuck there until they get this over the finish line, because guess who is going to be truthing at them if they don't? And this was Speaker McCarthy, former Speaker McCarthy, his entire point. It is easier to be a speaker and really try to use that bully pulpit when Trump is the president, because he's going to go on truth and basically say he's going to primary you if you don't get behind his one big beautiful bill.
If I were a moderate congresswoman, all I can tell you is right now I would be saying, absolutely, I'm not going to vote for it. I think it's horrendous. Give me your best offer. Because ultimately, what you have learned is if you do that, sure, you'll get called names. You'll say it'll be primaried, and then you'll be given all sorts of stuff for your people that you can go back and say, look what I got for you. So, you know, watch for that. Watch the space.
To your point, it worked in the Senate. Why wouldn't it work in the House?
100%.
All over again. We want to avoid the ping pong. Said that a few times already so far this morning. The Fed chair still very much under pressure. He understands how it feels to be facing some tension with the President of the United States. He said this, though, and I think this is him responding directly to the criticism coming from the President of the United States, essentially saying the Federal Reserve would be cutting interest rates if it wasn't for the tariffs announced back on April 2nd.
And he said this before. We don't have a sense of exactly how this is going to play into inflation. And we are expecting to see a pop in the next couple of CPI reads. The dates on the calendar to watch: July 15th, August 12th, September 11th. Those are the 3 CPI prints that we get in the United States before the next Fed meeting, where the Fed is actually expected to cut rates, which is the September meeting. And this is really the question. Will that be enough? Is this going to really cause a pop in inflation? And will they have enough data to determine whether it's a one-time increase or whether it is prolonged in terms of inflation?
More economic data coming later. We're counting down to ADP on the job side of the dual mandate, and then payrolls tomorrow morning. Wanted to squeeze in Tesla. Deliveries expected to disappoint later on. Analyst estimates compiled by Bloomberg anticipating a 12% year-over-year drop following a 13% drop in the first quarter. This coming as CEO Elon Musk's feud with Trump ramps up once more, putting some pressure on the stock.
I remember when we didn't care about deliveries, when this wasn't a story about actual cars. It was a story about belief and faith and technology, and it still is for some people. This question of whether it is the robo-taxi front that really is going to propel this stock higher. But ultimately, that feud gets all the more important because that needs the president to sign off on certain regulatory oversight or frameworks to allow the robo-taxis to come. And the president was talking about cars blowing up yesterday, so who knows?
Is that what he was talking about?
EVs. Hydrocarbon.
Okay. Yes, okay.
Whatever. It was.
Should draw a distinction there.
The president says he didn't really like EVs, but he did buy one in front of the whole world for his entire staff to use, and I'm pretty sure they still have it.
Okay, that's the latest on Tesla. Some more data coming up a little bit later on both Tesla and on this economy. Investors counting down to the payrolls report. The estimate in our survey expecting 110,000 jobs to be added. Matt Lazzetti of Deutsche Bank writing something closer to 100K per month is now likely enough to keep the unemployment rate steady. Matt joins us now for more. Matt, good morning. It's good to see you.
Good to see you too.
This is the key debate going into payrolls, that we've taken this step down, that you can have numbers around 100K, and that doesn't mean you're increasing slack in the labor market. What's changed?
Yeah, so I think to put this into context, if you go back to last year, there was San Francisco Fed analysis that was saying the break-even number for payrolls was above 200,000. And that was reflecting big immigration surge, big pickup in labor supply. And to absorb that labor supply, you just needed to add 200,000 plus jobs. I think as we look ahead, that's just changing materially. You cited the 100,000 number there. It could be even lower than that. If you think about immigration flows, both the fact that we're not having inflows coming in, but also deportations have picked up, it is very possible that the break-even number is 50 to 75,000 as we look ahead. And that just means, as economists, as the market, we need to view this jobs report within a different context. 50 to 75 this year could actually be a fine payrolls number. But as you note, I think it would be most important what happens with the unemployment rate, what happens with other measures of labor market slack, and what happens with wage growth, because that determines the Fed's policy.
That determines whether it's a good number or a bad number, since the headline number doesn't matter. I'm looking right now at Citi analysts. They came out and they're expecting 85,000 total payroll job growth, but they're expecting the unemployment rate to rise to 4.4%. Would that be a bad read? And how does it differ from what you expect?
That would be a bad read. I think if you get a 0.2 rise in the unemployment rate on Thursday, the market is going to respond quite negatively to that. Our own expectations are 100,000 for jobs and a 4.3% unemployment rate. If you go back to the May jobs report, it almost rounded up to 4.3%. We were at 4.24%. So I think you need to view the headline numbers in the context of the overall report, in the context of what we get from JOLTS and those data points as well. I think the JOLTS data yesterday, which was for May, backward looking, but nonetheless was a solid report. The quits rate rose, the layoff rate was lower, job openings picked up substantially. I think that's a report that could allow the Fed to continue to say the labor market is solid, pending tomorrow's jobs report.
I feel like this is defining the word "the." Everyone looks at the same data and comes out saying it was solid, and other people say, look, it was really weak if you look under the hood. The JOLTS data in particular, you did see a rise in the headline number of job openings. But when you take a look at where these openings were, it was leisure and hospitality. And there's a theory out there that this is a direct ramification from immigration policies. There aren't enough immigrants for some of these areas, so they have to hire other workers and quickly. And that's one reason why quits are up. And you could see this one industry kind of skewing all the results. What's your response to that?
Yeah, so I think in the other data points, such as quits, you actually saw a more broad-based kind of increase in stabilization. You're right that on the job openings data, leisure and hospitality was a key driver of that. When you look at the other elements of the report, what you see is total separations did pick up. So it does look like they're losing jobs. The quits rate did actually pick up for leisure and hospitality meaningfully, so that could reflect some decline in labor supply. Hiring is picking up substantially alongside of that, so it does look like they were able to actually fill those jobs in May so far. And I think it's just a really interesting early read on what a negative shock to labor supply could do to the labor market, because the quits rate's higher, job openings unemployed is higher, is signaling higher wage growth in the leisure and hospitality sector. So it could be actually a tightening of the labor market. Now, could you get a sequencing issue here where payrolls are actually a little bit weaker before you get that tightness? I think that's always possible.
Building on Lisa's question, the individuals now potentially going for those jobs in leisure and hospitality, are they asking for more wages?
So we don't really see it yet, and again, that kind of might be a timing issue, but what I'm looking at is the quits rate leading wage growth. The quits rate has picked up substantially in leisure and hospitality. It's actually picked up a little bit in construction as well. It is giving you a forward-looking signal that wage growth could be picking up in those sectors as we look ahead.
Just got some data from Challenger. I always wonder, what am I meant to do with this data? This is the headline for you. First half 25 job cuts, 744,308, the most since the first half of 2020. Sounds absolutely dreadful. First half of 20 was dreadful. What is this data? What does it mean to you?
So I was looking at the same data. If you actually look at the data for June, it declined substantially. It's actually down year over year. And so the pickup in job cut announcements that they have was primarily 3 or 4 months ago. And it was primarily government-driven. So they highlighted several 100,000 of government job losses. I think as you look through broader data, there's just really no evidence that layoffs have picked up. Initial jobless claims are actually quite low. The JOLTS layoff data yesterday actually declined. The Challenger data today was actually lower than it was a year ago. But it's a labor market that is defined by low hiring and low firing. And so, if you have a job, you're doing quite well. If you don't have a job, it's difficult to find one.
Final word on the Federal Reserve. You put out a piece in the past few weeks, thought it was fantastic. The difference between division and uncertainty at the Federal Reserve. What's the importance between the two? What's the difference? And where do you settle, you and the team?
Yeah, the thing is, you look at the Fed's forecasts, they talk a lot about uncertainty, and no doubt there's a lot of uncertainty, but the modal difference between a lot of them is not all that large. What is very different is that if you look at the two most likely outcomes for Fed officials this year, it's 0 cuts or 2 cuts. It's a 50 basis point difference, and we're only 6 months out from that outcome. It's very unusual that you have that degree of division, and you've just very clearly seen that in the Fed speak as well. You've had some Fed officials coming out talking about a July cut as early as July, while most other Fed officials, including the chair, I think has indicated that seems unlikely.
Chairman also herding cats down in Washington. He's not the only one. Matt Lazzari there of Deutsche Bank. Matt, thank you, sir.
Thank you.
Appreciate it. Thank you, sir. More data later on this morning. Keep repeating it. 8:15 Eastern Time, the ADP Employment Report. With an update on stories elsewhere with your Bloomberg Brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. French President Emmanuel Macron and Russian leader Vladimir Putin had their first phone call yesterday since 2022. In their discussions, they agreed to coordinate their approach on Iran. Sources telling us here at Bloomberg it's part of an effort to forge a common approach on Iran between the permanent members of the UN Security Council. Meanwhile, Paramount Global has reached a settlement with President Trump. This over a lawsuit alleging election interference by CBS News when it showed 2 different versions of a 60 Minutes interview with Kamala Harris, airing just before the election. Paramount agreed to pay $16 million, including plaintiff's fees. Trump had sought damages of $20 billion. And in sports, top-ranked tennis stars are having a rough go in the first round of play at Wimbledon. The tournament saw a record-tying 23 seeded players eliminated in the first round, including women's number 2 Coco Gauff. That comes just weeks after she won the French Open. Number 1 seeds Aryna Sabalenka and Carlos Alcaraz both take the court later today. That's your Bloomberg Brief. John?
Sabalenka is absolutely awesome. Thank you, Yahara. More from Yahara in the next hour. Up next on the program, the president taking on Chair Powell.
No inflation. Our country is strong. Our interest rate should be 3 points lower. But we have a moron at the head of the Fed. He's a moron.
That conversation up next with Joe Livornia, the counselor to Treasury Secretary Scott Bessent from New York. This is Bloomberg.
case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equity futures just about positive. We're up 0.1%. Not much price action this morning on the equity side. The Russell doing nicely. The small caps up by 0.7%. Under surveillance this morning, the president once again taking on Chair Powell.
No inflation. Our country is strong. Our interest rate should be 3 points lower. If our interest rate was 3 points lower, that's almost $1 trillion in cost. And it's done just by the signing of a pen. But we have a moron at the head of the Fed. He's a moron.
Here's the latest this morning. President Trump piling the pressure back on Fed Chair Jay Powell to cut interest rates. Chairman Powell snapping back.
We went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time.
Joining us now to discuss this and a whole lot more on the U.S. economy, Joe Livornia, the counselor to Treasury Secretary Scott Bessent. Joe, welcome back to the program, sir. The words of Chairman Powell, we didn't react at all. We're simply taking some time. Why is his position not a convincing one?
Let me say this, Jonathan. The fact is that the tariffs, whether you look at the PC, the CPI import prices, all those metrics actually decelerated. So not only did the consensus get it wrong, where inflation didn't pick up, it actually fell. The chair likes to look at the supercore metric, which is services excluding rents and energy, and that's actually fallen about a point plus, since last September when the Fed first began cutting. So many metrics show that inflation pressures are actually decelerating, which obviously means that real interest rates are expanding, meaning they're rising. So I don't want to be critical. The Fed per se, the president's done has given his own spiel and made some very powerful arguments why rates should fall. But there's no question the inflation news has been much better than anybody thought. And tariffs, as we've said many times, as Secretary Bessent has said, are not inflationary. Tariffs are, if they happen, and they haven't impacted the domestic economy, it's a price level adjustment.
But Joe, we're still waiting for the tariff rates, and the president is saying he's not moving the date next week. When I speak to individuals that are sitting on the other side of the U.S. Trade Representative or Treasury Secretary Scott Bessent, they say that they have been told and given assurances by this administration that if they are in good faith negotiations, that deadline can be pushed back. Is that your understanding?
Well, that's what Secretary Bessent has said, and Secretary Lutnick recently said about 10 to 12 countries are very close to a deal. There's about another 20 that are also negotiating in good faith, and Secretary Bessent recently highlighted that many deals could be done by Labor Day. So there's a lot of good progress. But on the tariffs, I just want to be clear, the consensus view among almost everybody was that tariffs would start to impact the data in March. It didn't happen in March, it didn't happen in April, it didn't happen in May, and we know there's a big number associated with the revenue. We could have $300 billion of tariff revenue this year that's coming in. So we've got this huge increase in revenue. So they're there. And the reason the tariffs aren't impacting things in large part is because foreign producers, as we learned from the first Trump administration, are absorbing it in their margin.
When it comes to Japan specifically, the president said that they're spoiled, and he talked about the fact that maybe he's going to go for a 35% rate. On a Liberation Day, they only had a 24% rate. Do you see any country going above April 2nd rates?
The president is a very tough negotiator, and I'm confident that whatever winds up happening with Japan and everyone else is going to be in the U.S. best interest. This is a negotiation, and again, as Secretary Bessent's highlighted many times, as long as countries are negotiating in good faith, that's a positive, and then we take it from there. But I do expect, as the Secretary said, there are deals forthcoming.
The market response to all of this has been pretty much a shrug. We've seen new record highs for equity markets, except the dollar has continued to weaken and weaken to some of the lowest levels, weakest levels going back to 2022. At what point is that a concern for you?
Lisa, first of all, a lot of that weakness is vis-a-vis the euro. If you look at the Fed's real broad trade-weighted index, which is about 26 countries, as opposed to, I believe, the Bloomberg DXY, I think is only 6 or 7. It's a small sample. If you look at the real broad, trade-weighted index, it's close to one of the highest readings we've had since the Plaza Accord back in 1985. So this notion that somehow there's the selling of U.S. assets, that the dollar is weak, some major financial outlets have talked about that. It's completely incorrect. It's not consistent with the tick data. It's not inconsistent with the recent BIS report, which talked about some of the selling of assets in April. That brief period of selling was actually due to hedging. It wasn't due to lack of demand for U.S. assets. So the dollar is the reserve currency. The dollar will be strong. The dollar is still strong. And I think those concerns are greatly misplaced.
There is, though, this building worry about monetizing the debt in order to pay for some of this bill, this idea that you want to run the economy hot, this emphasis on growth in order to offset the increase in the deficit at the same time that you're counting on inflation not to pick up. How do you sort of square that, the idea that in the past when you run the economy hot, it typically has come along with inflation, especially at times where there have been disruptions to supply chains?
Yeah, well, in the first Trump administration, growth was nearly 3%. It actually hit 3.4% in the fourth quarter year on year in 2019, and inflation didn't pick up. The one big beautiful bill, which is making its way through the Congress, as you know, increases supply side incentives to get growth to remain robust through capital investment and capital deepening. Inflation will continue to fall. The inflation news has been great, and that's the thing. If you look at the bond market, the equity markets rallied on a second half boom, and bond market yields are down substantially from where they were earlier in the year. So the capital markets are really responding very positively to what they expect on the inflation side. Break-even inflation's been stable. So again, this notion somehow that inflation's going to pick up, that growth leads to faster inflation, this Phillips curve mindset, if you will, completely wrong. We saw under the first Trump administration, as I said, very strong growth and low inflation. And by the way, I just want to add, the big problem with the CBO's numbers is they're only assuming 1.8% GDP growth. That's woefully too low. If we have a 17.2% revenue share of GDP, which is basically where we are now, and we grow at a much more plausible and realistic 3%, that gives you something like almost an extra $1 trillion in revenue relative to what CBO was forecasting back in January. And that's not even adding the revenues that are coming from the tariffs. So this notion that these deficits are going to stay super high and grow, completely, I think, incorrect, because it's based on a fallacious assumption of sub 2% growth, which is very, very weak.
That's the argument the president's making this morning so far. Joe, just before you go, how much outreach is happening at the Treasury and from the White House just to communicate to the public that the payrolls report might change just the numbers, what's considered good, given the amount of immigration we had over the last several years, and what's considered good now is going to change, that maybe 100K now is actually a decent number when 100K a few years ago with mass migration crossing the southern border wasn't a good number. Do we have to reframe what's good and what's bad in this labor market?
No, I don't. No, I mean, as you know, the payroll numbers are subject to significant revision. The income numbers are actually been very good. If you look at the compensation figures in real terms, they're accelerating. If you look at blue-collar wages, average hourly earnings for non-supervisory production workers are up almost 2%. The first 5 months of President Trump's term, that's the best 5 months effectively to start a new administration ever, going back 60 years. So the income trends are great. The unemployment rate's going to stay low. And again, if we get the one big beautiful bill, Jonathan, that is going to get rid of a lot of the uncertainty that's there in the market, where companies can make capital plans accordingly. They're not worrying about tax rates going up. Because again, if you look at small businesses, the pass-through businesses, the Chapter S companies, they're paying the marginal rate. So when they get some certainty on that and they create 40% of the jobs, you're going to see the labor markets tighten and growth accelerate in the second half of the year.
Hey, Joe, appreciate your time, as always. Joe Livorni there, the Counselor to Treasury Secretary Scott Bessent on the labor market there. No worries about the jobs market into Thursday payrolls.
No, it's hot, and that's essentially where we're at, and it gets revised. So if it's a bad number, look for the revision.
Could make a good Fed speech. Hey?
What you think? Oh, is that where you're going to go with this? All right. Okay, well, you can keep...
Chairman Livornia?
Yeah, who else?
How's that work? You know, it might work out. Up next, the third hour of Bloomberg Surveillance, just around the corner.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business. The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
There's broad participation in the market, but the magnitude of the upside is just in a handful of names.
It's been a very nuanced move in terms of inequity.
There still is a tremendous amount of demand for bonds. There's a tremendous amount of demand for treasuries.
We're uncomfortable with where multiples are, which is why we think that you're likely to have a pullback.
The risks are known, and once the market kind of knows risk, they can deal with it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now. This hour, a focus on jobs data. The ADP employment report about 15 minutes away. The scores going into it look like this. Equity futures totally unchanged on the S&P 500, down some 0.2% on the NASDAQ 100. Anticipating the big one tomorrow morning, 8:30 Eastern Time. The payrolls report just around a corner. A lot of economists coming on this program in the past few days or so, preparing us for a low number. Peter Cheer of Academy, there is a real risk the data is very disappointing.
And part of the disappointment stems from the fact that we're just in a low churn market with less dynamism and fewer workers, particularly because of the decline in immigration. This is what I think you were getting at, and I thought it was a really good question to Joe Lavorgna about how does the administration message this at a time when potentially a low number doesn't mean that everything is falling off a cliff. That said, it raises a question about whether the new market is less dynamic, less forgiving, and potentially more fragile to any potential shock.
Kevin Hassett, the NEC director, come on down. We need to have that conversation, don't we?
I think it's important. What do you say if it's a really low number? Do you still say that this is a robust economy? Do you say this is reason for Fed Chair Jay Powell to cut? Do you say it's fake numbers and will get revised, or all of the above and see what sticks?
Most of the people that have come on the program have said, yes, I expect a low number, but the low number isn't a bad one, and look elsewhere. Look at the unemployment rate. That you could have something like 100K, but unemployment wouldn't actually climb.
And if that's the case, is it okay? Is this fine? Is this good enough to suggest that, yes, this is a solid labor market that doesn't cause the Fed to have to cut rates in July, but it isn't necessarily a red alarm in terms of equity. So you're in this Goldilocks scenario where you could still get a rate cut in September without the risk-off kind of move that you could get in equities.
Can you look through weakness because we're getting clarity elsewhere? That's the theme of the next hour or so. Clarity on two issues, on taxes, on trade, down in Washington.
Speaker McCarthy, the former Speaker of the House, who knows a lot about how procedurally this is all going to work, says the only thing holding up this passing through the House of Representatives is the weather in Washington, D.C. And he seems pretty optimistic that the Freedom Caucus will fold once again, like they did in 2017 as well, when it comes to this bill, and that maybe this gets on the president's desk July 4th. After that interview with Joe Lavorgna, the tariff situation seems to be a bit muddled. You have the Treasury Secretary Joe Lavorgna coming out and saying, well, we have to Memorial Day. The president made it very clear yesterday there will be no extensions, and we have till only next week, July 9th. But classic Trump, escalate to de-escalate, maximalist approach at the very end of a negotiation to try to get the most concessions when it comes to these trading partners.
Policy matters to markets, not just in the US. Check out the UK this morning. Seen in Parliament a little bit earlier when the Prime Minister did not back his Chancellor 100%. And what looked like a tear rolling down the cheek of Chancellor Reeves. Well, a tear rolling down the cheek of this bond market in the UK at the moment. Gilts are down, yields are higher by 15 basis points. Sterling, with that move, is weaker, not stronger. That's the kind of toxic mix that you don't like to see in developed markets.
Losing credibility, which is a real question, especially as some of the key people in the seats that are in charge of these policies are undermined on some sort of level.
Yields up, sterling weaker. More on that story later this hour. Coming up this hour, Jim Carrot of Morgan Stanley, with stocks holding a 3-day winning streak. Dan Ives of Wedbush on the feud between Trump and Musk. And Kathy Borshantic of Nationwide, with Fed Chair Jay Powell very much in wait-and-see mode. We begin this hour with stocks steady ahead of payrolls due out tomorrow. Jim Carrot of Morgan Stanley writing, we think data slogs through, which provides room for upside earnings surprises in the second half of the year. Jim joins us now for more. Jim, good morning.
Good morning.
You've said it. This is the half where maybe clarity replaces uncertainty. A reason to be confident?
I think it is. Look, you know, there's a lot of things that are going on. I will agree with the fact that I do think that the data is going to weaken. I think that the growth rate is going to fall. I think the unemployment rate is going to rise. And I believe that inflation due to tariff pricing is going to rise. This is exactly what the Fed's forecast is. My next question is, will that matter to markets? The markets know this, right? We know this, that this is happening. Yet when you look at equity prices continuing to push through, it begs the question, what else is going on? And what I think what else is going on is that the markets are looking through this as a soft patch, and they're thinking about 2026. They're thinking about this tax budget, one big beautiful bill, as they call it, and that adding some potential stimulus, CapEx, spending, AI, productivity, all these various things. All I'm saying is that I think that people are underappreciating the risk to the upside. And you've heard me say that many times before on your show, the risk to the upside.
You're not alone. We've talked about a pain trade being the equity market moving up and to the right and not down. I want to understand, just to stress test the theory a little bit, what happens if we get a big downside surprise tomorrow on payrolls? How forgiving are we in this market?
So I think the Fed has primed the pump to cut interest rates, right? I don't think it's coming in July, but it could come as early as September. If you start to see some weakening in the labor report, I don't think that Powell will be able to resist that. I think he's going to have to cut. And he could start cutting aggressively. And this is what I call like the upside convexity to prices. So we're in a situation right now where we do think that as we move into 2026, things could get better in terms of earnings growth rates, and what have you. On top of that, you could have yields going down. Remember, yields are supposed to be going up because of this budget, not down, and they've been relatively stable. So we have to bring this all into the mix and really think about this diagnostically and come to a conclusion.
Which really kind of leaves the bond market in the same place that it's been, at least in the long end, for quite a while, which is the reason why people have gleaned some comfort from that. On the earnings side, though, there's been huge disagreement on the street about how much the tariffs are going to cause a hit to profit margins. Yeah. You take the other side of what the Goldman Sachs analysts recently put out, which is it's going to be a bigger hit than we can currently expect. Why?
Well, I think that we have to understand that we have to look at the run rate of this. So if we look at first quarter earnings, the delivery of first quarter earnings were relatively strong. Normally, analysts would take up their earnings estimates based on that, but they didn't. They took them down because you got into April, you got into all the tariff-related activity. Second quarter earnings are probably going to be relatively decent, right? We'd likely have good second quarter GDP growth, just a recovery from the first quarter. So the way that we estimate it, it's not that the earnings rate is going to necessarily accelerate higher. It's just that the estimates from many analysts are relatively depressed to where they otherwise ordinarily would be, given the recent run in earnings that we've had. In other words, in a normal year, you would have seen earnings upgrades by about $10 to $12 right now. And what you've seen is a decline in earnings by about $10. So essentially, what I'm saying is that the markets could have the earnings number underestimated relative to the run rate of what it would be by about $10. So I think there's some cushion here.
How much is that story divorced from the underlying economy? How much is it focused in artificial intelligence and tech companies and banks that have gotten deregulated?
Look, CapEx is the mother's milk, right? You know, so who's investing right now? Large cap tech. Who's been doing really well over the past couple of months? Large cap tech. What we have to recognize is that in this deficit, or in this budget bill, I should say, and I know it does add to the deficit, but in this budget bill that's coming through, productivity is a large portion of this, and the removal of a lot of government oversight and shifting government-sponsored growth into more private sector-sponsored growth is a real positive. It's really hard. You can't go on your Bloomberg terminal and say, how is deregulation doing today, up or down? Like, what's the tick? We can't track that day to day. There's a number of policies. Look at the ESLR, the Enhanced Supplementary Leverage Ratio, right? This has dropped Treasury yields by quite a bit. This is a meaningful impact. Do people talk about within this budget plan all of the deregulation that's going to be codified, that's going to remove some of the government, I guess, actions, on companies? That's the positive. That's what companies are seeing. That's why they're investing. That's why they're spending. That's why they're doing the CapEx. We've complained in the past they have no visibility. Once this budget passes, I think they're going to have visibility. I'm not a cheerleader for the Trump administration. I am just calling balls and strikes here. This is the way that I see this unraveling, and I believe it's underappreciated by markets.
That's one part of the policy uncertainty, though. What about companies dealing with the headwind of tariffs?
So this is a good question, right? So essentially, how much have the tariffs been absorbed by either the consumer or by companies and profit margins, right? So ultimately, the way that we think about it is that tariffs are a tax on profit margins. We've seen that. And essentially what the markets have said is once we know what the tariff rate is going to be, and we are closer to certainty on this, right? We're getting closer to knowing exactly what the effective rate is. That what markets are saying is that this is a one-off price shock. Companies will absorb this. It's definitely a hit. This is why 2025 looks a little bit worrisome. But then going into 2026, it's like you clean the slate and you start to move forward because it's not an ongoing thing. But markets are forward-looking. So if we think this in 2026, it's going to get priced in 2025 at some point. It might not be until the fourth quarter, really, but I think this is what's going on.
It speaks to what's happening elsewhere. Goldman bringing in their first rate cut call for the Federal Reserve. Jan Hatzius and the team going to September from December. That seems to be the direction of travel at the moment.
Because I don't necessarily see the price shock continuing past that. I just wonder if you have a market that's being, or an economy rather, that's being run hot, can we get the growth that President Trump is talking about without the inflation that would accompany it, without consumers accepting higher prices and companies getting used to that and kind of liking it and doing it again?
He certainly thinks we can get that growth sometime soon. I hope we can. Jim, this was a clinic as always, sir. Thank you.
Thank you.
Appreciate it. Jim Caron of Morgan Stanley. If you're following events in the UK, it's difficult to keep up at the moment. We'll get you an update in just a moment, but I'll bring you the price action just briefly. Sterling was a whole lot weaker. It's bouncing back just a touch and then rolled over again. We're negative by 0.7%. The move in the bond market, yields higher on a 10-year maturity by some 14 basis points. With an update on that and more, let's get to your Bloomberg brief with Yahira. Hey, Yahira.
Exactly, John. Well, that's because UK Chancellor of the Exchequer, Rachel Reeves, visibly upset during this morning's PMQs, as you can see in this video. That's because when Prime Minister Keir Starmer was asked to repeat his pledge that Reeves would be in her post at the next general election, he avoided answering. Starmer's office adding later that Reeves has not offered her resignation, the UK Treasury saying any tears were due to a personal matter. Meanwhile, here, President Trump's tax and spending bill is back in the House. After barely passing the Senate, Vice President J.D. Vance had to cast the tie-breaking vote. Now it faces another uphill battle by House Republicans who don't like some of the changes. Moderates are worried about Medicaid cuts, and fiscal hawks are vowing to oppose it over its impact on the deficit. Meanwhile, Manhattan home sales surged in the second quarter to the most in almost 2 years. According to appraiser Miller Samuel and brokerage Douglas Elliman, more than 3,000 co-op and condo purchases closed in the quarter. That's a 17% jump from a year earlier. Cash buyers, of course, drove the Manhattan sales. That's your Bloomberg Brief. John?
Pre-Mamdani, right? Yahira, thank you. Is this pre-Mamdani?
You think that people are just going to wholesale leave and go to Florida? You try the Florida weather right
I'm saying a lot of rich people have been wholesaling leaving down to Florida.
The governor of New York admitted it. She was asked, "You're going to raise taxes?" And she says, and they said, "Even on the rich." And she goes, "I can't lose anyone else to Palm Beach." That
We're
was
going to
her
have this debate all through 2025, through to November. Up next on the program, the morning calls, plus Dan Ives of Wedbush on the feud between the president and Elon Musk. That's coming up next, plus some jobs data in America, the ADP report just around the corner.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
What do you do with the ADP report? It's the question we ask every single month. Equities right now just about unchanged on the S&P. This number, anything but unchanged. It looks a little different this morning. Mike McKee joins us for more. Good morning, Mike.
Looks a little bad this morning, and it certainly will get Wall Street's attention and maybe a little bit at the Fed, but as Lisa will tell us, it doesn't really matter because they're not very accurate in forecasting the NFP numbers on Friday. But as you say, a negative 33,000 print, that's the first one in some time. We'll look that up. Right now, it looks like a lot of that comes from the service providing sector, down 66,000 jobs. Professional and business services lost 56,000, they say. Education and healthcare services lost 52,000. Now remember, education and healthcare is the big number every month, the one that adds the most jobs in the payrolls report. The construction jobs were up 9,000. Everybody's been watching that to see if there's an immigration impact. And manufacturing jobs, they say, up 15,000. Remember yesterday we got that ISM manufacturing number that hit a multi-month low of just 45. The other number that they put out is the pay changes for job stayers, 4.4% in last month. Job changers up 6.8%. Those are not numbers that, if they were accurate, the Fed would be particularly happy about. So overall, a really negative number, and we'll see what we get tomorrow.
But Mike, I think this is the stress test at the moment. If you get a number like that one, and this one's terrible, but if we get something, let's say 50K tomorrow, is a low number, a weak number, and we're going to be having this conversation. Is it about immigration or is it about the economy? Mike, how do you get a read on that at the moment?
Well, what you're going to have to do tomorrow, John, is first look to the unemployment rate, because that's what the Fed is going to look to as a sign that the economy is slowing. And then we have to deconstruct that. Is it because the labor force fell? Is it because there was a particular amount of hiring or a particular high number of people going into unemployment? So that's where I would look first tomorrow to get a feel for it. Now, obviously, if we get a very small number, 50,000, as you mentioned, that would set off a lot of alarm bells on Wall Street, but I'm not sure it would set up the Fed to do anything in July. All the focus there would turn to the inflation number on July 15th, and if they got a combination of falling inflation and bad jobs numbers, then it might put it on the table.
Mike McKee, thank you, sir. Mike McKee on this jobs report for tomorrow, and the ADP number we just got just moments ago. More from Mike in just a moment. So if you're just tuning in, negative 33,000 on ADP. Now, typically we don't care about ADP, and maybe this morning most of you still don't care about ADP, but the conversation we're going to have around this number is very similar to the conversation we'll have going into payrolls tomorrow morning. Is that low number the consequence of tightening up immigration, and it's not something to worry about, or is it a reflection of a weaker economy? That debate is just going to be ongoing through today, into tomorrow, and maybe at the other side as well.
And the real issue, as Mike was talking about, is the Fed is sort of on the sidelines regardless because of the confusion around this number. You can't identify it necessarily as being bad per se, even though that is the first negative number going back at least 2 years. So even for ADP, it is unusual to see this type of number.
Even for?
Well, I mean, you can discredit them all you want, but there are certain trends to look
most
at.
months.
And yeah, but right now the market's not, because 2-year yields fell from the high high that they were, almost 5 basis points on the heels of this.
Down 2 basis points on a session now to 375. That's some of the price action. Let's get you some morning calls. First off, Wolf downgrading Stellantis to underperform, citing risks from North America to this year and next year's earnings. Our second call from Goldman, initiating coverage of Deckers with a sell, citing a less attractive risk reward than competitors in the short term. That stock is down 1/3%. And your third and final call from Jefferies, upgrading Apple to hold, expecting pull-in demand from tariffs to drive earnings growth. Let's stick with the Mag 7. Tesla shares under pressure as the feud between President Trump and Elon Musk reignites.
We might have to put Doge on Elon. You know what Doge is? Doge is the monster that might have to go back and eat Elon. Wouldn't that be terrible? He gets a lot of subsidies.
Dan Ives of Wedbush writing the following: we believe this situation will settle, and at the end of the day, Musk needs Trump and Trump needs Musk. Dan joins us now for more. Good morning, sir. What's that last line about? What does that mean? Why do they need each other?
I mean, Trump needs Musk, just given Republican support. And ultimately, at the end of the day, in terms of autonomous AI, Musk is obviously going to be one of the leaders in this country. So I think when it comes to the AI race and autonomous, Trump does need Musk, as well as obviously Republican support. Musk needs Trump because fundamentally, you just cannot have this BFF situation now go to an enemy in the White House, especially when it comes to the autonomous roadmap, which is so important, not just for Musk, but of course for Tesla.
Let's talk about one of the businesses, and it's the business that falls under your coverage. It is Tesla. The subsidies are going to be phased out, they're going away. This was anticipated. What does it mean for the business in the meantime?
Look, I think that was anticipated. I think the bigger focus here is it's all about autonomous. I mean, when I look at 90% of the future value is ultimately going to be about autonomous robotics, and that's the future. It all comes down to when Trump came in, the goal was that this is going to be a fast-tracked, autonomous roadmap in terms of a framework from a federal perspective. So I think the worry, and the reason the stock was down yesterday, is that still there? In other words, does this situation start to settle? I believe it does. But the last thing, as a Tesla shareholder or a Tesla bull, that you want to see is Musk just putting himself more and more into that political theater, because there's really no upside from a Tesla perspective.
Don't you have to push back your expectation for any kind of regulatory framework that would be beneficial to Tesla in the near term to get the robotaxi program off the ground?
Yeah, it's a great question. Look, it all comes down to China, because look, this is an arms race going on. So Trump knows Waymo. Look, Waymo has obviously been very successful, but still 5 cities, very expensive cars. The horse in the race is going to be Tesla in terms of to scale with what China is doing. So it comes down to, in this U.S.-China battle, Tesla, just like NVIDIA, is actually a chip on the table. So I do believe that you will actually continue to see this fast track despite this sort of back and forth that we're seeing. Look, it's essentially like a junior high situation, right? They went from BFFs, now sort of enemies, but I view this as something where for Tesla, it's going to be a near-term overhang that I do think dissipates.
Are investors pushing back more? Because this has been a faith-based stock for a long time. Suddenly we're getting deliveries that still don't matter, at least in your eyes or a lot of people's eyes, if you believe this really is a robo-taxi story. At what point do people say, really? We're not seeing it with the shares down 25% so far this year, and frankly, they're in an industry that is under a secular challenge at a time of a lot of potential headwinds and a lot of political drama.
Yeah, look, I think sentiment is as negative as I've seen it in a few years relative to especially the actual business. Deliveries, you'll get one this morning that's definitely going to be a pretty soft delivery number. But it does come down to, in terms of the proven situation, does robotaxi scale? I believe it's 2025 season next year. You start to see that in terms of geofence within Austin, that expands. They go to more and more cities. Then investors are like, okay, as an AI play, when you think about physical AI, NVIDIA and Tesla, to me, are the best pure play physical AI plays. But it's proving it. And now just like if you look at Apple and Tesla, they're in the penalty box from an investor. If you think about even Mag 7, where on the other side, of course, you got Godfather of AI Jensen, you got Redmond and Nadella, you have Meta and Zuck. So there's a separation going on. Apple and Tesla is right here in that penalty box.
I want to come back to when you said at the start, to John's opening line about how you think Musk and Trump both need each other. Doesn't Musk need Trump a lot more?
Of course. I mean, we've said that. It goes back
So why
to
does
the
he
whole-
keep poking the bear? Does that not unnerve investors?
Of course it does. Look, the last thing you want to see is him poking the bear. It comes down to, like, there's nothing good going to come down in terms of him doing it. And I think that's why every time he does that, it just creates this cycle in terms of Trump, going back. And it's the last thing you want to see, because as we've talked about a lot on the show, obviously took huge steps back from Doge, Trump administration, took on a life of its own, but now he keeps shots across the bow. It's not what you want to see.
Just quickly before you go, quick word on Apple. Good or bad news, they're looking beyond Cupertino for the AI solution.
It's clock struck midnight. It's what they need to do.
You happy with that?
You cannot stay on the treadmill. Look, we were at WWDC. You almost fell asleep during that event, right? I mean, the point is that this is the time in the AI arms race. You can't be on the backwards treadmill time warp back to 2017, where every other big tech company is going forward. Perplexity, Anthropic, they need to do something big.
I don't believe you ever sleep, but I'm pleased you admitted it. Whenever I see those events, I often fall asleep, don't you?
Yeah, but you don't fall asleep if your shirt is bright enough to keep you awake.
No, everyone else doesn't fall asleep.
I love it. Yeah, exactly.
Room lights up.
Just start to wonder about the paper clips. Love the paper clips.
Yeah, exactly. And I look, I mean, the point is, I think Farrow is someone like at an F1 race, he could pull this.
Oh, you think so?
Okay, all right. Thank you, sir.
Not sure about that.
Dan Ice of Wedbush. Up next on the program, Kathy Bosjancic of Nationwide on a big downside surprise on the ADP report going into payrolls tomorrow, plus Danny Berger with your morning movers and some optimism for that name right there, Apple. The stock is higher by 1.2%. Futures elsewhere just turning a little bit negative in the bond market. Yields down, as Lisa pointed out, the front end of the curve will lower by 2 or 3 basis points to 3.75.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Let's just say this. If tomorrow at 8:30 Eastern Time there is a negative sign before the number, equities won't look like this. Equity futures on the S&P, totally unchanged. On the NASDAQ 100, we're down by 0.2%. Moments ago, 15 minutes ago, negative 33,000 on the ADP report. Now, this is a report that typically people don't put much weight on. They question the credibility of it. Not a great read-through for payrolls tomorrow, but an interesting conversation, nevertheless, in the bond market, with yields down a single basis point, 376. Is it immigration? Is it the economy? Or is it just ADP?
Which is really the reason why you're not seeing as big of a reaction as you would be seeing, as you said, if this were the numbers tomorrow. Look, it's the first negative number since March of 2023 at a time when you're seeing a shift in the composition of where jobs are being gained and where jobs are being lost. And Mike McKee did a great job of highlighting how in the goods-producing sectors you're seeing job gains. In the services sectors, you're seeing job losses. This doesn't cohere with the JOLTS data. This doesn't cohere with a whole host of other things. And it does raise a question about a one-time shock from immigration, but still something to watch.
Something to think about. Yeah. Got a message from a Bloomberg subscriber. Always say far smarter than me. Smartest audience in the world. Turned around and said, is this the future? The AI economy? Where the output data is pretty decent, but the jobs data is not great.
This is my fear, and that's why we keep saying the economy is not the stock market is not the economy. You ask Jeetu Patel of Cisco, who is it going to be good for? Is it going to be good for profits, or is it going to be good for humans? He was saying both. How long does it take to get there? And right now, are we going to see the equity market continue to diverge from a labor market that's kind of churning under a lot of change?
Too much doom. We're done. All right, That was enough of that. If you're just waking up this morning, good morning.
It's
Tell
great.
you what, we'll save that for another day. Not good stuff. 1 hour away from the cash open. Let's get you some morning movers with Danny Berger. Hey, Danny.
Hey, John, we have to kick it off with Centene again because we're at the lows of the morning for the pre-market session for this health insurer company. Completely scrapped its guidance for this year, saying that it was looking across states and it appears that the amount that they usually get compensated in order to take on more sick patients will be less than they had assumed, a hit of $1.8 billion. So it and a lot of other health insurers following this morning losses now nearing some 31% in the session. We also have some sell-side upgrades this morning, one of them being to Apple. By Jefferies, shares are up 1.3%. The key to the upgrade is China, saying that it looks like sales are going to be looking better for the quarter thanks to very targeted discounts. At the same time, though, the analysts there are still warning on things like falling behind on AI and the tariff disruption to Apple. The final upgrade comes from KeyBank to Cava, the fast casual Mediterranean restaurant, saying that it really is in its own league. It has its own category in terms of fast casual Mediterranean, that it apparently will do to Mediterranean food what Chipotle did to Mexican food. I'm not sure whether that's a good thing for the world, but they say that's a good thing for Cava shares, up 2.6%, John.
Danny, you share your thoughts. Thank you. Appreciate it. Danny Berger with the latest there. Let's share Lisa's thoughts with you right now. Lisa, this bond market, not in the US, in the UK, we're looking at a 20 basis point move at the long end of the curve. Sterling's weaker, bad mix for the UK, that is.
Taking pain politically in the form of some sort of fiscal restraint doesn't do well politically. It does well in the bond market. When you raise questions about how much you are committed to those types of budgets, those types of plans, you see a fierce reaction, certainly in the UK. You haven't seen it as much in the United States, but it really goes to the credibility of the key people in place and the ability to cut spending in any kind of real way at a time of not that fast growth.
Policy volatility. Yeah. Once again, questioning the credibility of the British government this morning in financial markets with bonds lower, yields higher, and a pound weaker. Cable 136.39, negative on the day by 0.8%. That's the UK. Let's focus on the US. Let's get back to those job numbers. Is this going to be a test for Chairman Powell in the not too distant future? Numbers out just moments ago from ADP in the negative. Down, a big downside surprise on ADP, negative 33,000. The estimate was positive 98. With more, let's get Mike McKee For a whole lot more, Mike McKee on this, the data tomorrow, and the chairman of the Federal Reserve.
Well, I don't think we got a lot of additional news from Jay Powell yesterday. He basically repeated what he and others at the Fed have been saying for some time, that they need more information. And of course, next week we get the reciprocal tariffs. Then there are national security tariffs to come, et cetera. So they haven't got enough to go on in terms of deciding whether or not they can cut rates. Now, if we get a really bad payrolls number tomorrow, it will certainly raise questions in the markets, if not at the Fed. We're not expecting that. We are expecting a slowdown. 110,000 jobs is what the consensus forecast is at the moment, unless people incorporate this ADP into their forecasts. And we see 100,000 as the whisper number. Now, ADP private jobs minus 33,000 this month. The survey week for jobless claims was 246,000, which is basically where it had been for about 4 weeks before that. So no hints from there. But yesterday, the ISM manufacturing jobs number came in at 45, suggesting big job losses there. And that's not what ADP found. They found a gain in a significant gain in manufacturing jobs. So it does raise some questions about ADP. We'll see who turns out to be right. Now, you mentioned, Lisa, that this was the worst ADP number since March of 2023. At that time, ADP reported a loss of 53,000 jobs. But non-farm payrolls were reported the next day at 236,000. Now, that sounds like a huge miss for ADP and a really bad job. But look, we now have March non-farm payrolls revised down to just 85,000. The Fed won't have any revisions. They'll have what the number is tomorrow. But it just goes to show you that ADP might have a hint in it, but maybe not immediately.
It's called the random number generator for a reason, Mike. Michael McKee, thank you, sir. More from Mike through today and tomorrow. ADP, negative 33. Joining us now for more, Kathy Borchansik of Nationwide. Kathy, got to get your thoughts on that ADP report. When people call you later and say, Kathy, negative 33, that sounds absolutely awful. What do you say back to them?
Yeah, good morning, John. Well, I would caveat, just as you have, that month to month, ADP is not a good indicator of non-farm payrolls. Over time, though, the two series do move together. They capture the trends in the labor market. But I don't expect a negative print. And you never know, right? I mean, you're forecasting minor changes in a labor force that's 140 million. So certainly you could get a negative print, but most likely we see a slowdown in payroll growth. And we think that's not just, for tomorrow's number, but over the next couple months, we see this gradual slowdown. And you were talking about the churn. There's a lot of churn going on, a lot of things hitting the economy, tariffs, immigration changes, but it doesn't indicate to us that we're falling off a cliff.
And Kathy, just sit on the slowdown, the step down. We've gone from saying jobs growth is going to be something like 200K. to jobs growth is going to be something like 150, and now a lot of economists coming on the program saying, get ready for 100, maybe get ready for 50 to 75. And then the conversation we have is, okay, is that a reflection of immigration or a weak economy? Kathy, which one is it?
It's both, I think. I think it's a reflection of both, and I think the tariffs and the uncertainty around that is really kind of paralyzing businesses. You see that did come through in ADP, and you see that in all of the anecdotal surveys to ISM and Beige Book, things like that, that businesses are just holding on right now. They're not really hiring new workers, they're not replacing them, but they're also not engaging in mass layoffs. And that, I think that's a critical difference. If the economy is really hitting a hard stop, layoffs would increase. You don't see that in jobless claims, and we're not going to likely see that tomorrow. But just the slowing of hiring is critical and can slow down the pace. So I would agree that we're poised to, at some point get down to 50, 75,000. I think that's the low point. And we're looking for GDP growth to average about 1% in the second half of the year. So it's a meaningful slowdown, but not, again, you're not hitting a hard stop.
We got jolts yesterday, which completely flies in the face of the ADP report that we just got. To John's point about a random number generator, I feel like everything right now is a bit of a random number generator. How do you square the idea of a still robust job openings figure that came in much better than expected, and a quits rate that went up, which is a good trend, meaning people feel like they have the capacity to quit and then get another job, with a negative ADP report and potentially really low payrolls report tomorrow.
It is hard to square those two. I mean, one thing I would say is the JOLTS lagged by a month, but more importantly, I think JOLTS is a bit of an outlier right now. It may be because survey responses are getting quite low there on that survey. But I think it does sort of balance. If people are really quite negative looking at ADP, it gives you a little bit of that balance of, again, labor markets slowing, the churn is happening, but we're not seeing companies get extremely pessimistic. They're just waiting and seeing, just like the Federal Reserve doesn't quite know what to make of the impact of tariffs on inflation versus growth. And I think companies are doing the same thing, and they're just in this holding pattern. I do think the peak uncertainty is behind us on tariffs. It does look like there's going to be some trade deals, some resolution. It's not going to be, uncertainty is not going to be removed completely, but I think the fact that going forward, it should lessen, that should help loosen things a little bit.
You know, just to add to the noise and the confusion, ISM manufacturing came out yesterday, and the employment component actually came in below where people expected. So if you thought the goods sector was somehow the one creating jobs, which we saw in the ADP number, that was called into question by the ISM manufacturing number. Have you ever seen such a time of messy numbers that don't lead to any obvious conclusions?
It ranks up there. You know, it is quite messy. I would say that all of these measures we would use, sometimes you look at a 3-month moving average or trend. You can never, you can put all of these into your model for non-farm payrolls, but you know, any given month you can have some divergence. And I think, you know, that's what we're seeing here. And remember, ISM is a diffusion index. So I wait to see the non-farm payrolls. That's like the final arbiter for the month. But as John pointed out, and you've been talking about, there's also downward revision. So we need to watch those. They tend to be pro-cyclical. So my sense is, you know, the labor market is slowing. You're seeing also, last month we saw discouraged workers increase. And that's been increasing over the last few months. So that's also a sign that, yeah, there is some weakening in the labor market. And I think the question is the degree of that. And I look for the establishment, the payroll data, to be the final, you know, arbiter.
Kathy, remind me, what's your number for tomorrow? What do you expect?
We have 105,000, so not too far from consensus, or we're in between the consensus and whisper number, I guess, at this point. We could see the unemployment rate move a little higher. Remember, it was held down last time because people dropped out of the labor force. That's that discouraged worker effect. That wasn't a great mix. So we could see the unemployment rate move a little bit higher.
Kathy, thank you. Kathy Bodjanczyk there of Nationwide. Ahead of payrolls tomorrow, the estimate in our survey as the economist guesses come together. Stress guesses, educated guesses. Am I doing enough to dress that up?
You're doing a great job.
Keep digging. 110,000 is the estimate in our survey. The previous number, 139. Now, the following quote, just because I read it doesn't mean I'm endorsing it. This is from a Bloomberg subscriber. The following: rates are not rallying on ADP. Rates don't believe the story. Stocks are unchanged, but stocks are dumb. Now, you could probably guess they're in fixed income, but that's the view of the market right now.
Stocks are dumb, did they say?
You imagine that's going to be a rates trader, right?
Well, of course that's a rates trader, but I just, no one's responding to anything. I mean, if there's a little bit of a sell-off in stocks, you could say stocks are looking elsewhere. I mean,
diplomatically.
Yes, okay.
When are you the one to turn to diplomacy?
I love bonds.
Say what you think.
I love bonds.
There you go.
Right now, the difficulty is, typically, it's a balance sheet point with bonds. You understand the input in, you understand the input out, you understand some sort of measure of risk. Now you don't. You don't understand because of the deficit and questions around inflation. So it becomes the same Rorschach test that stocks do. So it's getting less perfect in the math world, and it's frustrating.
The bond yield's getting dragged higher at the moment at the long end of the curve, up by 7 basis points. The epicenter for some of this, not actually down in Washington, D.C., seeing a sell-off in the gilt market as we test the credibility of the British government. Yields are much, much higher across the curve in the UK, particularly at the long end. With an update on that and a whole lot more with some of your top stories in your Bloomberg Brief, here is Yahira. Hey, Yahira.
Hi, John. We start with some local news. New York Port Authority is closed due to a multi-bus accident. Because of that, New Jersey Transit bus service traveling to and from Port Authority is being rerouted, and bus tickets and passes are being cross-honored by NJ Transit Rail and PATH. The New York Fire Department said 14 people are currently being treated for non-life-threatening injuries. Meanwhile, Wall Street banks boosting their dividends after passing this year's Fed stress tests. The annual review showing all examined banks would maintain enough capital to withstand a hypothetical economic downturn. The Fed made the stress test easier to pass by softening some requirements and plans to make further changes to reduce volatility. And Foxconn has asked hundreds of Chinese engineers and technicians to return home from its iPhone factories in India. Sources telling us here at Bloomberg that the move began 2 months ago and more than 300 workers have left. It marks a setback for Apple's manufacturing push in India. That's your Bloomberg Brief. John?
Yahara, thank you. It must be quiet on Wall Street this morning. I'm hearing from all of you. Get back to work. Barry Knapp says this. Remember my quote, bond traders are always negative because the best they can ever get is par.
Okay, that is just nasty. First of all, they get their money back, and also they have math, and also
You're their lawyer?
you start talking about potentially going out and buying at a discount, especially if there's a lot of fear elsewhere, or belief in euphoria.
Barry's an equity guy, in case you didn't guess. All right. Up next on the program, setting you up for the day ahead. Plus, we'll catch up with Tony Rodriguez of Nuveen on the potential impact of President Trump's tax bill on this bond market. Live from New York, this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Equities negative by 0.1% on the S&P. On the Nasdaq, we're down by around about 1/3 of 1%. Some economic data behind us and a lot still ahead of us. As we count you down to the opening bell, your trading diary is shaping up as follows. On Thursday, U.S. trade balance and another round of jobless claims, plus the big one. It's payrolls Thursday. It's not payrolls Friday, ahead of the market holiday on Friday for the July 4th holiday. It is still a self-imposed deadline for the president's self-imposed deadline to pass his tax bill and his spending bill. And then a sneak peek of next week, another deadline, another self-imposed deadline. The president's tariff deadline is just around the corner. As that big, beautiful bill, it's a bit of resistance in the House ahead of the Friday deadline. We need to get you an update. Tyler Kendall joins us now from Washington with more. Tyler, where are we? How many holdouts are there? And what is the lesson from the Senate for some of the individuals in the House maybe thinking of standing up and saying, I don't like this?
Yeah, hey, John. Well, if we look at the holdouts that we had seen in the Senate, perhaps some of the most vocal were those fiscal hawks like Ron Johnson and Rick Scott. Ultimately, they ended up voting for this bill, which could signal to their House counterparts, those members in the House Freedom Caucus, that at the moment there doesn't really seem to be momentum to make those sort of changes that would require this bill to be kicked back to the Senate. I will say that we did hear from at least one Senator, Lisa Murkowski, yesterday, who voted for the bill, but did say that she would welcome if the House ultimately put this into conference and made additional changes. Now, we could get some sort of indication here, actually, within the next 10 minutes on how this day could develop, because at 9 a.m. Eastern, the House is going to convene, and they're going to debate on voting on what's known as the rule. Now, this is not the vote on final passage. It's a procedural motion, but I pointed out because if the rule fails, that could spell big trouble for Republicans, because essentially it would mean that some of these House lawmakers are digging in and trying to get more compromises. If the rule passes, then they can proceed to debate, and ultimately later on today, that final vote. That's what we're going to be looking for, because it could really shape the trajectory of this bill in the House. John, House Speaker Mike Johnson, as you well know, can only afford to lose 3 votes, and at the moment we're seeing reports that President Trump could be meeting with some of those holdouts, including members of the House Freedom Caucus.
Tyler Kendall with the latest down in Washington. Tyler, thank you. Here's the view on Wall Street at the moment. Here's a quote from Tony Rodriguez of Nuveen. Congress has moved forward with its budget bill, with the House's proposal including more front-loaded easing than previously expected. This has put upward pressure on yields. Tony joins us now for more. Tony, good morning.
Good morning.
Felt like the bond market was ignoring this for quite a while. Is it paying attention again?
Well, we think it will. Right now, it's battling between the risk of some negative data, right? We saw it with the ADP report, for example. So we still think fixed income is going to be a good hedge if we get that downturn. So there's some buying kind of for that purpose. But longer term, we think it's the fiscal deficits which are going to continue to push the term premium up, and you should see a steep curve.
Is that a US story or a global one? Because also this morning, we're looking at yields in the UK rise by double digits, 15 basis point move on 10s, on 30s close to 20. Is this a global story?
Completely. We've seen term premium rise in almost all developed markets, right, over the last, call it 6 the U.S. all with fiscal expansion. So the bond market is going to have a lot of supply to digest, and we think that's going to mean kind of some difficulty. We don't expect kind of these 20, 30 basis point moves to happen necessarily in the U.S. like we're seeing right now in the U.K., but we do think you could see some upward pressure unless you start to see weakness in the economy.
The market hasn't been clear on exactly whether it would accept rate cuts in the U.S. in response to weakening data as something that isn't necessarily a negative for longer-term inflation expectations. It won't necessarily cause inflation to surge. Do you push back against that? Do you think that rate cuts in this type of environment will just fuel the long end and lead yields that much higher?
I think right now they would, because the data has been so resilient. So I think that the cuts really can't happen unless you get actual hard data that begins to fall in line with the soft data that we've seen, where there's been quite a bit of weakness. So I think that the Fed being patient until they're more confident you'll see that hard data, that's what's going to drive them. So the employment report tomorrow, right? If we see, say, a 0.2 increase, if we see a sub 100,000 job and certainly a negative jobs number, that would start to create the narrative of weak, hard data that would allow the Fed to cut rates, and those cuts wouldn't necessarily be viewed as inflationary because they're in response to the weaker, hard data.
I just wonder at what point do we get weaker, hard data and actually higher long-term yields, because essentially this would increase the deficit, would it not? And it would actually challenge any kind of fiscal response to any kind of downturn. And I talk about that on a global stage. Isn't that the case?
Yeah, absolutely. We think a steeper curve is going to be the story. I think it'll be, if we get that weakness, I think it'll be around Fed cuts. We think that we're going to get 2 cuts either way, because right now there is enough of a slowdown. We're thinking 1% growth. It's if you see a recessionary environment where you really get into trouble around the Fed having to respond, but there being no fiscal capacity to do anything. So that's when you really, I think, will get a much steeper curve with more aggressive front-end drops. But we don't think that means 30-year at 6%, 10-year at 6%. We just think you'll see 10-year at 4.5%, 30-year above 5%. So higher than where we are today if you get that kind of scenario. But right now our view is that you're not going to get the recession, so you won't get very aggressive cuts. You'll get some modest cuts. That leaves the long end of the curve kind of right now around maybe fair value. So 4.25 is what we thought for year end. So we're kind of ahead of the game right now. So we're not expecting any further drop from here for the balance of the year.
That is the ultimate fear, that bonds don't do what they're meant to do. And that for me has always been the difference between what is DM and what is EM. I've always considered EM anything whereby you get bad news and the bonds sell off. In DM, when you get bad news, the bonds rally. And if we're talking about, if you're worried about deficits now, wait until a recession. If we're talking about that, hitting bonds the wrong way, that's a world we're not used to in developed markets.
And that's a world that the United Kingdom right now is flirting with. And it raises the question about whether this is the road to travel, especially if you have a budget that is dependent on growth. What happens if you don't get that to the deficit and then the response in the bond market?
Too gloomy. Okay, let me finish on this quote
You keep
here.
saying it's not going to be gloomy.
I wish I could actually say who this was from, but I can't. Okay, here's the quote. Stock investors ignore data. This is why they keep piling into stocks with valuations in the top 10 decile, while economic outlook is not great at all. The bond guys are all as seen in the UK. It's another bond guy out there, all right? There is virtually no stimulus in the BBB. It is a path to a BBB rating. That's the line from bond investors this morning.
I got this really sophisticated response. Stock traders are morons.
Is that the message you got?
Yeah.
Okay. So fixed income's board this morning, right? And that's why they're messaging us.
Evidently,
Okay.
yeah, sorry. I
Not
don't
many people
endorse that.
defended stock
I don't
investors.
endorse that.
All right. From New York City, I've got to go. We're up against the break. This is Bloomberg.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea.
We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Futures are down as we await the House on the big, beautiful bill. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now. Bye.
Coming up, President Trump's tax bill faces Republican resistance in the House with a vote scheduled for today. And we have a major setback for Apple as well. Foxconn tells hundreds of Chinese workers to return home from its iPhone factories in India. Plus, bank stocks keep ripping higher as Wall Street's largest lenders unleash big payouts. They're up 36%, Katie, from the lows in April.
Yeah, absolutely. Really leading that rebound. Today, you can see there's more green on the screen, less so. But this is in path to record highs, which we've seen this week. That's after the big banks passed the Fed stress test last week. And now you have JP Morgan, Goldman, and Bank of America, just some of the firms that are boosting their dividends for investors. Broadly expected, but more good news for these big banks, even though Bank of America not quite cooperating this morning.
Not today, but it's done well since the lows. We await Tesla's quarterly sales. Analysts estimating just under 390,000 cars sold. The shares during the period rose 23%. You can see they're actually up in the pre-market, Katie.
Well, Matt, you mentioned that we're waiting for the House, and to that point, President Trump's big, beautiful tax bill is headed to the House today. A little bit of a power outage there, but that is one day after it squeaked through the Senate. Now, the bill's passage is not certain, with some Republicans threatening to sink it. The president, however, not worried.
Well, I just heard that about the Senate, and the bill just passed, and it tells you there's something for everyone. I mean, it's a great bill. There is something for everyone. And I think it's going to go very nicely in the House. Actually, I think it will be easier in the House than it was in the Senate.
Joining us now is Bloomberg's Washington correspondent, Tyler Kendall. So, Tyler, what are the chances this passes today so it can be on President Trump's desk by the 4th of July? Will we have to go through an all-nighter again?
Yeah, hey, Matt. Well, it by no means is a done deal, but we could actually get an indication on the timeline shortly because the House is about to gavel in as we're speaking at 9 a.m. Eastern. And to give you a sense of sort of how this is going to play out, lawmakers are about to vote on something known as the rule. And now this is just a procedural matter. This doesn't mean that it is a vote on the finalized passage. But why it is important is because if the rule fails, that spells big trouble for Republicans as well as House Speaker Mike Johnson. So we have to keep in mind here that there's still, when it comes to the divisions, ultimately we're seeing the same sort of factions play out that we saw in the Senate. There is broad agreement when it comes to the tax cuts in this plan, but not necessarily the spending cuts. And that's where this really could face some opposition. You had those House Freedom Caucus members upset that the Senate didn't make good on what they say were promises for additional cuts. But then I would also point you, Matt and Katie, to some of these more moderate members in the House that are concerned about the changes to Medicaid. Not necessarily the tightening of the work requirements, but lowering the Medicaid provider tax, which could mean less federal matching funds for those states that did expand coverage under the Affordable Care Act.
Absolutely. Big news there for the insurers. But let's talk a little bit about renewables, because you're seeing a lot of movement in those stocks after that solar and wind excise tax was stripped from the Senate version. Do we think that's going to survive in the House?
So that is perhaps one of the biggest sticking points here for some of those members of the House Freedom Caucus who are also unhappy about an additional agreement that was struck in the Senate plan that actually makes the phase out of some of these clean energy tax credits when it comes to wind and solar a little more lenient. How the Senate plan is currently written, it would allow developers that begin their project within 1 month of this bill going into law to be eligible for those tax credits, instead of how the House version had written it so that the project would have had been done, completed, and in service by 2027. This could be a place where we could see some sort of compromise, but also at the moment, this bill is not designed to be tweaked. It's not supposed to ping pong between the House and Senate. If they wanted to make a tangible change like this, that would take more time and it would really threaten that July 4th timeline.
All right, Tyler, great reporting as always. We'll be checking in with you throughout the day. That is Bloomberg's Tyler Kendall. And at this time tomorrow, we'll be speaking with the chair of the White House's Council of Economic Advisors, Stephen Miron, following that June jobs report. But let's get to some breaking news here coming from Tesla, which just released its quarterly sales data, which came in below estimates at 384,000. You can see that the shares are jumping, though. It wasn't a huge miss. The estimate had been for a hair over 389,000. Let's break down this data with Bloomberg Tech co-host Ed Ludlow. Tesla shares up 7%.
Right.
Can we call this better than feared?
It's difficult to say, right? You can either look at it and say that the number for the second quarter on the delivery side in particular, 384,122, even though it's a miss against consensus, were those consensus estimates stale? And is the number, the actual number, better than the lowest projections? You know, we knew it would be a tough period. Elon Musk had talked about this blowback in the April earnings call, right, due to his affiliation with the administration, particularly impacting markets like Europe. But at the end of the day, 384,122 vehicles is a lot of EVs. Production numbers seem strong. They don't seem to have any production interruption. The issue is, and it always is the case, sometimes they break from this habit. The press release that gives us the numbers has no commentary in it. There's no sort of detail on the why in this picture, but clearly the market likes it. Maybe as I'm talking to you, I'm thinking about it, maybe the estimates were a bit stale.
It is certainly a lot of EVs when you compare it, for example, Ed, to Ford's EV sales in the second quarter. They sold, I think, just over 16,000. But it certainly isn't, and I make this point often, but it certainly isn't a lot of EVs for a $1 trillion company. In fact, if you add up every single car company in the world, all of them, they don't reach even close to Tesla's market cap. So,
right.
How much does this really matter if you're really buying the stock for humanoid robots and, you know, self-driving taxis?
Two things. The first, did you see the data out of China overnight from the Chinese Passenger Car Association? So for the first time this year, deliveries from the Shanghai plant grew, albeit less than 1%. But there is a sort of signal change in that market. You're exactly right that the thesis of many long-term Tesla bulls is actually this bread and butter business doesn't matter. If you believe in the future that vehicles will drive themselves, they will be autonomous in the form of a proprietary robo-taxi ride-hailing service, what does it matter in the sort of marginal beat or miss in the near term on Tesla delivering cars to consumers? But at the end of the day, there is also a large portion of the global investor base that says, well, we just track you based on your fundamentals in the here and now, and you need to generate revenue and cash flow operationally from selling vehicles. So it's kind of like, depends on how long-term your thesis is and what you picture Tesla as. But increasingly right, and this is when earnings will come back into play, the software component in the more near-term full self-driving as a supervised driver assistance tool, and then the rollout and growth of the robotaxi service will come more into play. Still, they got to make money somehow.
Right. Well, the shares are up now 6% on a global run rate of just 1.5 million cars sold. So it's far fewer than any Tesla bull would have hoped if you'd asked last year or the year before or the year before. In any case, and I'm sure you're going to continue to cover this hard on your program. Ed Ludlow is, of course, the co-host of Bloomberg Tech. His show kicks off at 11 a.m. Eastern, and this will be one of the stories they are leaning into. One of the stories we're leaning into is the Wall Street banks, the biggest of them boosting their dividends after easily passing the Fed's stress tests. Banks have been on a winning streak lately, outpacing the S&P over the past 2 weeks, trading near all-time highs. The third best group financials are in the S&P. The KBX, as I was telling Katie, up 36% since its lows in April. Catherine Doherty is here, finance reporter who covers this stuff. So they've been on a tear.
They have, yes. And the results from yesterday, these announcements about the dividend payments, this is just going to potentially continue that tear, at least for the foreseeable future. You never know. We have earnings coming up in a week or so, and that's going to be another indication of how the rest of the year shapes out. But so far, these hikes that they announced yesterday, they beat expectations across the board. Everyone was expecting dividend payments to come out regardless, but it's just how much are they paying out. Goldman with a 33% jump compared to last year. They went from $3 to $4. I think that is what I'm seeing from a lot of analyst notes highlighted today. Wells Fargo behind them, they're up 13%. And then you have really across the board, all the banks speaking very positively about their capital. And this is in light of the new Fed stress test that we're going to see. We're going to get more detail as the year goes on in terms of how they're changing the calculation. But overall, the expectation is that calculation is going to be lighter for the banks, and it's going to give them the ability to not just raise their dividend payments, but announce more share buyback programs. We had JP Morgan, Morgan Stanley. Those were the two banks that they gave sparse detail, but they did announce buybacks. All the other banks, we didn't see the same level of detail or announcements, but across the board, I'm expecting that the market is going to be digesting this in a very positive manner today.
Right, and you make a good point that this is the typical cadence, okay? The big banks, they pass the stress test, then they raise dividends, but we certainly beat expectations when it comes to the magnitude of those increases. You mentioned that earnings kicks off in a couple weeks' time. Just quickly walk us through the expectations here, because there's a lot of positive momentum around these financials right now.
So we had Jefferies report last week. They kind of are they set the tone for the industry, and everyone is looking for two things. Both, is investment banking coming back? Are we seeing deals, at least the momentum or the talk of deals, is it going to pick up for the rest of the year, or has the uncertainty kept companies on the sidelines? So Jefferies kind of gave some indications that no, they're not seeing their results necessarily beat expectations. However, they have left a pretty positive note for the rest of the year, just based on conversations that they're having with their own clients. On the trading side, because volumes have been up, that has benefited specific desks. So equities have been primarily benefited from this volatility, but in fixed income, especially when you look at the debt and equity underwriting, that's going to be impacted in a different way. So those are on the Wall Street, really core banking side of things. But what remains to be seen is the consumer. So in 2 weeks' time, we're going to have some of the biggest consumer banks start to report, and we're always listening for their language around the health of the consumer. Is spending up? Really, for the last couple of months and the last couple of quarters, they have said spending remains strong, the consumer remains strong, but is that going to continue? Is inflation going to come through in any of the numbers? Or are we going to just continue as the strength has been?
Right, a lot to keep tabs on. Catherine Doherty with the latest on the big banks. Sure, we'll see her when they start to report. But let's get to some breaking news that just crossed the terminal. This coming from Microsoft, cutting another 9,000 workers in a second wave of major layoffs. That should affect less than 4% of the company's total workforce, according to the company. But remember, we had an earlier round of layoffs from Microsoft in May that hit about 6,000 people. You take a look at shares, not reacting too much, but certainly a trend developing when it comes to Microsoft.
Yeah, we know that the CEO, Satya Nadella, has said AI is writing 30% of Microsoft's code. maybe this is one of the results of that. Coming up, Apple's biggest iPhone assembler pulls Chinese factory workers out of India. We'll explain why that matters for Apple's growth in Asia. This is Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Africa has been silent in telling those global stories. And that's where we have a mind full of stories that we can mine and mine and mine for years to come. And I think investors realize that, and they understand that there's real potential. And as I said earlier, independent films are making a huge comeback. So you're looking at your $5 million movies, your $6 million movies, and this film fund that we're setting up is looking at films, we're looking at financing films between a budget of $2 million to $8 million. So we truly believe that we will get a return on investment, and it's about managing expectations. We're not saying to investors we're going to go out there and we're going to sort of start making films that are going to bring you $1 billion return on investment. That's not to say there can't be outliers. The world has seen this happen time and time again.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get a look at high interest now. Look at what's making headlines around the world. Paramount reached a $16 million settlement with President Trump over a lawsuit that alleged election interference by CBS News when it showed two different versions of a 60 Minutes interview with then Vice President Kamala Harris. Bottom line, they're going to pay President Trump $16 million, and the market likes that. Health insurer Centene pulled its 2025 guidance thanks to a $1.8 billion shortfall in expected risk-adjusted revenue associated with the Affordable Care Act, Obamacare. The news comes as Congress is poised to slash funding to Medicaid and Obamacare markets, and that's where they get a ton of their revenue. As a result, they lose a third of their value in the pre-market. Foxconn has asked hundreds of Chinese engineers and technicians to return home from its iPhone factories in India. The move is a major blow to Apple's manufacturing push in the South Asian country and may slow down the training of local workforce. You can see those shares are up, but I still want to dig deeper into this news because I think it makes a lot of difference to Apple's strategy, to where Tim Cook wants to make these things. We've got Mandeep Singh, the head of technology analysis for Bloomberg Intelligence, here on set. Mandeep, I saw this story and I thought that's got to be a wrench in Tim Cook's plans, right? Because he was initially moving production from China to India, and now what? The Chinese are making their workers come home?
And India, I mean, to be fair, you know, is already a 20% maker of iPhone units. So the units are being assembled there. But at the same time, President Trump has clearly expressed his unhappiness about assembling a lot of those phones that they ship to the US and India. And look, from that perspective, I do think, they have a much bigger challenge on hand in terms of where they expand outside of these two locations, because they're not going to be able to bring that to the US anytime soon. So, we are talking about how they have to partner with the LLM providers to fix the AI side. That is still fixable quickly. The supply chain side is the harder one, and there is no quick fix. And Foxconn retrenching is probably a sign that they may have to pay a tariff on a lot of those iPhones that are assembled in China.
Well, at least for today, it seems like shares are moving higher because they got an upgrade, actually, from Jefferies. It feels like a while since we've seen one of those for Apple. Jefferies seeing some upside to the third quarter. But, Mandeep, we got some breaking news just before you stepped onto set. This coming from Microsoft that basically they're going to cut 9,000 workers in a second wave of major layoffs. It seems like Microsoft is really looking to reduce headcount here.
And look, I think Coding Assistant as a tool is now pretty well established. It's the fastest growing software category this year. And every software maker has launched, even Google just launched their own Coding Assistant. So what they're saying is, we are not only launching the product, we are actually changing the workflows within our organization. And companies like Microsoft and Google, they have the highest R&D in spend. So a lot of those coders, I think, are going through this restructuring right now in terms of how their jobs are changing.
All right, well, the stock, it's down in today's pre-market, but it's still up 150% over the last 5 years, up 16% this year. Obviously, they're leading by example here.
Yeah, really outperforming year to date. I do think it's interesting to compare and contrast Microsoft, which clearly wants to cut workers, wants to reduce its headcount, to Meta, for example, which is hiring quite aggressively right now.
And spending almost $3 billion in those 10 acqui-hires. We're talking about pretty much a sizable acquisition here in terms of bringing those 10 marquee researchers on board. And look, that's how I think every big player is going to think about, how can I get the smartest people in AI to come and join the team, and probably offset that with some of the legacy kind of products they had and the spend that they were making on those products.
But these are different scales, right?
Yes.
Facebook hiring 10 people.
Yeah.
Microsoft firing 15,000,
Might cost
including
as
both
much
waves.
as the
that's a good point. That's a good point.
9,000.
Microsoft still has 228,000 employees, right?
Yeah.
And Facebook has 75,000. Mandeep, great to have you on set as usual. Mandeep Singh of Bloomberg Intelligence runs our technology analysis in that vertical. Coming up yesterday, the Momentum Index had its second worst day of the year, and the stock exuberance gauge is near levels seen during bubbles. So we're going to talk about the risk of a burst with Mona Mahajan of Edward Jones. This is Open Interest.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back. And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachian Zahran, and this is Bloomberg.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Open Interest. Bubble talk is picking up on Wall Street with stocks hovering at all-time highs. A measure of irrational exuberance calculated by Barclays is reaching levels that have signaled extreme frothiness in the past. It's currently near levels seen in the 90s before the dot-com bubble and the 2021 meme stock craze. Joining us now is Edward Jones, head of investment strategy, Mona Mahajan. And Mona, we're sitting near all-time highs, so things are pretty good. But would you say they're irrationally good right now?
Yeah, you know, look, I think markets went through a period of a near 20% correction, so keep that in mind. So we're recovering from that. In fact, on a year-to-date basis, the S&P is up only 4 to 5%. So I wouldn't say yet we're experiencing any period of irrational exuberance, but we do know when momentum begins, it tends to continue, and markets can overshoot to the upside and can also overshoot to the downside on the reverse side. Now, what we'd say more broadly is, look, we've experienced one pretty severe correction already this year, but in a year with elevated uncertainty, we know 2 to 3 corrections are the norm. So could we expect more volatility in the months ahead, especially as we're digesting more trade and tariff headlines, a tax bill, potentially softer economic growth? Absolutely, we think there is a possibility of that, but we don't yet see any sign of a complete reversal or bear market or bubble burst on the horizon.
How much does time matter? I mean, this time now, at the beginning of July, the beginning of the second quarter, we got every institution piling into stocks at the end of the last quarter. So can people wait now and see, like the Fed, for what's going to happen?
Yeah, you know, I think investors and the Fed are in many cases, a wait-and-see mode. You know, everyone is waiting to see where the tariff rates end up across all our trading partners, and, of course, what the impact is on inflation and the labor market. Thus far, pretty benign impact. And so if that continues, we continue to see the Fed on pace to cut rates. Now, whether that happens very gradually or more aggressively, that remains to be seen. But yes, wait and see does seem to be the mantra.
Okay, hey, Mona, you're going to stick with us through the opening bell. We're looking at futures unchanged.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is As more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading on this Wednesday, the second day of the quarter. You can see nothing going on in futures, right? S&P futures are down, but really little change. NASDAQ futures off a little bit more. The small caps are showing some gains. We're really waiting for this big, beautiful bill and then for a wrap up to some of the deals that we hopefully get by July 9th when President Trump says tariffs just go back to Liberation Day levels, or they'll send letters to every country and tell them what they owe. This is, so the Pan Mass Challenge, ringing the opening bell at the New York Stock Exchange. Apparently, according to AI, it's the single biggest athletic fundraiser in the country, but I had never heard of it until today. A lot like Centene. State Street ringing the opening bell at the NASDAQ market site, and they have what I believe to be the biggest ETF in the entire world. I've got an expert right here.
One of the oldest, too. We're talking about SPY, State Street. They also just changed their name to State Street Investment Management. They were State Street Global Advisors coming into this week. Let's talk about Tesla shares, because quarterly sales were 385,000. Analysts had been estimating just under 390,000 sales. You can see shares up about 3.5% right now. Some good news for Tesla, Matt. I know that you're going to say that really relative to the valuation, that's not very many EVs, but still shareholders seem to like it.
Yeah. I mean, I say that. Maybe I'll stop saying that.
No, keep saying it.
Say it all the time.
Speak your truth.
Microsoft is cutting 9,000 jobs in a second wave of major layoffs. The widespread cuts in its Xbox gaming division come as Nintendo Switch is apparently the biggest, well, it's not a console, but whatever it is, it's the biggest launch of a gaming device of all time. We're going to talk about something completely different now. We're back with Edward Jones, head of investment strategy, Mona Mahajan. And I wonder, when you look at this big, beautiful bill, Mona, are you able to pull out threads that are useful to your strategy? Do you see something in the legislation that pushes you to invest in, say, real estate and take money out of, say, insurers?
Yeah, you know, I'd say from a high level, and we're still going to parse through the details as they come out, but certainly in the near term, there is some fiscal stimulus that comes out of this bill, whether it's extending the Tax Cuts and Jobs Act, whether it's providing companies a faster deduction on CapEx spending. I think all of that is positive from a corporate perspective. And so near term, we think there is both fiscal stimulus and potentially monetary stimulus, as we talked about from the Fed, coming. That's a positive. Longer term, this clearly is a deficit-inducing, debt-inducing bill, and depending on what estimates you look at, the CBO projecting over $3 trillion over the next 10 years in added debt. That has implications for Treasury yields, especially if there are other competitors that come into the market. Although thus far, we still see the U.S. Treasury market as one of the most deep liquid markets in the world, still able to assume all of that added debt. But that picture could change over time, so we're watching that closely as well.
Well, that's where I want to go. I mean, you mentioned that when it comes to this bill, it could have implications for Treasury yields. But when it comes to conversations about the debt, the deficit, I always ask, is that investable right now? Can you place bets right now based on some of those issues that could eventually crop up in the long term?
Yeah, it's a great call out because look, over time, rising debt, what it does is crowd out spending from the government in productive areas like R&D and infrastructure, and that could put downward pressure on economic growth, and that does have implications for the market longer term. But what we see, of course, is in the U.S., it's a very innovative, productive economy. In fact, all of the Mag 7 housed here, et cetera. And thus far, economic growth and earnings growth has held up well despite rising levels of debt and deficit. And so if the U.S. economy can continue on that path, this is more of a yellow flag for now than a red flag. And so we continue to watch debt and deficit levels. We also continue to watch very carefully how economic growth, productivity, and importantly, earnings growth fare out in the years ahead.
If we get, or if volatility returns and the VIX, is back down to, I think, 17 or around there, which sectors offer the best relative safety or even upside? Where do you go right now if you want to hedge or diversify?
Yeah, we're still of the mindset that this kind of theme of making sure you're well diversified and broad across sectors is the right approach. We continue to like tech here, and we're equal weight most tech sectors. We're actually slightly overweight consumer discretionary, given we think a lot of the negative news is priced into that sector. We also like sectors like financials and healthcare. To some extent, financials, of course, not as exposed to the tariff noise and can do well in an area or era of deregulation. And certainly if we see extended tax cuts coming, or at least extension of the TCJA. Similarly, healthcare, we think, can do well if the economy is steady. And by the way, that the valuations there look fairly attractive as well. So broad across cyclical, defensive, and growth sectors, we think makes sense. U.S. large cap and mid cap, we think makes sense. And we still continue to like parts of the investment grade market, especially in that 7 to 10 year space.
I do want to talk about how the different asset classes are talking to each other right now. If you take a look at a year-to-date chart of the 10-year Treasury yield versus the S&P 500, for example, they were talking to each other for a while. But since, just in the past couple of weeks, you can see that break apart. Since about mid-May, you have 10-year Treasury yields heading lower. You have the S&P 500 heading higher. Maybe that's good news for some of those 60-40 portfolios. But Mona, what do you make of that? Is that a sustainable break?
Yeah, I think to some extent Treasury yields had moved pretty high pretty quickly earlier this year, especially when we got the equity market volatility and there was uncertainty on, the status of U.S. credit broadly, and that drove Treasury yields higher. We're seeing a little bit of a back off from that sentiment. I think that's what's keeping Treasury yields more contained, combined with, of course, a Fed that seems somewhat more inclined to cut rates over time. And so I think that's also helping keep Treasury yields contained as well. We do think Treasury yields are probably more range-bound than equities, so probably a 10-year in a 4.5% range makes sense. We could continue to see, testing of the upper end of that limit if the tax bill does have more deficit-inducing qualities. But from an equity perspective, we think markets, as they start to look forward to 2026, they do see both fiscal and monetary stimulus, a potential for the economy to re-accelerate and earnings growth to be double digits next year as well. And so we're starting to get a little bit more enthusiasm around what's coming in the year ahead, looking past maybe some near-term softness as well.
Well, but are we underpricing the risks heading into July 9th? I mean, that's the big, I guess, past the jobs number tomorrow. That must be the big day that the market's waiting for.
Yeah, July 9th had been being set up to be a tremendous catalyst for the market, but slowly we've been getting more and more news flow from the administration. Perhaps there will be an extension of the July 9th deadline. Some of the deals will be announced ahead of time. Perhaps we just set the rates, like you had mentioned earlier. And China, of course, is its own beast being negotiated outside of that July 9th deadline. And so perhaps some of the sting or tension of July 9th has been taken out of the market. But nonetheless, we do think that that will be an important date to watch in terms of what the broader trading partners receive in terms of tariff rates. And so While we don't think there may be a high volatility event, it will be an important date in terms of what the future of the economy looks like.
All right, Mona, got to leave it there. Great to get some time with you. That is Mona Mahajan from Edward Jones. Meanwhile, let's get a check on this market right now. We're about 8 minutes into the session, down slightly on the S&P 500. Let's break it down and pull apart what's gaining, what's losing, because you still have 191 names in the green right now. It's what you might want to see. Apple, Nvidia, Tesla, Broadcom, some of your biggest gainers to the upside. More than 300 names in the red, though, so let's go right there. Microsoft, as we mentioned, the breaking news that they plan to cut 9,000 jobs in a second wave of major layoffs. That's dragging down the index. Then you have Berkshire Hathaway and Centene. After that, you have Elevance and United Health. That's because Centene pulled their guidance. There's rising risks from upcoming changes to the Affordable Care Act. That's scary news for the entire group of insurers, and that's what you're going to see on the sector level as well. You have materials up at top, leading gains right now. Energy not too far behind. You go to the bottom, you have financials actually down a little bit on the day. They've been on a record run, might make sense. Then you take a look at healthcare, down 0.6%. Utilities down about 0.7%. Matt Miller.
All right, definitely interesting stuff. We're also focused in on Tesla's global sales. They fell 13% in the second quarter, setting the EV maker up for an annual drop. With regards to sales, shareholders don't care because nothing matters for this company. We'll talk about that with Aaron Keating, Cox Automotive Analyst, next. This is Bloomberg Open Interest.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning, and we start with Apple getting an upgrade at Jefferies. We haven't seen this in a while. The analyst over there sees upside in the third quarter. That's why you have shares up nearly 2% right now. Next up, we have Goldman Sachs starting coverage of Crocs and Deckers Outdoor with sell ratings. The analyst says that while the market is attractive, competition is getting intense. Goldman has the only negative rating on Crocs, which is down about 1.6%. Finally, we have Ross Stores getting an upgrade to buy over at Jefferies thanks to its wide valuation gap and the margin opportunity. Shares up about 1.6 as well. Matt.
All right, let's turn to autos because Tesla sales came in light at the top of the hour. But the shares are still up 3.25%. Joining us now is Aaron Keating, executive analyst at Cox Automotive. And Aaron, to be fair, Tesla shares had fallen for 6 days in a row, so a little bit of a bounce back here. But I'm more focused in on the sales, what looks like to me a sales problem. Weren't they supposed to be selling cars at an over 2 million annual run rate? This is like 1.5.
I mean, we know that Elon and Tesla themselves have a pretty big reputation for forecasting things that may not necessarily hit at the right time. But assuredly, Tesla's starting to look like any other automaker. I mean, we're seeing that they're having defection rates that are similar to other automakers. We're seeing that they're having cross-shopping rates. I mean, they've been in the market for quite some time, but they've got a lot of competition, a lot of really good competition in the market now. And so we're seeing the effect of that.
So what does Tesla need to do to boost sales? I mean, beyond the reputational risk, Aaron, when you look at the lineup of vehicles, with the exception of the Cybertruck, they're getting a little bit long in the tooth. There's a lot more, as you mentioned, competition, not yet from China in this country, but looks like that may come. Can they just rest on their laurels and say we're the most American car maker out there?
No, and you're right. They're long in the tooth. I mean, what I constantly like to remind people, especially in the U.S., we are a hardware business. People do care what their vehicles look like, how they make them feel, how they drive, et cetera, et cetera. We all know that Tesla has been a great product since it came out. They were certainly first to the board here with an all-electric vehicle. And yes, they have a bit of an advantage with most of their production and product and parts coming from the U.S., so the tariffs won't hit them as hard. But certainly they've been reliant and especially pushing on leasing lately. They've absolutely benefited from the EV credit, which we know may go away. And their product is older and they don't have much. So the problem is they don't have other areas of business that they can really lean into, like the Fords, like the GMs, and the big competitors that are coming in now on large SUVs, on trucks, which are, we know, are American favorites. So it's a challenge. I think, one, they do need to update the product. But two, they might find themselves in a pickle given that they don't really have the breadth and depth of car lineup that many of the other traditional automakers have.
Well, at least they have the Cybertruck now, which I see more and more of, Aaron. I won't ask you specifically about that.
You like it, right?
I do like the Cybertruck. Yeah. I like the look of it, but I don't think I would buy an EV. That's a different conversation. Aaron, I want to talk a little bit about brand damage. We touched on it, but I remember the doom and gloom cases from a couple months ago about what Elon Musk's involvement with the Trump administration was going to do to their reputation, and that could permanently sort of dent the perception of Tesla in a lot of these retail pockets. Aaron, do you think that some of those narratives were overblown, or is that a real serious risk for Tesla going forward?
Here's what I would say, and I came from a long history of doing marketing communications. In the U.S., we are sensitive to brands. We're sensitive to what they mean to us. We're sensitive to what the brands are saying out in the market. We certainly know that Elon Musk has been very central to the reputation of Tesla. And in addition, he really has never leaned on a marketing and public relations team with his brand in the U.S. And unfortunately, when you don't have those types of things to help you swing the narrative in a different direction, and you're solely relying on an executive to really drive the conversation around your brand, you are putting yourself at risk. Do I think that that's really the biggest problem they have? Again, I think that they're just starting to turn into a normal automaker that has to keep up with product, that has to be mindful of its competitors. And they're going to have to up their game in the market. But yes, certainly we might have seen a little bit of shift here and there in different markets around their brand, but I'm a little hesitant to call it out that that's what's driven most of their sales drop.
One of the tailwinds that Tesla has in this age of big tariffs is that they produce most of the cars they sell in the U.S. Well, most of the components even come from the U.S. They're sort of up there with Ford as one of the most American car makers that there is.
Sure.
Do you see price pressure on the other car makers, Aaron? I know we saw a modest gain, and I think the average price in the second quarter was about $49,000, like a 1% increase. But the new cars, the tariff-affected parts and cars are starting to hit lots, right? So are we going to see prices creep up and, you know, the SAR start to continue to drop from 17.6 to 15 and maybe even lower?
Sure. I mean, we're still keeping our baseline projections at 15.7 million. And I mean, there's a couple of things going on. We know that there's pent-up demand still. We have 7 million purchases that didn't happen during COVID. So we know that we still have people who need vehicles. We know there's price sensitivity. The new car market is largely driven by those couple of upper income quintiles, and the affordability issue isn't as high there. And so yes, while the average price is around $49,000, that is still an average and largely driven by very expensive, you know, six-figure SUVs and large vehicles, pickups, trucks, and things like that, which are very traditionally making up a big part of the new vehicle sales in the United States specifically. Yes, tailwinds are coming for Tesla in the terms of having more American-made product as well as Ford, but Honda's not too far behind, Toyota's not too far behind, and Toyota, Ford, GM, all of these brands have that brand depth again, where they can help to manage their profitability across their portfolio of vehicles. And so, yes, it might advantage Tesla a little bit, but at the end of the day, the segments that they compete in, they're still pretty competitive pricing across the board.
Yeah, it's just interesting to, again, meditate on the valuation and marry that with your comments that Tesla is facing real normal car company issues right now. Aaron, hope to speak again soon. That is Aaron Keating of Cox Automotive. Now, coming up, Figma sets the stage for one of the year's biggest IPOs. We'll bring you details on the debut that could come this month next. This is Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest, a check on stocks. Right now, we don't see a heck of a lot of movement. In fact, the S&P 500 is unchanged, just 22 minutes into this session. The NASDAQ putting up some gains. And if you look at some of the individual stocks that are moving, Tesla is gaining after putting out sales of, I think, 385,000. We were looking for, at the beginning of the year, like 500,000, right? So that's a big miss, really. Although, as Ed Ludlow points out, investors may have updated their expectations, like at 859. Apple right now up 2.5%, even though Foxconn is pulling Chinese workers out of India. This is really the big equity story of the day. And Katie makes fun of me because I had not heard of this insurer. They have 28 million clients. They were founded in 1984 in Milwaukee. I've brushed up on it, but they've lost more than a third of their value, Katie. Yeah. And Adobe right now down 3 2/3%. It tried to buy Figma for, I think, $20 billion a couple of years ago, and now Figma's going to go public.
Yeah, the one that got away for Adobe, Figma, setting the stage for what could turn out to be one of the year's biggest IPOs. The design software company, it filed yesterday, I believe, to list in the U.S. and could go public this month. For more, let's bring in Bloomberg tech reporter Brody Ford. Brody, great to see you. So give us the details here. What do we know so far about this filing?
What Figma does is it's software to design applications on your phone, on the computer, and it's kind of one of these hit pieces of software that has defined the category, kind of like a Zoom. And the question for them is, can they pivot? Can they expand to be more than just a design software? Can it be used by people across the office and become a kind of a true platform? The growth looks good. The numbers look good. It's all really clean, and investors are pretty excited about this. So I expect their reception to be pretty warm to this one.
What is, I mean, I see that they had revenue of $228 million in the quarter through March. So let's say $1 billion in revenue. Are they worth 20 times sales?
Yeah, I think the thing to remember about this kind of software is how sticky it is, right? I mean, if I design applications all day and all my templates are in there and our whole team is using it, we're going to keep paying that, right? I mean, Figma recently raised their prices and, people stuck with it. This is a kind of software that kind of maintains generally.
I have to say, it's interesting to see any IPO filing these days. It's also interesting to see one in July. Typically, it feels like companies maybe wait until after Labor Day to go back to the markets. Not in this case.
I think the trends are very good for them right now, and I think there is this question around AI disruption right now. I mean, Adobe is kind of the classic comparison to them in terms of kind of business, and investors are very worried right now that Adobe can be kind of replaced with these lightweight competitors that are all in on AI, and Figma certainly falls into that category. I mean, they announced in their filing that our margins are going to stay compressed because we're spending so much on implementing AI in our products to make sure we stay competitive.
Even if Adobe gets replaced, you won't be able to get them to stop billing you.
That's true.
It's been the bane of my existence.
Yeah.
Tech reporter Brody Ford, thanks so much for joining on this Figma story. Coming on the next hour, Joanne Feeney on fears of higher tariff levels on specific countries like Japan. Then we're going to talk real estate with Thor's Joe Sitt, and Hotel 101 CEO talks about her goal of being a top hotel operator in 101 countries by 2040. This is Open Interest.
get the debt down and the deficit down if we have these big tax cuts?
Well,
David, let me just say, I think the deficit is probably the most important issue today in terms of the long-term impact on the economy. And just to put this in perspective, in the first term, we had debt to GDP ratio of about 100%. And with the tax cuts and economic growth before COVID, we were growing the economy faster than we were growing the debt. So that ratio would have come down. And I think we were trying to get it down to 90 to 95. The big focus on the first term was military spending. We unfortunately had to increase non-military spending to get it through the House and Senate. But what really impacted us was COVID. And I think, as you know, firsthand, we had to spend a lot of money in COVID or we would have had a worldwide depression, not recession. I think the problem was, the first $2 trillion was well spent. The next $2 trillion we never should have spent. And then the Biden administration kept on spending. So, we have debt to GDP of close to 125% today. That's a gigantic problem. Secretary Bessent has talked about getting the deficit down from 6% to 3% of GDP. And that's got to be a major focus.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez.
The House will be in order.
Lawmakers in the House of Representatives in place to debate and then vote on the Senate's updated version of President Trump's big budget bill. Republican leaders are scrambling to win over GOP holdouts, concerned about changes that could increase the deficit and make deeper cuts to Medicaid. Correspondent Robert Costa.
Some House members, like Congressman Thomas Massie of Kentucky, are taking public stands against the legislation and winning some support. But for the most part, Republicans I'm speaking to in the Senate and the House, they say at the end of the day they need to stand by President Trump. He runs the party, the voters are with him, and they don't feel like they have a lot of leverage to get out there on a political limb.
An official tells CBS News members of the House Freedom Caucus and moderate Republicans are expected to visit the White House today to discuss the bill. Just in from Wisconsin, the state's Supreme Court liberal majority has struck down a 176-year-old abortion ban. Justices ruled it was superseded by newer regulations, including statutes that criminalize the procedure only after a fetus can survive outside the womb. The jury in Sean Combs' trial is back to deliberating after announcing a partial verdict. CBS's Jerika Duncan is at the courthouse in New York.
Yesterday afternoon, they told the judge they had come to a decision on sex trafficking and transportation to engage in prostitution charges. But the jury said it could not decide on the racketeering conspiracy charge because jurors had, quote, unpersuadable opinions.
Judge told them to keep trying on that last charge, which carries the possibility of life in prison. Australia has canceled Kanye West's visa.
The last straw for Australia was West's new song, Heil Hitler. Heil Hitler!
You're going to have a song and promote that sort of Nazism? We don't need that in Australia.
Australia's Home Affairs Minister, Tony Burke.
We have enough problems in this country already without deliberately importing bigotry.
West had been a long-time visitor to Australia. He has family there and married Australian architect Bianca Sensori in 2022. Michael Wallace, CBS News.
Just days before the 4th of July, huge explosions rocked a fireworks warehouse in Northern California's Yolo County, putting locals on edge.
All of a sudden, the whole house just started shaking, and then
You know, it shook again. We thought it was an earthquake.
Yeah, I was like really scared when it first happened.
Sparked flames that spread across 80 acres. Tesla sales fell 13% in the last 3 months. This is CBS News. A restaurant chain is finally syncing up with grocery store prices.
Waffle House is dropping a 50-cent per egg surcharge that it imposed 5 months ago when prices were soaring and there was a bird flu outbreak. The surcharge sent a strong signal over the winter. Some others followed suit. The Agriculture Department says egg prices have come down. They fell nearly 13% in April, and a dozen eggs now cost less than $3. In a social media post, Waffle House called it "Egg-cellent news" and said, "Thanks for understanding." Steve Cathan, CBS News.
The Princess of Wales returned to public duties today to discuss a subject many can relate to, her cancer journey. Speaking at a hospital in Essex, England, Kate Middleton explained to patients, staff, and visitors, "You put on a sort of brave, stoic face through treatment, and when it's done, I can crack on and get back to normal." She says that's the hardest part. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. The market's telling me, here's another AI play. Just bid it, buy it. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
The semiconductor business is a really cyclical business. These are two big-time blue-chip companies. Are people just too exuberant out there?
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so check us out there. Coming up, we're going to check in with Pierre Ferragu, head of Global Technology Infrastructure at New Street Research, get his thoughts on these Tesla sales numbers. A little bit weaker than expected, but as Dan Ives told us earlier today, better than a whispered number, so we'll get the breakdown there. Sylvia Jablonski, CEO and CIO of Defiance ETFs, to discuss her outlook for the market. Stuart Paul, U.S. economist with Bloomberg Economics. He'll give us a preview of the jobs number. The ADP number came in weak today, but not a lot of people pay attention to the ADP number. I'll just say it right there. So we're going to wait on the jobs number tomorrow. So we've got Norma Linda sitting in today with me today for the next couple hours, but we're going to kick this whole thing off right now with John Tucker, any Bloomberg Business Flash, John.
All right, and this Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Well, Paul doesn't pay attention to it, but ahead of the government job report tomorrow, ADP says employment in U.S. companies fell in June for the first time in more than 2 years. Also, speaking of jobs, Microsoft cutting 9,000 workers, the second wave of major layoffs for the company. Tesla's global sales tumbling for the second quarter in a row, down 13% for the year-ago period. But that actually did manage to exceed what was the most pessimistic forecast. So Tesla, one of the most actively traded as usual, up right now 2.2%. Centene shares worst performing stock in the S&P 500, down over 33%. The health insurance company pulling its 2025 guidance. Never a good sign. And after setting records earlier this week, Amanda Gotti at PNC Bank says the recent stock surge is, in her opinion, justified.
we're starting to get to a little bit more clarity here and a little bit more focus on the hard data, which continues to come in solid, or at least better than expected. And so I think that's been the driver of this really material bounce that we've had these last couple months.
Right now, the S&P 500, 3 points higher, 62.01 on the index. The Dow Jones Industrial Average down 114 points. The NASDAQ 150 points higher. That is up 0.2%. Now let's go overseas. Sterling right now down 1.2%. UK markets falling sharply, and also you go to their yields right now. The gilts, the 10-year bond, that is 15 basis points higher, shooting up to 4.6%. They're increasingly nervous over the fiscal situation in the UK, and also speculation of possible exit by Rachel Reeves, who's the Chancellor of the Exchequer there. And just a couple, since we are a New York City-based radio station, just a couple of things to tell you about. You guys were covering this all morning with the Midtown Port Authority bus terminal, which was shut down. That has been reopened, but of course you have any number of delays, up to an hour, because of an earlier accident involving buses. And then we go to downtown Manhattan, where we are being told that there is a verdict in the Sean Diddy Combs trial.
Okay. All right.
So there
we'll
you
stay
go.
on top of that.
We check the markets and other stuff right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Hi, Nora.
Hello, John.
Nice
How
to
are
see
you?
Nora and Paul.
Yeah, Norma Linda, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. As John said, we got kind of a mixed day in the market here. But let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda, and we're joined by Managing Editor for Bloomberg Markets Live blog, Christine Aquino. Christine, what are you looking at?
Well, Paul, John Tucker's covered it all, but let's dig in, shall we? Let's start with Centene, which
But you go into depth.
Exactly,
and do the smart stuff.
John. But yeah, Centene, ticker CNC, biggest underperformer on the S&P 500 at the moment. Declines accelerating now. That's down more than 36%. And, you know, that is primarily because it pulled its 2025 guidance due really to the rising risk from the Affordable Care Act plans. You know, that company is the top seller of ACA health plans, and, you know, legislation around what's going to happen with Medicaid very much up in the air at the moment. Really a sense that it got caught unaware of what's going on there. And so we have UBS analysts cutting its view to neutral from buy on the company, again, because of this adjustment. And, you know, Bloomberg Intelligence also commenting on the potential decline in its credit rating because, you know, the surprise guidance withdrawal, they're saying that that raises the risk of an S&P downgrade to junk and a potential exclusion of their bonds from the Bloomberg U.S. Aggregate Index.
Yeah, shares are really extending their losses. I see it's down for its worst day ever. And when you look at the broader performance, it's really not been doing too well overall because we see shares down about 42% so far this year. So lots of news to parse through, but what else are you keeping your eyes on?
Well, looking at Tesla, again, ticker TSLA, you know, John Tucker gave you the headlines, but let's dig into some of the potential kind of details there. Again, like Tesla rising 1.1% at the moment, and that is despite the tumble in their global sales. You know, it really is benefiting from lowered expectations. This is what we're seeing at the moment. You know, we have analysts reacting to the news that, yes, sales tumbled, but the fact that deliveries were in line is seen as being a win, and it's also a sign that demand growth is slowing rather than spiraling. That's according to William Blair analysts. And yeah, so it's basically just benefiting from the fact that the expectation for the decline was much, much worse than what we actually got in reality. And so it's a bit of a relief rally for Tesla here.
Well, we heard from Matt Winkler, editor emeritus of Bloomberg News, the founder of Bloomberg News. He's now a Bloomberg opinion columnist. He put out a column today. I'm not going to say defending Tesla's stock, but just putting in context of what the company's accomplished over the years in terms of stock price performance, valuation, revenue, and earnings growth, saying this thing is still a behemoth.
Microsoft, ticker MSFT. So shares in the Xbox division in the last 18 months. But, you know, we're seeing a bit of a muted price reaction to this, just slightly lower in the share move here, primarily because, you know, it's been well flagged. A lot of investors expecting this.
I'm not a gamer. I think we discussed this earlier in the week, but people are still on the Xbox, apparently.
Apparently.
Apparently so.
I'll leave that to John Tucker. He's still, I'm still playing Pong. Let's be honest.
I do have an Xbox, but, I don't really use it.
John Tucker could be a
Surprises
secret
in the
gamer.
morning.
No, not even a chance. Not a chance.
All right, Christine, thank you so much. We appreciate that. Christine Aquino giving us the latest on the stock movers. And that's a podcast. You can check that out anywhere you get your podcast to see the big movers, winners and losers in the stock market. Check out Stock Movers, the podcast. All right, we've been talking a lot about Tesla this morning. Their delivery numbers came in weaker than expected. We had Dan Ives from Wedbush Securities on earlier, and he was just saying, hey, relative to maybe the Whisper number, they came in a little bit better than expected here. But let's get the broad overview of what's happening at our good friends at Tesla. The stock's up about 2.8% today, but it's down about 24% year to date. We turn to Pierre Ferragu, head of global technology infrastructure at New Street Research. Pierre, thanks so much for joining us here. How do you think about these Tesla numbers? What does it mean for the near and intermediate term story at Tesla?
Yes, as you say, there is a bit of a positive surprise, like people tracking very precisely deliveries in various markets were expecting slightly lower numbers. The surprise comes from the US. The US is a place where it's the most difficult to track the number of Tesla being delivered, and the US beat expectations. So that's a Model Y coming in, doing actually quite well. That's good. But then at the end of the day, you have to remember the big picture. We are down 13% year on year. So we are facing a situation where Tesla is struggling to sell cars. Gross margin is in the low teens. To me, Tesla facing good demand should be able to defend like mid-20s gross margin. So we are facing like a core business, an auto business that is really at a very low point that is struggling. And so what's the difficulty? You have like one structural difficulty that we understand relatively well. It's that with their current product, Tesla has kind of saturated its opportunity. Tesla needs lower price points to keep growing. And that's in the plan, they're working on it. And then you have a number of other issues. Electric cars are less fashionable than they were a couple of years ago. The Tesla brand has suffered, particularly in Europe, where numbers are down like almost 40% year on year. And so it's difficult to quantify, but it is a significant headwind as well. And overall, the economy is not the best you can imagine for auto demand.
Yeah, I mean, when we look at the Mag 7 stocks, we see Tesla as the primary laggard this year, down about 23%. And of course, we know that investors have really been vying for Musk's attention as he's been really politically involved. So as we're seeing these numbers come through, what do things look like moving forward? Are these numbers a massive impact, or are the Tesla loyalists still out there? And is there some further positivity to come?
So, yes, the Tesla stock has been on a roller coaster. It's like a very low performer this year, but it was like a clear outperformer last year. And as you say, it's following the political career, if I may say, of the CEO Elon Musk, this has created this situation. Now, if you look at the stock, since April 1st. What you see is that what tends to really move the stock is actually the news flow around how the company is now focused on deploying fleets of robotaxis. They've just started that in a couple of weeks ago, like late last month. And I think that's going to be the primary driver of the stock going forward.
Right.
Of course, there is a lot of uncertainty on how fast Tesla is going to be able to deploy a robotaxi or even make profits, like generate the profits out of a robotaxi fleet. But the size of the price is so gigantic and so much more than the auto business that this is probably what drives the stock going forward.
Pierre, thank you so much for joining us. Always appreciate getting your thoughts there. Pierre Ferragu, he's head of global technology infrastructure at New Street Research. The jury has reached a verdict on all counts in the Sean Diddy Combs sex trafficking trial. Our own June Grosso will join us later to break that down. So we'll have that coming up for you. S&P 500, that's up 5 points. The Dow's down 125 points. The Nasdaq's up 100 points. So how's that for direction? The VIX just below 17. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. I just want to bring you the breaking headlines. It's not financial news, but the Sean Combs trial in Lower Manhattan. He was found guilty on 2 counts, including prostitution, but the big charges against him, he was found not guilty. That would be racketeering and conspiracy. And, of course, June Grasso, our legal analyst, will stop by to break this all down. Centene right now, the worst performing stock in the S&P 500 after the company withdrew its guidance. Not a good sign for the healthcare industry. And ahead of tomorrow's old work non-farm payrolls, we have the major stock averages. They are mixed right now. The S&P 500 up just 5 points at 62.04 in the index. The Dow Jones Industrial Average 104 points lower. That is now 0.2%. And the tech-heavy NASDAQ 174 points higher right now. The 2-year yield, which is more policy reactive, that is right now unchanged, 376. We are following the markets in the UK falling sharply. You had sterling down over 1%, and the gilt, the yields there, the 10-year bond is up 16 basis points. That is at 461. This has all been triggered by the financial problems that they're having, and also the Prime Minister, his failure to confirm Rachel Reeves, the Chancellor of the Exchequer, her post at the next general election. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Paul.
John Tucker, thank you so much for that. Norma, Linda, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Live Podcast, Bloomberg Live Radio. That's where you'll find us there. We're also, if you're on Smart TV, we're on your Roku and all that kind of stuff. You just search Bloomberg Pursuits, and that's where you'll find us there. One of the, I think, great stories on global Wall Street over the last 15 years for me has been the growth in ETFs. The funds continue to flow into ETFs, and it's been a great tool for the average investor, primarily in terms of lowering costs and giving lots of different investment options for investors. Sylvia Jablonski, she's the Chief Executive Officer and Chief Investment Officer at Defiance ETFs. She joins us from New York City. Sylvia, what are you seeing on your platform here in the first half of 2025? We had that 20% sell-off in the S&P 500, retraced it all right back up. We're up 5% year to date. How did the funds flow on your platform during that kind of volatility?
Yeah, good morning. It was actually super interesting to see. And I think it's in line with, a lot of the things that we've talked about in the past, right? That when you get these big dips, you have to kind of look into the future and think about what it'll look like, 3 months out, 6 months out, and things like that. And that's exactly what happened, right? So when we saw the April pullback of 20% or so, actually, a lot of our funds, because we were, really geared towards AI and quantum computing, machine learning, things like this, the higher beta plays, they were down that much, if not even more. And interestingly, what we actually saw was that flows came in. So during that period, we kept getting creates in the funds. And so that told us that, either retail or institutional money or both were thinking that this was a dip that we were going to come back from. And we kind of know the story, right? There was this high stakes poker game with tariffs that seemed like the worst case scenario was going to happen, and that didn't happen. And, then we had geopolitics coming into the mix more recently. It just seems like the market is now aware of these things, kind of living with them until we get more news, but stocks are back to rallying.
So I know some of the names that you're looking at and that you all favor are some of those quantum computing stocks, as you mentioned, IBM, NVIDIA, and the likes of those. But as we're looking at a lot of the market rallying behind these tech names, what are you all seeing in terms of ETF flows and the outlook for tech?
Yeah, so similar type of thing. So I would say most of our flows are coming into things like MicroStrategy, which is, as we know, cryptocurrency related. We're seeing a lot of good flows into some of our AI names and, the funds that relate to that. Our biggest flow story for the year is really quantum computing, the quantum ETF. So, QTUM is well over $1 billion now, and that's just been off of this idea that both quantum computing and AI are going to, power the future and things like this. And so that's really what we're seeing. Risk appetite is back on. I'd say around April, the the pullback, one of the bigger flows that we saw was XMAG. So people were looking to diversify out of Mag 7, right? But here we are again, Mag 7 rallying, and the puck goes back to quantum and AI, and that's really been the story.
Sylvia, what's your view then for the second half of the year? If the first half was characterized by this crazy volatility of a down 20% and then a rally right back, what's your outlook for the second half of the year?
I say this a little bit cautiously because I feel like we have a high bar right now, right? It doesn't feel like a recession is coming. GDP might end up being, in that 2% range, a little bit higher. Earnings are expected to be 5% or more. My take is that AI and some of that tech is going to make that number look a little bit better, and then you can get a rally for that. Tariffs, not as bad as we thought. Geopolitics, is the 12-day war over? If all of this plus Fed cuts plus the big beautiful bill come to fruition, then it's all systems go for the rest of the year. But we've seen this game before, right? Like something, we wake up on Monday morning and there's another geopolitical issue. So I'd say that volatility will continue, but overall, macro wise, from a macro view, I think that the market is poised to rally and there's momentum in equities right now.
All right, Sylvia, thank you so much. We appreciate that. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer of Defiance ETFs. So again, I guess some New York City news, some national news. The jury reached a verdict on all counts of the Sean Diddy Combs sex trafficking trial. June Grasso joins us, legal analyst for Bloomberg. June, a couple of acquittals, couple of guilty pleas, or guilty findings. What do we know here?
So we know that the jury really looked at all the charges individually and really paid attention to this. I mean, besides an acquittal on all charges, this is probably the best that Sean Combs could expect, because he was found not guilty of the most serious charges, which would have landed him in prison for life. So what he was found guilty of, and it's kind of amazing because the women were on the stand for days and days, and there were tears, and everyone said it was very emotional, but he was found not guilty of sex trafficking in regards to his former girlfriend, Cassie Ventura, and another woman who was named Jane. So he now faces, so what he was found guilty of was transportation to engage in prostitution. And so that means that the jury saw that he flew women around the country in order to get them to engage in prostitution. What's another odd thing is yesterday afternoon, the jurors said, we are deadlocked on count one, the racketeering conspiracy, which is the most difficult count.
Right.
And we have people there who won't budge. And they came in this morning, and an hour later, they have a verdict of not guilty on that top charge, which says a couple of things to me. Tomorrow, the courts are closed. The jury wants to get home. So probably we'll find out, but probably the holdouts on that top charge said, forget it. We're caving. I mean, we'll find out what happens. But I mean, the fact that they came out with a not guilty on that top charge after saying they were deadlocked on it and they couldn't reach a verdict in an hour is sort of amazing. And it'll be interesting to see what the jury, I mean, I assume that Combs is not happy that he was found guilty on this, but the maximum he could get is 10 years in prison, and it was far worse. And also you can see the the defense having some appellate issues about mixed verdicts are also often looked upon weirdly by appellate courts. So I think that, or they tried to make them do that. So I think that it's sort of an amazing.
So is he going to
verdict.
do any time here? I guess is the question.
I think he is going to do time.
Okay.
Interesting. But there's going to be definitely an appeal. Now he's in prison. He has not been given bond, so he's been in prison for about a year in Brooklyn in federal detention lockup, which is not the most pleasant of places, even among prisons. So I don't think the judge is going to let him out on bail pending sentencing, pending the appeal, which they often do. So we'll see what happens, but I expect that he will be sentenced to prison time, but it won't be more than 10 years, which he was facing life in prison with the other counts. So the jury acquitted him of all those counts that he would have spent his life in prison.
Wow. And June, when we look at this case, I mean, we saw the defense and we saw a lot of people really focusing on what was allegedly some of the domestic violence videos and whatnot that we saw between him and Cassie Ventura. And so a lot of people were looking at this case thinking about it from a domestic violence standpoint. And I know that the defense was echoing that we're looking at something different here. when we see how all this played out, were these charges and ultimately what the jury decided in terms of the verdict, was it expected?
Were the charges expected?
Was the verdict expected?
No, I don't think the verdict was expected. I think that the racketeering conspiracy was, the top charge was very difficult for the prosecution to make out here, because not only did they have to find the jury underlying acts, but they also had to find that there was an enterprise. And during closing arguments, I believe the defense put up a picture of Combs and his whole entire entourage and his family and said, does this look like an enterprise? So that was a difficult count, but I assume, you know, the prosecution, certainly I think they expected guilty verdicts on the racketeering, on the sex trafficking charges. So no, this wasn't expected in any sense.
What's the appeals process like? How long could that take?
Oh, that could take years, I think, and I have to check with the New York courts if they're slower than other courts.
Is it unusual that he didn't get bail?
Yeah, I found it very unusual that he didn't get bail, because he could have put up a bail package that included, you know, electronic monitoring and all kinds of things. But you think back to Sam Bankman-Fried. His bail package was unbelievable, and the judge refused it. So they're afraid that when they have that much wealth, that there's some way that they're going to find a way to get out of the country when they're facing life in prison. So that's why, but it also, you know, when they do that, when they lock them up, it hampers their ability to prepare their defense with their lawyers, because lawyers have to then make appointments to see them. They can only see them in certain circumstances. So it really does hurt the defense's preparation to have to, you know, go out to Brooklyn and make appointments to see them. So I don't think he's going to be getting bail at all, but we'll see.
So what happens next? What are you looking toward in terms of moving forward?
Well, there'll be a sentencing. I don't know if the judge has set a date for the sentencing, and then there'll be appeals.
All right.
Okay.
All right. Well, thanks, June. Appreciate that. Getting the breakdown there on the Sean Diddy Combs verdicts being read out. Let's get back to the markets where we belong. S&P 500 up 12 points, the Dow down 55 points, then NASDAQ up 131 points. And Nora, we had Dan Ives on from Wedbush Securities on earlier, dressed egregiously bad, I might add, with his various sport coats and pants and things.
He always has something fun.
He always does. He says it's all about the robo-taxi and AI. So that's, I guess, what the bulls are hanging their hat on, because the auto business is a tough business.
Most definitely, and especially as we just think about AI more broadly. I mean, that's what many of my sources have been telling me, that it's just AI charging for. We have so much demand when we think about that. So it's interesting when you think about the intersection between that and autos.
Yep, so we'll see. But and Elon Musk has left Doge, left the U.S. government, focusing full-time on his various companies, of which there are many. And I think Tesla investors are hoping that that Tesla will get the attention it needs.
Oh, I'm sure.
And he said he's also going to be focusing back on the sales for Europe, sales in North America, and other parts of the world that have been challenged. So we'll stay on top of that. Again, S&P 500 up 13 points. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Ahead of the jobs report tomorrow, the major stock average is mixed right now. You have 5 of the 11 major industry groups in the S&P 500. They are up. Information technology, that's in the lead right now. That's home to Apple. Those shares up 4.5%. And shares of Nike up just around 4%. They make a lot of their stuff in Vietnam, and President Trump is now posting on Truth Social that he reached a deal, trade deal with Vietnam. We don't have any details on that just yet. Not a good sign for the healthcare industry. Centene, the worst performing stock in the S&P 500. The company withdrew its 2025 guidance. Centene shares, they are down close to 40%. Still, Sarah Hunt, chief market strategist at Alpine Saxon Wood, says, you know what, the bad news scenarios are not actually panning out.
The reason the market is where it is, I think, besides good earnings, is that people are sort of having the realization, well, what if those bad things don't happen? Because if they don't, we've got some relatively decent runway.
Right now, the S&P 500, 15 points higher. That's up 0.25%, 62.13 on the index. The Dow Jones Industrial Average, 28 points lower. NASDAQ 100 is up 124 points. And markets in London falling sharply. The pound shedding 1.2% against the dollar. The 10-year gilt up close to 16 basis points. Investors getting nervous about Britain's finances. They're also speculating about Chancellor Rachel Reeves' possible exit from the government. Comedy Central delaying the upcoming debut of the new season of South Park. The show's creators blaming the delay on complications from the pending merger of Comedy Central's parent, Paramount Global, and Skydance Media. Trey Parker and Matt Stone write, this merger is an S blank 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 show, and it's blanking up South Park. You can fill in the blanks, Nora. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Paul.
All right, John Tucker, thank you so much. We appreciate it. Nora, Melinda, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're also streaming live on YouTube as well, so head over to that internet thing, search Bloomberg Live Podcast, and that's where you'll find us. All right, the big, beautiful bill, it is out of the Senate now. I guess it's back to the House. Hopefully, they're trying to get something on the president's desk prior to July 4th, which is Friday. Let's dig into the details here. Andrew Silverman, he's a government analyst for tax policy. Boy, that sounds fun. For Bloomberg Intelligence, he joins us here in our Bloomberg Interactive Broker Studio. You're the man of the hour now, Andrew, because people want to talk taxes. And what's in this bill that jumps out at you?
Well, can I just tell you, this is the most exciting time, not only for this year, but probably the last 5-6 years.
Well, wow, this is your time.
My birthday, the Olympics, the Super Bowl, all rolled into one. It's very, very exciting. So what's in this bill? Well, about between 78 to 85% of the bill is just the extension of the Tax Cuts and Jobs Act, or making it permanent. The rest of it is, I mean, I guess you could say window dressing, right? I mean, they're meeting some of the things that Trump campaigned on: no tax on tips, no tax on overtime, the no tax on Social Security, things like that. Those are in there. They're making permanent the partnership tax deduction. So a lot of stuff in here for businesses, and extending the individual tax cuts as well.
But this would be huge for Trump, though, right?
Oh, absolutely.
Massive.
Right. He needs to have a big win. And this would be a massive win for him.
Okay, good.
I'm looking at, so this could potentially offer some big breaks for Alphabet, Disney, Apple. What exactly would happen there?
Right. I think that it would be a big benefit for practically every U.S. company, except for maybe clean energy companies. But I think for multinationals, what they get is an extension. Well, they're making the 954C6 tax permanent, which is really a big deal for all those tax wonks out there. It basically allows companies to transfer cash between their foreign entities offshore. And it's something the companies have been wanting to make permanent for 20 years, and that's in this bill. It also strikes a provision that was forcing large multinationals like Apple to pay for very expensive compliance for their foreign corporations, their controlled foreign corporations, and that would be eliminated here. So it would save them a ton of money on compliance.
How is this going to be paid for?
That is an excellent question. and it's a real problem because, this bill is about $750 billion short of what the House wanted, and it violates their reconciliation instructions. And so now we're sort of left wondering what's going to happen with this bill in the House. Are they going to just ignore the fact that it's $750 billion short of their $2 trillion requirement, or are they going to make a fuss and perhaps amend the bill and send it back to the Senate, or are they going to go to a conference committee and have to work out some sort of solution there, or are they going to accept it and pass this thing, and by July 4th it'll go to the president's desk? We don't know.
Andrew, what are some of the most contentious parts of the bill? What are they really, really hammering in on in terms of some of the tax implications here?
I mean, I think the most controversial part of the bill is probably the clean energy provisions. I mean, they're cutting back on, wind and solar are the big ones, right? But in the wraparound amendment that they got yesterday night, they actually made it a little bit easier for wind and solar companies. They took off an excise tax that they were going to have applied to them, and they allowed this. They allowed wind and solar companies to qualify for the credits when they begin their construction, as opposed to when they finish their projects, which is a really big deal for them because these things take so long to develop.
Interesting.
So talk to us about those temporary tax parts that were made permanent. Is that typically how things happen? I mean, is that because it just seems like the initial Trump tax breaks from his first term. Now, this bill right now is just making those permanent, correct?
Right. So the corporate tax rate, it remains at 21%, and that was made permanent in 2018. But the partnership tax cut that was about to go away in 2026, that's a 20% deduction. The House actually wanted a 23% reduction for partnerships. And yeah, I mean, in order for this to qualify for reconciliation, it should be technically budget neutral. So that's why they had all these phase outs. And so things like the expensing of research and development that they've made permanent, the Senate would make permanent in this bill, or the expansion of the interest expense deduction, capital expensing. All of these things were temporary in the Tax Cuts and Jobs Act. And in this bill, they're made permanent. That's right.
So does this affect taxpayers at all? And if so, to what degree?
Yeah, the average taxpayer. What
does it mean for us?
Yeah, exactly.
Yeah, well, you get to so that's a good question actually. You get to keep your tax cuts from 2018. If this thing had expired, it would be a pretty large tax hike for individuals. Now, unfortunately, for people in very expensive state tax states,
what is the SALT? Where are we on SALT?
Well, so what the Senate wants to do is allow a $40,000 state and local tax deduction for people making $500,000 or less. These are married couples, $20,000 a person, but it goes away after 2029. The House wanted to make that permanent.
All right, very good. Andrew Silverman, government analyst covering the tax policy for Bloomberg Intelligence. Joining us here in our Bloomberg Interactive Brokers studio here. So we appreciate that. We're getting that. And we'll probably, I don't know, John Tucker, are we going to get a ruling? Are we going to get something from the House today, or is that pushed into tomorrow maybe, do you think?
I would be surprised if it happens today, right?
Yeah. Right. I mean, the rules...
It'll be after the 4th of July, because they were called back, and vacation week. It'll be next week.
Okay. And weather. A lot of people couldn't make it to the Hill.
Fair. It was hot.
I'll be here tomorrow. I'll be here tomorrow, so no need to worry. If there's something, we will have it for you. S&P 500 up 13 points. The Dow down 49. The NASDAQ up 150 points. We're going to have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. One of the big movers today is a healthcare insurer, Centene, plunges in what Bloomberg News is saying is a foreboding sign for health insurers. It has to do with the Affordable Care Act and some cracking down on who's on those plans, and stock's down big here. So we had to go to an expert, Glenn Lossoff, senior healthcare analyst for Bloomberg Intelligence. Glenn, what is Centene and what's the news today? Let's start there.
Okay, so Centene is a health insurer focusing mainly on Medicaid and health insurance markets. The reason the stock is down 40% today is because yesterday after the market closed, the company withdrew 2025 guidance, highlighting higher acuity and slower membership growth in its marketplace, and secondarily also highlighting increase in medical costs in some of the markets in its Medicaid geographies.
So I know insurers have been really growing worried here, investors as well, about the changes that could happen to the Affordable Care Act. What does this all foreshadow about the broader industry?
Well, most of the focus recently has been obviously on the overhang from the reconciliation bill, with the House passing its version and Senate passing yesterday its own version. There was some sort of improved visibility going into next year and the year after because of that. But at the same time, Centene's coming out with the guidance pool yesterday sort of put it right in front of us. So first, they're going to have to show stability. Either Centene or other health insurance companies will have to show some sort of stabilizing trends. As a reminder, Centene's guidance withdrawal comes approximately 2 months after United withdrew its guidance, which created a very negative sentiment for the whole group. And now it's the second punch within the same larger health insurers industry. So first thing is stability, and second thing, obviously there's going to be a long-term overhang from whatever reconciliation bill brings to Medicaid cuts overall and just in general uncertainty until provisions are implemented.
All right, so here's Bloomberg News reporting. Centene is the top seller of ACA health plans. The government has been cracking down on inappropriate and fraudulent enrollments in those plans, meaning people who shouldn't have been on them are getting kicked off. Analysts have said that probably means customers who are paying into them but not filing many claims are now exiting. How did the company not know this? They're an insurance company. Their job is to price risk. How did they get so blindsided by this?
It's very difficult to sort of where we are to really fault a company. We're not in the trenches. Obviously, it's their business. They should be able to sort of foresee what's coming up in the next year and how to manage risk. But at the same time, there are so many things from Washington on policy changes, on how sick the patients are, and they manage thousands, if not millions, of people. So some of the things may be overlooked or may not just be presented sort of to be really included in their trend and risk calculations.
So you mentioned United Health, of course, Centene today. So these aren't necessarily isolated, at least that's how the street is viewing it. This is potentially an impact that people could see ricocheting throughout the entire sector?
Yes, so in general, these companies, as I said, Centene is focusing on marketplace and Medicaid. United is just an 800-pound gorilla focusing or has a huge market in all of the health insurance businesses. But that being said, in general, health insurers are trading as it's a commoditized industry, so they all, generally trade in the same direction. So if United, for example, I'm not saying they will do, but if United, for example, reinstates its guidance during the second quarter earnings release, it will create a stabilization effect for the whole industry. After that, if someone like United or Elvins, the larger players, show some stability or actually improvement in the operating environment and the results that they report, it will impact the whole industry on the positive. So generally, it's, you know, something wrong with the one company, especially if someone as big as United, it impacts everyone else. And
so, all right, so this is a function of the Trump administration cracking down on some of these Affordable Care Act plans. Is that kind of the origination of this?
I don't think so.
No, okay.
But that, you know, Washington overhang, and usually it's a negative overhang, either Republicans are leading in Washington or Democrats. It's always, for health insurance, it's generally a negative wind from Washington. So that is still, you know, Washington cracking on sort of health insurance in general is always a in the background.
All right, Glenn, thanks so much for joining us, breaking this down for us. Glenn Losov, Senior Healthcare Analyst for Bloomberg Intelligence. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio network, business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now as we look at this market. S&P up 11 points, the Dow negative 53 points, but the NASDAQ up 141 points. That's 0.7%. The Bloomberg Dollar Index higher today. A rare day of strength here over the last several months for the greenback. A little more coming up.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. The market's telling me, here's another AI play. Just bid it, buy it. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
The semiconductor business is a really cyclical business. These are two big-time blue-chip companies. Are people just too exuberant out there?
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, we're going to check in with Matt Winkler. He's the Chief Editor-in-Chief Emeritus of Bloomberg News. He's the founder of Bloomberg News. He's got a fascinating column today out on Tesla. He says, hey, I know a lot of people are down on Tesla, but just look at the numbers in terms of valuation, revenue growth, cash flow growth, multiple. There's a lot going on. There's a lot to like at Tesla, so he'll come in and share his thoughts there. Rob Barnett, Senior Energy and Commodities Analyst on the Senate bill and what it means for solar demand and just green energy in general. I don't think that's going to be very good discussion. Jeffrey Palma, Senior Vice President and Head of Multi-Asset Solutions at Cohen & Steers. He's going to join us on markets. And Jamie Norris, Bloomberg News UK Business Editor on Wimbledon Investors, turns 75% profit trading access to VIP suites. That sounds interesting to me. So we got a lot coming up in the next hour. Right now, let's kick it all off with John Tucker and a Bloomberg Business Flash.
All right, guys, the major stock averages mixed as investors wait for the jobs report tomorrow. President Trump saying he reached a trade deal with Vietnam. Among the stocks impacted, Nike, they make a lot of their stuff there. It was up 1.7%. Microsoft cutting about 9,000 jobs, the second major wave of layoffs for the company this year. Economist David Rosenberg, meantime, at Rosenberg Research, says he's got a pretty dim outlook for U.S. growth.
I think that what's happening here that isn't priced into any asset class right now, none, is that the recession that most of us missed in 2022 and 2023 is actually already here. I see the evidence that it's already coming.
S&P 500 right now up 14 points, 62.12 on the index. The Dow 32 points lower than NASDAQ 100 right now, up 137 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Nora and Paul.
All right, John Tucker, thank you so much. We appreciate that. Mixed on the screen. Let's get a sense of what some individual stocks are doing right now. We'll do that with Christine Aquino. She is from Bloomberg News. She covers all the markets for us. She knows what's going on. Christine, what do you have for us?
Well, let's take a closer look at those Nike shares, Paul, because, yeah, as John Tucker said, a lot of volatility there. And so Nike, ticker NKE, currently up 1.4%, but we did get a lot of whipsaw there once we got some more details of President Trump's trade deal with Vietnam. And so the deal on the table is as such, right? He's going to be charging, or the U.S. is going to be charging 20% for Vietnam, or Vietnam's going to be paying 20% to the U.S. for any imports, and then also 40% tariff on trans shipping. So that's when, goods come from one location, transferred to an intermediate destination before it reaches its final destination. So yeah, Nike shares not liking some of those details.
Let's be clear on the language. And this is per Michael McKee, Bloomberg economics reporter. It's important to note that Vietnam is not going to pay us anything. American companies and consumers will pay the tax. That's how tariffs work.
There you go. So yeah, the investors, again, trying to parse all those details and still trying to figure out what that all means. And so a lot of volatility in those shares today.
And it's interesting. I'm still stuck on yesterday's news about the snowfers. Do we remember this, or has too much happened in the past 24 hours? It's hybrid sneaker loafers. Are any of you guys?
$500.
Yeah, 500. I missed that part.
Yes.
Would you be a buyer of those, Paul?
No. No, but Matt Winkler might. What else you got for us?
Looking at Amcor today as well, ticker AMCR. Those shares up more than 1%. They got a buy recommendation from Jefferies. This is a new recommendation. And the broker is seeing a compelling risk-reward ratio and good earnings momentum. So Amcor, it's a packaging solutions group. It recently combined with Berry Global. And so, analysts really liking that deal there. And so Jefferies analysts placing their price target at $12. Shares currently at $9.58 last I looked. So yeah, good rating for Amcor there.
So we've been talking a lot about some of these healthcare companies. We were talking about Centene earlier, but you're looking at, is it Molina Healthcare?
Molina, yes, that's exactly right, Nora. So that's actually the second biggest decliner on the S&P 500. Again, this is all trading off of what we're seeing with Centene. But yeah, Molina Health, ticker MOH, also seeing declines of nearly 20% at the moment. So one of the biggest kind of losers in that news flow. And, that momentum for those shares haven't been good in the past 5 days. They've been down 11%. They've fallen 12% in the past 30 trading days. Trading volume also above average in terms of the 20-day time frame. So that's 16% above average over the last 20 days. They're also trading 11 times their estimated earnings per share for the coming year, which is probably why it's probably why investors kind of zeroing in on Molina as one of the kind of biggest sideswiped stocks today in light of the news from Centene.
All right. Excellent, Christine. Appreciate it as always. Christine Aquino, she covers all the markets for Bloomberg News. Stock Movers is the podcast. 5-minute reports on the big winners and losers in the stock market. That's updated throughout the day. So take a look at Stock Movers. That's the podcast. You can get it anywhere you get your podcast. It's all good stuff here. All right, let's get back to Tesla. It's been a name we've been talking about today. They reported some delivery numbers. Came in a little bit light of forecast. The stock's up a little bit today, and Dan Ives from Wedbush Securities suggested that might be because the whisper numbers out there were a little bit lower, so the company exceeded them. So we're there. But there's certainly been some negative sentiment around Tesla stock. It's down 25% year to date. There's some concerns about Elon Musk and his commitment to the company. But there's still a lot to like out there about Tesla if you look at the numbers. And that's what our next guest does. Matt Winkler, he's editor-in-chief emeritus of Bloomberg News. He founded Bloomberg News. To me, that's the point here. And he joins us here in our Bloomberg Interactive Broker studio. Matt, thanks so much for joining us. You've got a column out today with your colleague Shin Pei saying, hey, if you look at the numbers here at Tesla, it's an extraordinary story still.
Yeah, and by the way, thank you for having me. And I would invoke our founder, Mike Bloomberg himself, who, when he was mayor of New York, would say often, in God we trust, everyone else bring data.
Yep.
And so the data compiled by Bloomberg shows that this EV startup we call Tesla, founded by engineers Martin Eberhard and Mark Tarpenning in 2003, is still the world's largest automaker, 9th largest public company, and worth more than the gross domestic product of Saudi Arabia. And for all its might as a global sales leader, Toyota Motor Corp is about a quarter of Tesla's more than $1 trillion valuation as of today, after the very numbers that you reported. And by the way, the stock is up the most since June. Okay, so initially, the media take was negative, 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 and people with the most at stake, which is where the data is, say not so fast. And there's a reason for that. You know, what we did, my colleague Shin Pei and I, is we asked that very question. Okay, with all this negative news that is prevailing, that is the prevailing narrative, why is it that through thick and thin, every single month this year, Tesla is still worth more than Toyota? And Bloomberg's own alternative artificial intelligence function, DSX, tells us there are plenty of reasons. One is that if you just took out the vehicle itself, there's still $1 trillion market capitalization on the autonomous driving that is coming soon to everyone through Tesla. So there are all kinds of reasons why Tesla has the value that it has. But I would like to share with you something that I got from a Bloomberg user this morning, an email. He said, we don't need AI to understand why Tesla critics are losing. Critics are either motivated by hate, we've seen that, politics, or a misunderstanding of time. Tesla represents the most extraordinary array of products, some of which are destined to become core components of the future economy and life of humanity. That's from our Bloomberg user, John Billings, who's in Washington, D.C. So this is a big part of the story that everybody misses. And if you just look at quarterly sales reports, that's not going to give you the picture. But I would say, even in that context, the Model Y was the best-selling vehicle in the world in 2023, 2024, and poised to be certainly the best EV selling vehicle in 2025, and maybe again repeat. And the reason why the deliveries were slow in the first and the second quarter was because they were retooling, renovating, updating the Model Y. Sales are way up in Norway and Spain, by the way. So much for the demand problem.
How are you thinking about it in relation to peers? I mean, I know a lot of people have really been clamoring for Musk to turn his attention back to Tesla. And I mean, when we think about some of these numbers that we're parsing, as you mentioned, and your story, that everything about Tesla these days has really been ranging from bad to worse. So when you think about the future of the company in comparison to peers, you know, what are just some of the things that you expect in terms of performance moving forward?
Well, let's just look at the past 10 years. By the way, 2015, most of the analysts that provide forecasts were negative about Tesla, bearish, don't buy the stock. But what happened? Tesla's $97.7 billion of revenue last year is more than 30 times its sales a decade ago. Now that outperforms even China's BYD, okay, which has been the star of late in the media narrative. But if you look at something like Tesla's earnings before interest, taxes, depreciation, amortization, it's more than 300 times the company's profit a decade ago. Number two, BYD grew only 15 times. You know, if you look at Tesla's current market capitalization, it's 31 times its value a decade ago, which is just another way of saying that among the top 10 automakers that Tesla competes with, Tesla's revenue growth, its profit, and its market value are superior, according to data compiled by Bloomberg.
Always. Brand value, last question. One could argue the valuation has always had a big Elon Musk premium based into it. His brand arguably has been diminished over the last 6 months with his political actions in Doge. A, is that a concern, or should it be a concern for investors? And you think, is there a long-term brand issue, do you think?
So I'm not qualified to answer that question. However, somebody who probably is Nicholas Colas, who's the co-founder of DataTrek, and he's been covering the auto industry since the 1980s, which is kind of when I sort of entered the picture. And he says there's something that is no algo spreadsheet can understand, which is why hero-led companies are often so valuable.
Yep, interesting. All right, Matt, great column. As always, Matt Winkler, Editor-in-Chief Emeritus, founder of Bloomberg News. I think he drives around one of these Tesla things. I kind of went there last time. I got my youngest a hybrid Honda, so I'm kind of getting there, but give me the gas
close.
engine. Give me the gas engine. Matt Williger, thank you so much. We appreciate that. All right, let's get back to Washington, D.C. A lot of things going on there. Tariffs. We got a tax and spending bill back at the House. Let's get some reporting from Tyler Kendall, Bloomberg White House correspondent. Tyler, thanks so much for joining us here. We just had a tweet from the president about some Vietnam tariffs. Was this expected? It seems like Vietnam is becoming a bigger and bigger trade partner.
Yeah, hey, Paul. No, this actually was unexpected considering that we had heard time and time again from this administration that we shouldn't expect any further trade frameworks until Congress was able to pass the one big, beautiful bill, right? We knew July 4th was the deadline that the White House has been eyeing for that, and July 9th would have been for eyeing for some of these trade deals to get done. Now, we should say that we are expecting these to be frameworks, not fully fleshed out deals, but according to President Trump's Truth Social post, Vietnam will pay 20% tariff on exports to the U.S. with a 40% levy on any transshipments. This is a really important key part as the administration tries to target those trading partners that they see could help them to counter China. President Trump has also said that Vietnam has agreed to drop all levies on U.S. imports. This would be the third framework deal, of course, after the UK and sort of the framework that we got with China, though we are waiting for more fuller fledged out details there, since the latest in that round of negotiations was that negotiators have agreed essentially to keep talking as we still wait for confirmation from the Treasury Secretary that China has started to release those key critical mineral export licenses that has really stalled out the process, at least on that front.
Tyler, as soon as we got this news, we saw shares of Nike, Lululemon, and a few of those other companies that do a lot of their work in Vietnam turning quickly negative. As we think about the trade war more broadly, is this a major development?
I mean, it is considered to be one in the fact that we really have not gotten much information out of this administration, and they really have been trying to show some sort of forward progress towards President Trump's goals when it does come to tariff deals. And it's important because this White House is looking for a confluence of economic factors to happen this summer when it goes hand in hand with passing his tax agenda. You even had him in a post on Truth Social earlier this morning, basically suggesting that tariff revenue would help to pay for some of the offsets in this tax bill when it does come to those pretty lofty tax cuts. Now, I do want to point out, particularly when it does come to transshipping, these are components from China and possibly other nations that are routed through Vietnam or subject to other minimal final assembly before being exported to the U.S. That's really where we're going to perhaps see some of these companies take a shift when it comes to their supply chains, because this really is a bid by the administration to crack down on what they see as a big competition from China.
While we have you, Tyler, we have to get the latest on what's happening with this big, beautiful bill here. Understand that reporting is it's back with the House. Any sense of timing here?
Yeah, so for our radio listeners, I'm actually here right in front of the Capitol where we just saw some House members go back on to the floor because we're waiting for them to debate and vote on what's known as the rule. Now, just to give you a little bit of background here, this wouldn't be voting on final passage, but they need to pass the rule before they can vote on final passage. So the fact that we have already seen this delay is spelling some trouble for House Speaker Mike Johnson. Now, I actually just had the chance to catch up with Congressman Chip Roy. He's a Republican from Texas. He came out here and gaggled with us reporters just a few short moments ago. He told us that at the moment he's a no, and he thinks that they do have enough votes to block this rule from going forward. What that would mean, Paul and Nora, is that these Republicans would have more time to dig in their heels and demand some sort of compromises, either from the administration through pledges, for example, for a reconciliation package down the road or executive orders, or they could force this to go back to the Senate. But it is hard to imagine that that would happen. That would be a very politically fraught move because it would jeopardize President Trump's July 4th timeline, and we know that he is starting to call those lawmakers up to the White House to hold discussions today.
So what are the odds of a smooth passing forward through this?
I wouldn't say it's a done deal, but it could really go either way here because we have to keep in mind that this bill was designed not to ping pong between the different chambers. If House Republicans want to make changes, they're going to have to call what's known as a conference committee. That gets the Senate back involved, and it turns into a much longer process. But there are two factions of the Republican Party right now that are really voicing concerns. One are those House Freedom Caucus members that are concerned about the deficit spending levels in this bill. They say that the Senate's plan has fallen short by about $500 billion in spending cuts that they had wanted to see. They are very important to watch, but we do think that perhaps they could be appeased through some sort of other deal or assurances with the White House.
Tyler, great reporting. Thank you so much. We appreciate always your reporting from the nation's capital. Tyler Kendall, Bloomberg White House reporter down there in D.C., front lines, front of the Capitol. We got representatives coming back from their district to come back and vote on this deal. We'll have continued reporting going forward. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Let me start with Nike. That's climbing along with some of the other apparel and footwear companies after President Trump said he reached a trade deal with Vietnam. Right now, you have shares of Nike up close to 3%. Lululemon, they make a lot of their stuff in Vietnam too. Those shares right now up about 0.7%. Tech mega caps leading gains with Tesla. Those shares right now 5% higher. They had a drop in sales, but that was better than most analysts feared. Apple gaining 2%. They had an analyst downgrade at that company. Ahead of the jobs report that we get tomorrow, non-farm payrolls, the data today that we got from ADP showed employment at U.S. companies fell for the first time in more than 2 years. I have to take a look at the UK markets, sinking sharply. Investors worried about the state of Britain's finances. There's also speculation swirling about the possible exit of the Chancellor of the Exchequer. That would be Rachel Reeves. The gilts there, the 10-year gilt yield is 14 basis points higher. That is at 4.59 right now. Overall, the S&P 500, 14 points higher, 62.12 on the index. The Dow Jones Industrial Average just turning positive, up 3 points. The Nasdaq 100, 136 points higher. That is up 0.6%. Restaurants take notice. This is from the Journal. I thought this was an interesting story. According to a recent study, people prefer wide-rimmed glasses to narrow-rimmed ones. Not only prepared to spend more on beverages and wider glasses, they're more likely to reorder drinks that are served in wider glasses. Wine glasses also let people pick more expensive beverages. So think like wine glasses versus a champagne flute.
Yep.
So.
All right, from my bartending days, and I was a heck of a bartender, you got to fill the glass to the top with ice. I mean, I mean, where are some of these bartenders trained, John? I mean, come on.
We got to send them back.
Yeah.
I skip the glass, Nora.
Just go
straight for the bottle.
Yeah.
All right. So anyway,
hey, that works too.
Yeah, so anyway, if anybody's going to be serving me a drink tonight at Swan Tavern down in,
Listen up.
Keep that in mind.
Take care of your bartenders, everybody.
Take care of that.
Most definitely.
Mark, the Swan Tavern, he's my man here. All right, let's talk alternative assets here. John Tucker, thank you so much. Norma Linda, Paul Sweeney live in our Bloomberg Interactive Broker Studio, streaming live as well. Jeffrey Palmer joins us, Senior Vice President and Head of Multi-Asset Solutions. I'm not sure what that is, but I'm going to say it has to do with some alternative investments, maybe some real investments like real estate. Jeff, thanks so much for joining us here. Cohen & Steers, I've known this asset manager on the street forever, but I've never done business with them because you don't really own media stocks, which was my game. You guys own real estate, REITs, stuff like that. Talk to us about how you guys look at the marketplace and where you see opportunity.
Yeah, so thanks for having me this morning. So we focus, as you mentioned, on real assets and alternative income strategies. And those real asset strategies in particular, real estate, infrastructure, commodities, natural resource equities. In short, things that are exposed to the real economy, that have real ties to the economy, inflation-sensitive assets. So that's certainly been a really important part of the world these days. And then that all kind of fits in also to that alternatives universe that we think offers diversification to your traditional stock and bond portfolio.
So I cover REITs for our equities team, so super happy to have you here. As I'm looking at REITs performance this year, I mean, we're seeing shares that didn't really do much. I'm looking at a gauge that's up about 0.4% so far this year. What are you seeing in terms of performance and opportunities within the REIT space? Any particular subsectors that you're keeping an eye on?
Yeah, so I mean, we should also kind of think about the year has already been full of a whole bunch of rotation. It was a pretty good first quarter for REITs. They've cooled off a little bit in the second quarter, and that sort of is the mirror image from the broader S&P. Broadly speaking, we think that REITs are pretty fairly valued, actually, attractive relative to broader equity markets. Within the REIT space, there's certain areas that we like, and then within the private real estate space, I would also add, there's areas like open air shopping centers that have become, to us, we think are finding a bottom, and in that private space is a little bit different than the listed space as well.
In a private space, I always make the mistake of commercial real estate just thinking, oh, it's office, but I know it's so much more. I've now learned that through people kind of pointing it out to me. Where in the commercial real estate broadly defined, where do you guys see value in the private side?
Yeah. So Nora will tell you that office is only about 3 or 4% of the total listed index. Now that's down, and our team has been underweight office for a long time, and so we've really benefited from that trade. So within that space, I mentioned in the private space that open air retail looks a little bit better. In listed markets, we've favored things like multifamily homes. Within healthcare, maybe a little bit nichier, but senior living areas. Certainly data centers have been a very important part. That's true not only in real estate, but also things tied to that in the infrastructure space as well.
So you mentioned open air shopping centers. Do you mind just explaining to our listeners what exactly that is? Because I know a lot of people were talking for a long time about the death of the mall. So speak to that.
And this is not quite the mall. It's like the renaissance of the mall, if you like. So think about, in some cases, outlet centers, or in some cases, open air outside where you have necessity-based shopping centers. So it might have a grocery anchor or a big box anchor, things that have durability to the internet shopping cycle. But then it's sort of built around an anchor store. Those are areas where it looks like prices have bottomed. There has not been new supply in the area for the reasons that you mentioned, because malls have been a really tough spot. So yields are pretty good. Earnings growth looks pretty good in that area. And that's why we find some interest in that space.
Where is the capital markets as it relates to real estate these days? If I want to go out and develop a multi-family unit or some kind of piece of commercial real estate, where am I going to get the money to do that? Is my local bank going to lend me that money for a real estate deal?
So obviously the last few years have been really challenging for real estate in general. Debt markets have really been tough. Actually, I think the good news here is that at the margin, the debt markets are starting to open up a little bit. It just means, losses are making their way through. People are kind of realizing some of that. So we are seeing some pickup in lending. There's going to be pockets where that's possible and where there's challenges. So you should think about this less as a national trend and much more as a local, and even in some cases, a hyper-local sort of a trade to be able to do it. But the debt financing is coming back, but it's been coming back slowly.
Super quickly, I know you mentioned you're underweight office and have been for a while. Any other areas that you guys are actively avoiding?
Well, in certain areas, it's, we've certainly seen an increase in supply sort of working its way through. And that's been, in some cases, apartments and some of those areas, because, that's where the rent growth has been strongest. It's where there's been most resilience in the cycle. But as that supply comes through, it still takes some time to absorb. So that would probably be an area where we've been a little light.
Jeffrey, thank you so much for joining us. Jeffrey Palma, Senior Vice President, Head of Multi-Asset Solutions at Cohen & Steers, and a proud graduate of Rutgers University. I'm a huge fan of Rutgers, the state university of New Jersey. I've hired a ton of kids out of Rutgers over the year, and he joins us here in our Bloomberg Interactive Broker Studio. All right, let's switch gears. Let's get over to Wimbledon. They're playing tennis over there, but guess what? There is a business story to be had there, and we got it. Jamie Morris, Bloomberg News UK business editor. Jamie, talk to us about what's happening with the VIP tickets over there. I think there's a market over there, right? Oh, he's not ready. There you go. Fantastic. So anyway, but apparently have you been to Wimbledon, Nora?
I have not.
Tucker,
I need to go.
I know. I'm not even going to ask.
Not yet. I would like to go. One of the problems over there right now, as is the case with the rest of Europe, they're undergoing a heat wave. Brutal. And I think they had to cover up the center court just to keep it cool.
Yep. So, but
they have the clay courts. Does clay melt?
No, they got the grass courts over there.
Oh, the grass courts.
The grass courts over there. Yeah. So, all right, we got Jamie now. Jamie, UK business editor for Bloomberg News in London. Jamie, talk to us about what's happening over there in Wimbledon with some of the tickets and some of these VIP seats.
Yeah, the demand is incredible. I mean, you've seen this sort of price increase across all sorts of sports and different events. But at Wimbledon, they sell these debentures, so sort of VIP tickets in the main courts, and they're going for thousands of. I mean, like we're talking over £100,000, just so like $150,000 for like you guaranteed seats for 5 years. But before that even kicks in, you can even attend. These tickets are trading for something like double that. So these guys are investing and making a load of money. But even if you actually keep them and just sell those tickets on the day, you can make thousands more per day. So like it's a pretty good play for investors as well. It's really interesting.
I mean, this is an event that everyone always has their eyes on. And as we're looking at these prices, super expensive. Is this usually the type of pricing power that they've had in the past, or is this year a bit unique?
They've got a lot of pricing power, but it's really increased over the last 5-6 years, I'd say. People thought maybe after Federer, Nadal, Djokovic, retiring, Djokovic is still going, of course, that era of players, great players disappearing, that might mean that there's demand fading, but not at all, actually. I think there's more mobility. People are traveling internationally more, especially the demand from the US fans is incredible. I mean, they'll really pay the big bucks to go to Wimbledon and say they've been there and attended the matches on centre court, and they're willing to fork out thousands of dollars per ticket. So the demand's been really strong, and the uptick in value has been incredible. We're seeing, these sort of 5-year periods increasing something like 70% in value each time, and then those tickets are being traded on, another 70% on top of that. So it's pretty incredible.
Jamie, John Tucker here from Bloomberg News was reporting that the heat wave over there in Europe. Talk to us about London and Wimbledon, and how hot is it for you guys? Because you guys aren't really used to this stuff.
Yeah, it's pretty hot here right now. I mean, actually, today's a little bit cooler than it has been. We had a little bit of rain this morning for the first time in a while, but it's been really hot, and that's kind of perfect for Wimbledon. People want to go over there and spend the day in the sun. You get uninterrupted play. I mean, the two main courts have retractable roofs over them, which was actually these are the things that the debentures pay for, so the sort of investment in construction and expansion and so on. So they always get now sort of uninterrupted play, but it means that all the outside courts are like another 20 or 30 or so. Yep. It means that people that queue up for overnight as well. You have these queues around. It's a very British tradition of queuing. Happens in the courts, right, in the park opposite. So people camp overnight, and a lot of Americans do that as well because they just want a taste of the action. And it's incredibly popular, even more so than it was when I was growing up. And people used to queue from 7 in the morning, but now it's like, if you don't get there, in the early hours in the dark, right, you haven't got much of a chance.
Jamie, thanks so much for joining us. Appreciate it. Jamie Nemo, he's a UK business editor for Bloomberg News, reporting from the London Bureau regarding Wimbledon. Here's something I thought interesting. Wimbledon is for the first time breaking its 147-year tradition of having line judges in characteristic suits determine if the ball is in or out of bounds. They have been replaced with robots and artificial intelligence that uses camera footage to track the ball and make calls. And I have to admit, particularly on television, the technology looks really cool, and it's super accurate.
I just think back to John McEnroe screaming at the line judges.
You cannot be serious.
Can't forget that.
But it works, and it's actually good for when you're in the stadium, because then they flash it up on the screen, and you see it when everybody else sees it, when the players see it as well, in or out. So
that's cool.
I was fortunate enough to go to Wimbledon once, so that's off the bucket list. It was a great experience. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News, and with this Bloomberg Business Flash. The major stock averages rising right now. President Trump announced a trade deal with Vietnam, the S&P 500 rebounding from some of the earlier losses. Some of the individual shares on the move. Tesla up 4.3%. The car maker posting a less drastic decline in vehicle sales than the most pessimistic analysts had feared. The worst performing stock in the S&P 500, that belongs to Centene, the health insurer, shocked investors after it withdrew its profit outlook. They blame rising risk from the Affordable Care Act plans. Brian Nick at New Edge Wealth so far isn't too crazy about stocks or bonds.
What do you really hope to get from an upside here with 22 times earnings, 36, 37 times Schiller PE? It doesn't look like an appetizing time. And then you have to look at the other side of the ledger, the bond market. You really have to go into this with your eyes wide open with the debt situation coming up and the potential that the Fed cutting interest rates at the short end may not do much.
Right now, the S&P 500 is up 16 points. That's a rise of 0.3%. We're at 62.14 on the index. The Dow Jones Industrial Average up 38 points at 44,532. The NASDAQ 120 points higher. That is up 0.5%. The two-year yield ahead of the non-farm payrolls report tomorrow. Right now, unchanged at 376. The canned fruit company, Del Monte Foods, they've been in business for well over 100 years. Filing for bankruptcy, Del Monte Foods, they executed a debt overhaul last year. That was kind of controversial, also became the subject of a lawsuit. And hackers targeting airlines. The latest, Qantas Airways, they say a significant amount of customer data was stolen by a cyber attack targeting one of its contact centers. The criminals gained access to a third-party platform used by the call center. It held the service records of 6 million of their customers. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Paul.
All right, John Tucker, thank you so much. We appreciate that. Norma Linda, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We're also on your smart TV, Roku, all that kind of stuff. Just search Bloomberg Pursuits, and that's where you'll find us here. I tell you, one of the more competitive industries I see out there day in and day out is the wireless business. You got the big three, AT&T, Verizon, T-Mobile, and it's all, I mean, it's all on price. I mean, it's all kind of the same. I don't know. That being said, I've been with Verizon since the beginning of wireless, so maybe likewise. Yeah, no churn going there. John Butler, he covers all this stuff for Bloomberg Intelligence. John Butler, senior telecom analyst for Bloomberg Intelligence. He's based down there in Princeton, New Jersey. John, what's the state of the wireless industry today? Again, you've got those big three. How competitive is it?
Hyper competitive, Paul. It really is interesting. Just as you said, there's a lot. The big three, AT&T, Verizon, T-Mobile, they're always slugging it out with themselves. But now that you've got the cable operators coming in, offering wireless at very enticing price points, and their brand strength is getting better. And so they're becoming more and more of an issue quarter in and quarter out. What we as analysts sort of measure as the health of a telecom in any given quarter is we look at the number of net new smartphone subscribers that a carrier adds, or phone net adds as they're called. And what we've seen every quarter is the cable operators now are getting even up to half the net adds in a given quarter. So they're becoming a big factor. Having said all that, I'm impressed with how the carriers are keeping their service revenue growth pretty steady. You know, telecom is not a growth business, so if you're getting 3 to 5% growth in your service revenue, it's a pretty good quarter, and I think we're in for more of that this quarter, with the exception of Verizon, and we can talk more about that if you want.
Mm-hmm. John, when I think about wireless carriers and I think about some of these phone providers, it feels as though everyone has their brand that they stick to. And as we were mentioning earlier, it doesn't really feel like there's necessarily anything to entice people to hop around. But given all of this in regards to marketing or really just being able to drive demand, where are you seeing, which company are you seeing as the biggest leader here?
T-Mobile is the runaway hit, Nora.
T-Mobile Tuesdays.
They really, yeah. T-Mobile Tuesdays, they have giveaways once a week. They're brilliant marketers, just brilliant. And it's funny, if you rewind the clock 15 years, they had a near-death experience. Like, I didn't think that carrier was going to make it. They brought in a very dynamic CEO named John Ledger, who really turned around the brand. He made himself the face of the brand. They branded it as this sort of hip counterculture, consumer-friendly brand. People just love it. And in the meantime, they've done a great job updating the network and upgrading it. So, and after buying Sprint, of course, they now have the scale to really compete with AT&T and Verizon. They've gone from a distant third in the industry to now the second largest wireless carrier. And they lead the industry in net adds quarter in and quarter out, which is a testament to the power of their marketing.
All right, I'm a Verizon wireless customer, been one since the beginning of this whole wireless thing.
Me too, by the way.
Exactly. So what's the story for those guys in terms of how they're dealing with the competition?
I think it's easy to sort of play armchair CEO here, but I think Verizon is making a bit of a mistake by not meeting rivals in promotions. They really take the high ground. They want to protect a premium brand image. For years and years, they had the best network out there. I still think they have the edge there, but that gap is closing, particularly in the minds of a lot of consumers that don't follow the industry. T-Mobile keeps banging away that they have the best network in the U.S., and so that sort of premium brand image that Verizon had is beginning to erode, and yet they're not meeting T-Mobile or the cable guys sort of, tit for tat on promotions. And so on the margin, in recent quarters at least, they've lost phone subscribers. Not a lot, but it's beginning to really chip away for them, and it's chipping away at their service revenue growth, again, because I just don't think they're promoting enough.
John, so you've got the big three. What is the latest with M&A in this space? Is there anything left to consolidate?
Not much, Nora. There's been where the telcos are really looking for growth is on the broadband side, and you've seen a lot of consolidation there with Verizon most recently buying Frontier, which is a big fiber provider. They really have strength in several states across the U.S. AT&T has done a really good job. They're buying Lumen's fiber business, so you've got consolidation there. On the wireless side, you've seen T-Mobile snapping up a lot of the independent and private prepaid brands, like Mint Mobile is one of their most recent. They're buying TDS, which is a small regional wireless carrier. So there really is nothing left here except for big transformational acquisitions, and they really would be gigantic on that scale. So I'm just not seeing it.
So, John, just real quickly here, is this an ARPU story? Is this just raising prices to consumers? Is that the growth story here for most of these big guys?
It's raising prices, Paul, definitely. That's how you're getting that 3 to 5% service revenue growth. But I think another part of the story and one to watch is that telco expansion into broadband. They're doing a great job there, expanding into fiber, and both that and fixed wireless access, which is getting broadband over the air. So I think we're going to see a lot of growth, an increasing amount of growth, to be precise, in coming quarters coming from that end of the business.
All right, John, thanks so much for joining us. Always appreciate getting the update from you. John Butler, he's a senior telecom analyst for Bloomberg Intelligence. He's based down there in our Princeton office. Looking at this, the telecom stocks here, they've actually got some decent returns this year. I was looking at AT&T, Verizon, T-Mobile. AT&T year to date's up 25%. Verizon's up 9%, and T-Mobile's up 8%. And on a trailing 12-month basis, AT&T's up 50%, Verizon 6%, and T-Mobile 33%. So for stocks that kind of grow top line, as John was saying, kind of 3 to 5%, some pretty decent returns as they try to expand their business lines away from their core wireline and wireless and get increasingly into broadband. So we'll keep an eye on some of those telecom names. S&P 500 up about 18 points here. It's 0.3%. The NASDAQ's up about 150 points. That's 0.8%. So we're going to have more coming up in just a moment. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. All right, Alex and I had a remote a couple weeks ago out in the Hamptons. On the drive back to Jersey Shore, drove through Staten Island. And when you drive through Staten Island, one of the things you notice is these big landfills they have there. And they are big, but they're all covered with grass and it all looks fine. But every once in a while we see a story about these things can be problematic for a lot of people that live nearby. And that's the source of the big take story on the Bloomberg terminal today, entitled Beneath Layers of Waste. Landfills around the U.S. have been reaching scorching temperatures and neighbors have been getting sick. Laura Bliss joins us. She's a reporter for Bloomberg Business Week in our San Francisco bureau. Laura, thanks so much for joining us here. Can you tell us about your story, landfills? You focused on one in California.
Yeah, absolutely. And thank you so much for having me. Maybe I'll just start with a little bit of background about how I came across this story. I found some data on LinkedIn sometime last year that suggested fires at recycling facilities were skyrocketing. And we've probably all heard about this as we all throw, vape pens and electric toothbrushes and even smartphones, some of us into our recycling bins or trash cans. And that can cause real problems because of the, lithium batteries. And that really made me wonder what was happening in kind of the final resting place for so much of our trash, which are landfills. And it turns out a lot. And as you mentioned, my colleague Rachel and I really took a deep dive into some of the problems that can arise as we pile up our waste higher and deeper. And this landfill in Los Angeles County is called Chiquita Canyon. And since 2022, temperatures have been climbing to above 200 degrees in pockets of waste. That's like 40% above the EPA's safety standard. And this is a big problem because what that's doing is the trash breaks down deep below the surface at these really scorching temperatures. It's releasing toxic gases, it's releasing geysers of trash juice and these really noxious fumes, and it's making people sick in the nearby community. And what I discovered is that there's debate about what is actually going on and even kind of how to describe what I just shared with you, the kind of basic facts. Regulators in California suspect that the landfill is smoldering due to the operator letting too much oxygen in. And this is a problem that's known to start fires, which goes against federal regulations. And the operator disputes that and says nothing is on fire and says that this is an example of a phenomenon the industry has seen a lot of in the last 20 years, these elevated temperature landfills. And so the story just took me to, communities all over the country that really feel, not only physically sickened by the landfills in their backyard, but also gaslit, about what exactly is going on.
Laura, really interesting story. When you were doing your reporting, what did you find out about what residents are doing to rectify this issue? Who's to blame in this situation?
Yeah, I think that is where a lot of the debate comes down. The waste industry will say that, these landfills that have overheated, in some cases, they've been tied to, specific reactive waste streams, right? Like aluminum dross, which is a byproduct of smelting, 20 years later or years later, reacting under the surface. In other cases, like in Chiquita Canyon, the regulators at the state are saying, no, they suspect, I should say, that this is because of, the operator basically mismanaging the gas collection system in their landfill. And so this back and forth, I think, actually makes, accountability somewhat challenging. But I will say in California, the state is issuing violations, on a regular basis to this operator. But for residents, they're really kind of stuck in their homes, breathing in these toxic fumes and these noxious odors. And they feel like they can't sell their homes because of the financial barriers and even ethical kind of questions about putting another family in the same situation. And so they feel kind of stuck and at a loss for kind of how to move forward.
Laura, who owns landfills across the U.S.? Are these all privately owned?
Not all of them are, but many are. The landfill I focused on in Los Angeles County is owned and managed by Waste Connections. There's certainly other, large players in the industry, Republic Services, Waste Management. But some of the affected landfills I looked at were municipally owned too. Bristol landfill in Virginia has been problematic in the last several years. A lot of the same kind of symptoms I've been describing affecting communities out there.
I mean, what is the next step here? What can really be done when you're looking at your reporting?
Yeah, I mean, one thing I found in my reporting that was alarming to me, and that, several scientists I spoke with said this is going to actually create more of these events in the future, is the fact that the EPA actually rolled back one of the key rules that environmental engineers and safety advocates say prevent these landfill fires or even events. And so, people in this kind of field who are studying this issue, would really like to see that come back. And just in general, for there to be more oversight, more monitoring, and frankly, better technology for tracking what's happening below the surface.
Laura, thank you so much for joining us. Laura Bliss, reporter, Bloomberg Business Week, joining us from San Francisco. Got the big take story here, talking about pollution. Check it out. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121 across the world. Only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. A New York jury acquitted Sean Diddy Combs on the most serious charges at his federal trial, racketeering and sex trafficking, and convicted him on 2 lesser prostitution counts, each carrying a maximum 10-year prison term. CBS's Katrina Kaufman was in the courtroom.
The prosecution is absolutely gunning for the max here. But Sean Combs also, when that verdict came in, he turned around to his family and he mouthed to them, "I'm coming home."
The judge is expected to decide today whether Combs can be released on bond. Douglas Wigdor is the attorney for Cassie Ventura, Combs' ex-girlfriend who testified against him.
We're pleased that he's been held responsible for something, which is something that hasn't happened in his lifetime. And, we're hopeful that ultimately he receives a substantial sentence for what he's done.
The CBS News legal contributor, Jessica Levinson.
It shows that these are complicated cases to bring, that not every federal case that's brought is a slam dunk winner.
Now to Idaho. Brian Koberger appears in a court today to plead guilty to the murders of 4 people. CBS's Carter Evans.
He'll spend the rest of his life in prison without the possibility of parole or appeal. Koberger is accused of fatally stabbing 4 students in Moscow, Idaho in November of 2022. Their families are divided on how they view this plea deal.
The CBS's Caitlin Huey Burns is on Capitol Hill, where the House is considering the Senate version of the Trump budget, with some Republicans saying they'll vote no unless changes are made.
We are still deep in the sausage-making process here, with just a couple of days before the president's arbitrary July 4th deadline. So today is all about the wrangling.
The Trump administration now asking the Supreme Court to remove 3 Democratic members of the Consumer Product Safety Commission who he fired and a court reinstated. Wisconsin Supreme Court has struck down that state's 176-year-old abortion ban, ruling it's been superseded by a newer state law. On the Health Watch today, CBS's Jim Krasula tells us
air pollution may be the reason lung cancer rates are increasing worldwide among people who have never smoked. That's according to new research published in the journal Nature. What's new in this study is that researchers found that lung tumors had a genomic fingerprint that indicated air pollution as the cause.
Tesla reports a more than 13% drop in second quarter auto sales as the company focuses more on self-driving cars, facing increased competition and backlash over Elon Musk's political activities. Wall Street, the Dow is down 16. This is CBS News. The snack container wars are ready to hit a new high at movie theaters.
Fans have paid up to $50 to munch on popcorn from sandworms, T-Rex heads, and racing helmets. Ready to best them all?
Please welcome the Fantastic Four.
Marvel's upcoming reboot, First Steps. Regal will sell giant replica buckets of the villain Galactus head for $80. They'll feature glowing LED eyes and removable purple horns and hold up to 361 ounces of popcorn. That's more than twice the size of a regular large. Theater chains have grown to count on collectors to make up for box office sales that still haven't recovered to pre-pandemic levels. Deborah Rodriguez, CBS News.
Waffle House is dropping that 50-cent per egg surcharge that it imposed 5 months ago when prices were soaring. Prices have since come down for eggs. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's the moment of truth for the president's big, beautiful bill. Welcome to the Wednesday edition of Balance of Power as the House grinds through the procedure that will bring this process, they say, to a crescendo on the House floor. Yes, the big tax and spend bill. We're going to find out together coming up with the help of Bloomberg's Laura Davison. And we'll get a sense of the mood music in the House here from a man in the middle of it all, Republican Congressman Greg Murphy of North Carolina, stepping off the House floor to join us in studio here straight ahead on Bloomberg. We'll have analysis from our political panel. Bloomberg politics contributor, Republican strategist Rick Davis is with us alongside Democratic strategist Jim Messina. We've got a big hour ahead. We're going to learn a lot. And of course, Wall Street is watching all of this. Let's start right now with an update on the markets and Charlie Pellet in New York. Charlie, how's it look?
Good day. Right now looking at a mixed market here. Joe Matthew with the Dow lower by 18 points. That is a drop of just under 0.1%, giving up earlier gains. We got the S&P up 15, on track for a record, up by 0.2%, 6213 where the S&P stands right now. The NASDAQ Composite Index up 155. For NASDAQ, that is a gain of just about 0.8%. So the S&P 500 bouncing on that U.S.-Vietnam trade deal. Tech is rallying. The Bloomberg Mag 7 index surging 1.3%. The 10-year 4.30%, with the 2-year 3.78%. Gold up $5 the ounce, 33.44, up 0.2%. West Texas Intermediate crude at 66.50 a barrel, up by 1.6%. Tesla's global sales tumbled for the second quarter in a row, leaving the car maker in a deep hole to dig out from. The numbers run counter to Elon Musk's claim in mid-May that Tesla's car business had recovered from an early year slump, driven in part by blowback over his work in the Trump administration. Dan Ives is head of tech research at Wedbush, and on surveillance this morning, he said the Trump-Musk feud isn't helping shareholders.
The last thing you want to see is him poking the bear. It comes down to, like, there's nothing good going to come down in terms of him doing it. And I think that's why every time he does that, it just creates this cycle in terms of Trump, going back. And it's the last thing you want to see.
Dan Ives of Wedbush, and right now Tesla shares, they are higher by 3.9%. U.S. markets fell, long-dated government bonds being hardest hit as speculation about Chancellor of the Exchequer Rachel Reeves' possible exit made investors nervous about Britain's finances. The FTSE 100 today lower by 0.1%. Health insurer Centene now plummeting by 39.5%, and Sean Diddy Combs acquitted today on the top charges of racketeering and sex trafficking, but convicted of lesser charges of transporting prostitutes. Arjun Grasso will have a whole lot more coming up on Bloomberg Law tonight at about 6:06 Wall Street time. Recapping, S&P up 0.3%. Lots going on. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Yeah, Charlie, we'll just keep piling them on here. We've got a lot of headlines to walk through and a lot of news to experience so far today. Thank you, as always, Charlie. We'll be back with Mr. Pellet, the voice of Wall Street and the New York subway, a little bit later on this hour to check on the Wednesday trade. Feels kind of like a Friday, depending on what you're up to here. And that is essentially how we're playing this in Washington, D.C., because lawmakers want to get out of town, having been brought back to town, at least House members, for what they hope will be a vote on the president's big, beautiful bill. Now, there's something going on right now. We've got our eyes on the House floor for you. Enter the UC storm. What you're seeing right now on YouTube, if you join us, search Bloomberg Business News Live on YouTube to get our live video stream. Members of the Congressional Black Caucus are now lining up in an effort to delay this process here with a storm of unanimous consent requests. Members asking for consent. The Democratic amendments are heard at the desk. This prevents the process from moving forward here. So we're, again, in this procedural mode where the gears are grinding very slowly, but at some point we could in fact see a vote on a rule, which would lead us to a floor vote on the big, beautiful bill. All this, by the way, is noise. If you ask Speaker Mike Johnson, at least publicly, the message he delivered on Sean Hannity's show on Fox. Don't sweat the details. This thing is almost done. Here's the Speaker.
85 to 90% of this bill is the House-generated product. The Senate made some modifications to it. They made it more conservative in some places and moderated it a little bit in others. But I tell you what, as the president said so well today, this is no longer just a House bill. It's not a Senate bill. It's the bill of the people, of the hardworking American people, and we are going to deliver it, as you said, Sean, by July 4th. It is so critically important. Remember, we got a clear mandate from the people in November to do this.
What, me worry? Of course, July 4th is in 2 days, and I'm pretty sure we don't even have all the lawmakers back into town. Let's get the state of play right now from Laura Davison, who, of course, is our Deputy Bureau Chief in Washington, D.C., a longtime tax reporter turned news editor and manager. Great to see you. No one slept this week. I don't know what's coming up next, but do you think we actually get a rule vote today? Let's take this one step at a time.
So it's very possible that we get a rule vote here sometime in the next couple hours. You know, this Democratic strategy of trying to delay the vote is actually quite interesting. Because if you were to have the vote, they were to not delay and move directly into this vote, you'd see Republicans in chaos. So they're essentially giving Republicans a little bit more time to negotiate behind the scenes before they actually have to come forward.
How about that?
On this rule vote, it is very likely, at least from talking to folks in the hallway, that this vote goes down, which would be, you know, this is procedurally, this is not fatal. They can always come back and take another vote, but it would be a very big and embarrassing blow to the president, and it could inflame tensions that are already not in a great place.
So clearly then, Speaker Johnson either does not have or does not know if he has the votes. How far off are the numbers? Does he need 5? Does he need 10? We should let our viewers and listeners know members of the Freedom Caucus, the Fiscal Hawks, are at the White House right now trying to hash this out.
Yeah, there's you know, dozens of members meeting with President Trump throughout the day today. You know, we're probably at the point, you know, and the whip counts are hard because you have a lot of people not saying how they'll vote or undecided. But there's probably about 10 to 12 people right now who are firm, who have kind of said their no's. Johnson needs to get that down to about, you know, 3 people or so. So that's where the complicated math goes. Of course, you know, if you have people who, you know, are stuck at home because of weather delays, you have anyone who is sick, anyone who suddenly can't be there, that also changes all the math, both on the Democratic side and the Republican side. So this gets very complicated, and you can bet that the whips, you know, the members who are in charge of vote counting have massive spreadsheets that they're keeping track of everybody's movements.
And big concerns about, well, a lot of things, cuts to Medicaid, also debt and deficits, the new score for the Trump tax bill, $3.4 trillion. And just in time for your appearance, Donald Trump posts on Truth Social. The one big beautiful deal is all about growth, he says. If passed, America will have an economic renaissance like never before. He says it's already happening, just in anticipation of the big beautiful bill. But there are great concerns that this would be a debt bomb. And when you ask members of the House Freedom Caucus, they're not singing off the same sheet music here as Donald Trump, are they?
They are not. They are actually in line with a lot of economists who have, you know, espoused a lot of worries that this would mean, you know, really unsustainable debt loads going forward. The bill, based on the Congressional Budget Office, most recent score would add $3.4 trillion over the course of the decade. You know, that's even bigger than this first-term tax bill that was, you know, around $1.7, $1.9 trillion. So these are big, big numbers that we're talking about, alarming, you know, economists, Democrats, and a handful of Republicans who are going to be key votes on this bill.
That's for sure. You mentioned the weather. I'm fascinated by this whole part of the story here. Raja Krishnamurthy with a 14-hour road trip from Illinois. There's thunderstorms all over the country, right? Nancy Mace hired a van for her 9-hour drive from South Carolina. Russell Fry, the 8-hour drive from South Carolina. Is everyone in town, or are we still waiting for arrivals here?
Based on a vote that happened, at 9 o'clock this morning, there were still about 8 Republicans who weren't there, a handful of Democrats. So that also could be a little bit of the reason for the delay. Both sides are trying to make sure they have all their members in town, in the building, able to vote. Another thing, remember when this bill passed the House initially, they did it, it was late overnight into the morning. They had people sleep through it. You better believe that they're going to have people making sure that everyone is aroused and ready.
Well, so, I mean, do you let him go home for the 4th and bring him back if this doesn't get done? Or does Mike Johnson actually keep the House of Representatives in Washington on Independence Day?
I think Trump will go ballistic if
they
go
leave?
home. So the pressure is to keep them in here, and exhaustion is your friend in this situation. If you just keep grinding people down, they're already mad because they don't want to be here. But if further delays, sometimes people just break in those scenarios.
He could have the full Republican conference on the South Lawn to watch the fireworks Friday night.
This president loves pageantry, having a big July 4th tax party. Yeah. I personally cannot think of anything more fun.
Well, it sounds to me, I have to admit, I feel the same way. It sounds to me like something is going to need to happen here. This needs to break one way or the other in the next 24 hours. Are you watching the Freedom Caucus for signs? How do you know this thing has gone in the wrong direction?
You'll see when they stop talking, that's how you know things have gotten really bad, or they're very close to a deal. And there's really, there's kind of 2 ways they can cut a deal. One, Trump can promise them something via executive action. That would not require revising the bill. Or they go back and open this bill up, and that means we're calling the Senate back. This is a delay of days, if not weeks.
That moves us into next week. You can only do so much deal making without changing this bill enough that it does have to go back to the Senate. So when we talk about deals being made, promises of executive action is one. How about ornaments on the Christmas tree in the next fiscal year, the budget that will soon be written in this House of Representatives? We're going to hear about side deals through that whole process, aren't we?
This is going to be a huge part of it, because after Republicans, they'll go home, they'll be back a little bit this summer, but the next big project they have is an appropriations bill going into the fall. This puts some of these members who are these fiscal hawk members in an awkward position, because you can't really say you're voting no on a bill because of the cost and then ask for more money for something for your district. But this wouldn't be the first time that a member of Congress would be accused of some hypocrisy.
Well, yeah. Rick Davis said yesterday on Balance of Power, pork barrel is back on Capitol Hill. Is that going to be the takeaway here? Not only did this add to the deficit, according to the CBO, but will unleash a series of backroom deals that will be part of a budget process come fall. This is why people hate Washington, right?
This is exactly, though the argument for some of these backroom deals is it helps get people to see sort of what's in it for them. This is the whole argument that if you say, hey, we have a bridge for your district, we have some money for a program that you want, that people can then see the tangible benefits of Washington. But this is why Congress polls so poorly, is that they think that.
Yeah, exactly. All right, so we'll find out if the president gets involved here. Tom Massey's a hard no, right? That one you can just take to the bank. You're watching Chip Roy, Ralph Norman. Who else should we keep in mind here in the next couple of hours?
There's Andy Ogles. There's Schweikert, a Republican from Arizona, who mysteriously was one who missed that initial vote. He's saying he's a no as of right now.
Did he fall asleep or something? He didn't get back in time? There's going to be stories like that come out of today, right? And tonight?
Yeah, it's going to be just madness as they try to ram this through in the next,
Cue the takeout now. Drag out the cots. We're in this for the long haul. Laura Davison running the floor in the newsroom right now with a pretty remarkable series of events happening to us. Our Deputy Bureau Chief in Washington. Thank you so much. As always, the insights from Laura Davison will help us get started here as we move our conversation to somebody who's in the middle of this right now. Greg Murphy, the Congressman, Republican from North Carolina, leaving the floor to come join us here in the Bureau with an insider's view as to what's really going on here. We'll have to ask him about, of course, the timeline and the deal making that's happening alongside what the president calls his big, beautiful bill. From his view on the House Ways and Means Committee, the gentleman from North Carolina coming up next right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, led by tech megacaps as President Trump announces that trade deal with Vietnam. Right now, we got the S&P up 16, up by 0.3%. NASDAQ up 165, up 0.8%. Our Mag 7 index up by 1.3%. The Dow, though, lower by 0.1%. 10-year 4.30% with a 2-year 3.78%. Spot gold up $8 the ounce, 33.47, up 0.3%. West Texas Intermediate crude rallying 1.5% now, 66.45 a barrel. And Bitcoin up 3.3%, back at 109,450 on Bitcoin. UK markets fell sharply, the pound shedding 0.9% right now as investors grow increasingly nervous about the state of Britain's finances. The FTSE 100 index down by just about 0.1%. Health insurer Centene Corp plummeting the most on record today. Centene now down by 40%. Paramount Global reaching a settlement with President Trump over a lawsuit alleging election interference by CBS News. Paramount down 1.1%. And Sean Diddy Combs acquitted today on the top charges of racketeering and sex trafficking, but convicted of lesser charges of transporting prostitutes. Balance of power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. That Centene move is remarkable and something that will play into the conversation that we're about to have with not only a member of Congress, but one of the only physicians who's going to be voting on this bill whenever this does happen. Today, tomorrow, we can bring you up to date right now. We're waiting for a vote on a rule here on the House floor, and the potential for a full floor vote could be today, tonight, tomorrow morning, maybe on the 4th of July, as we just discussed with Laura Davison. It appears nobody's going home until this is done, unless, of course, this is really derailed with worries about debt and deficit, with worries about changes, dare I use the word cuts to Medicaid, and a couple of other matters. It does seem the SALT caucus has come around, but there are a lot of questions right now about what this is going to bring to the floor. The members of the Freedom Caucus, the fiscal hawks who oppose this, are meeting at the White House right now. And we're joined in studio by a Republican member of Congress who you've heard from before on this program, who was in fact treating Medicaid patients as recently as yesterday. Greg Murphy from North Carolina. Great to see you, and welcome back to Bloomberg.
Thank you.
It's quite a moment that we're in right now, and you have a unique perspective. I like to think that your colleagues are asking for your advice on this. And I want your input on the changes to Medicaid. Before we get that far, does this rule even get to the floor today? What's the state of play?
Well, I think the rule gets to the floor. Whether it passes or not is the real question. Because, you know, we don't pass the rule, basically it is a stop. It is not, if the bill doesn't pass, things can be dead. If we don't pass the rule, it brings us a chance to come back and address concerns that maybe different portions of the House caucus made or have. And, you know, things getting directly from the Senate, that's what they wanted, great. But if we have questions about them or real concerns about them, there needs to be a mechanism, I think, to get those addressed. So that's where we are.
When it comes to Medicaid, we've talked about this before, and I know that you supported eliminating waste, fraud, and abuse from the program. You've spoken openly about that. There are other changes and potential cuts that you might be worried about. There's also the matter of the provider tax, what it means for rural hospitals. Give us the physician's view here.
Yeah, I think if we back up, this is an exceedingly overly complex system of Medicaid reimbursement where we have, you know, things where the hospitals tax themselves, send the money to the state, and the state then draws down more money to give back to the hospitals. You have these direct funds, you have indirect funds. It is a very, very complex scheme, as if it's will. And what's been allowed to happen really over the last couple decades, especially the last decade, is a lot of drawdowns from the federal government to do things that states really should be doing on themselves. You know, North Carolina just expanded Medicaid a couple years ago, and that brings an entirely new population in. I was in favor of that because those are our working poor, the farmers, the fishermen, the clergy, the people in eastern North Carolina that are working but just simply can't afford health care. You know, we want to attack this, and the House version was waste, fraud, and abuse. Nobody can argue with those things. Getting people off the rolls that were illegally on the rolls or illegally in the country or were able-bodied. The Senate has taken a little bit different approach. it's kind of one of those things that it's like, I'll use the basketball analogy. It's not the first foul you see, it's the reaction to the foul. And the first foul we've seen, really a lot happened with the Biden administration of expanding the Medicaid rolls to people that honestly should not be eligible, are not eligible to be on this. So it's trying to now correct that, and we look like we're the bad guys because we're the second person seen as the foul, and trying to fix a system and reform a system for those individuals who truly deserve it.
That's quite an analogy. So are you close to a yes, or are you stuck on this right now? Would you vote for this bill?
I am in the information gathering stage. You know, I will tell you this, as a surgeon, we always measure twice and cut once. That's just what we do. And usually surgeons are pretty direct and we go through things, but this is too important just for a knee-jerk response. Look, I'm on Trump's team. I want him to succeed, but I also think he wants the best package possible delivered to the American people.
Well, this is interesting because I know that you support Donald Trump.
Sure.
But you also see a window that's not necessarily closing here. We don't have to manage the debt limit, for instance, until we're probably into August.
Yeah.
That gives you a whole other month to work on this, right?
Yeah, you know, but time is of the essence. We do want to get this done now. We don't want to sit there and let this drag out because there are some, truth be told, some political concerns to do this. But we have a chance, we have a moment in time really to get this right, stop some of the abuses that are occurring within the Medicaid system. I mean, there are, not only on the individual level, but on hospital levels and other levels. There are abuses that have occurred. I was chief of staff of our, at the time, a $2 billion medical system. And so I know a lot about where the monies come from, where they go. There's a lot of individuals that, there's a lot of waste, fraud, and abuse that goes in these. Yeah. You know, you see some of these CEOs of hospital systems earning millions and millions of dollars when most of their monies are coming in from taxpayer initiatives. I have a problem with some of that. You know, it's one thing for CEOs that run companies on the 500 index or whatever, but it's a different thing when you're making your money based upon taxpayer dollars. Sure. That said, there are a lot of abuses that go in this system. This is a once in a lifetime opportunity to get it right. We need to get it right. You know, one other thing I'll just say is in the state of North Carolina, 52% of the births occur to mothers on Medicaid. Wow. So how is this? This is a symptom of a societal issue. Now we're being paid for with Medicaid dollars. And how do we fix that issue, which actually makes then the Medicaid issue much easier to treat? I don't have the answer to that. We have, and I see this all the time, Joe. I see kids coming in having kids, and their grandmother, who's 32, taking care of the child, when the child still is either in high school or trying to figure out if they can go to college or not. That's a systemic issue of society, and we're trying to deal with it, trying to pay for it somehow, which at some point you got to draw the line. We can't keep doing this. We have to have some financial responsibility here.
Is there anyone to tell a story like that to President Trump? I mean, that's an incredible first-hand analysis.
I don't know anybody in Congress that still practices medicine. I'm the only physician that still does. I live in a very, very poor area of eastern North Carolina, which are all Trump supporters. And so I do think it is a message he needs to hear, how critical this is going to be for eastern North Carolina. Now, I'm just trying to figure out how to thread this needle, you know, to fulfill the agenda that the president wants, but at the same time to make sure that access is affordable and accessible for the patients I see in eastern North Carolina.
When you consider the process here and the potential for another reaction or another foul, you make enough changes, this has to go back to the Senate. Does that need to happen? Or can you make changes without that happening?
I don't know that if we make changes, I think legislatively it has to go back to the Senate. But, you know, again, you measure twice, you cut once. Let's do this right. Let's not try to have to say, well, we'll come back and fix that later. I'm not into that kind of stuff.
Otherwise, you feel like you got jammed by the Senate.
Well, yeah, and, you know, I think the Senate's, the guys and gals were with great intent on what they wanted to do. I had been told there was a lot more discussions about this beforehand, but I think the Senate really actually did close to 90% of what we wanted. The changes were pretty radical changes.
Yeah, boy, that's right. I wanted to ask you about your colleague from North Carolina on the Senate side, Tom Tillis. Pretty remarkable development here.
Yeah.
James, I don't know if we can get that sound of Senator Tillis on the Senate floor over the weekend. Of course, he's decided not to run for re-election based on a pretty tight jam that he was in, and some would argue that he was facing a very difficult primary to begin with. Let's hear from Senator Tillis, if we can, from earlier on this process.
I'm telling the president that you have been misinformed. You supporting the Senate mark will hurt people who are eligible and qualified for Medicaid. We're going to make sure that we fulfill the promise, and then I can feel good about a bill that I'm willing to vote for. But until that time, I will be withholding my vote.
Pretty passionate stuff. I'm sure you've had a chance to talk to the senator. What would you tell him, though? Is he off on this one?
No, I think there are are parts that Senator Tillis is spot on, correct.
Yeah.
But we're in a system that has exploded. You know, the Biden administration, normally state audits their Medicaid rolls every year. Who's eligible, who's not eligible. The Biden administration didn't want any of that. In fact, the head of CMS had two jobs to do. She was in charge of infusing as much DEI into medicine as possible and trying to put people on Medicaid rolls, honestly, who don't deserve to be there. Will there be some collateral damage? There's collateral damage with any legislation, Joe, any legislation. But it's my job is to try to make sure that there are agreements, not only from the federal government, but also back in the state legislature. I spoke with the Senator Pro Tem Berger, and I pretty much was very firm that, look, if this comes down the pike, the state's going to have to cough up some other monies that it's been trying to pull down from the federal government now. We cannot bankrupt the federal government on issues that the state should be taking care of.
Well, we see a lawmaker like that call it quits, and we've seen a few, Don Bacon and other, and I realize he may have had his own personal issues in making that decision, but you wonder, you're more effective by staying here in office trying to make changes.
Well, you know, I think Senator Tillis has been thinking about this for a while, and this may just have been the last straw.
Sure, of course. Everyone's got their own story. You're going to run for Senate in North Carolina?
Well, I've been asked to. I was on the way over here. I got another text asking me if I'd consider it. So,
well, this is interesting. Are you allowing yourself a certain period of time to make that decision?
But I think, you know, Joe, I did not raise my hand to get into politics a few years ago. I got recruited, and it gives me a little bit of freedom. I can always fall back on being a lowly surgeon full time. And I've said that before. I want to do the right thing. And you know, next week, if we get something done, I think we'll really start to look at this. Who are the players in the game? We can't let a Democrat take this seat. I'm sorry, North Carolina needs a Republican in that seat. And
well, you wonder what would happen if Roy Cooper became the next senator from North Carolina.
I think that would be problematic. He's been a little too far left and supported things that the Democrat Party right now, good Lord, if you saw what, he can look and see what happened with the New York mayor's race. Nobody can recognize the Democratic Party anymore. So, you know, I'll make that decision next week or the week thereafter. And
so you could take a pay cut for a whole other job as a physician. You just stay here in Washington and make less money.
Yeah.
Fascinating. I'd love to stay in touch with you on that and hear about this deliberation, because I know that's not an easy decision to make. Is that something you're talking to your family about?
Oh, absolutely. Yeah. And, you know, just like with all the other decisions, you sit down, you talk with your family, ask the good Lord for some prayers and guidance, and you either walk through doors that are opened up, or you let somebody else that you think can do the job as well walk through too. I've got great colleagues in North Carolina.
Yeah.
We just have to make sure we put somebody that can beat a Democrat and be a great senator.
Measure twice, cut once.
That's exactly right.
That's the takeaway here from Greg Murphy. You're going to head back to the House now.
Yeah.
We'll have our eyes on you, and this is going to be wild. Good luck in the next 24 to 48 hours. We'll see if this bill passes.
Great.
Thanks for talking to us.
All right. Thank you, Joe.
From North Carolina, of course, in speaking on behalf of the Republicans here in Washington, some of whom have not made up their mind. And we could still see some changes to this legislation, as we just heard from Congressman Murphy himself. We'll assemble our panel coming up next. Rick Davis and Jim Messina are with us to hash this out here as we prepare to count the votes on a Wednesday in Washington. We've got a lot more ahead here on the fastest show in politics. Stay with us. I'm Joe Matthew, live from Washington. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index. Stocks rose, led by tech mega caps as President Trump announced a trade deal with Vietnam. S&P now up 20. That is a gain of 0.3%. The Dow in the red, down 23, drop there of just under 0.1%. While NASDAQ, the composite index, up 173, up 0.9%. NASDAQ 100 up 0.7. The Mag 7 index, the Bloomberg Mag 7 index, up now by 1.3%. 10-year at 4.30%, with the 2-year currently yielding 3.78%. Gold, little change now, up $9 the ounce, 33.48, up by about 0.3%. West Texas Intermediate crude up 1.7%, 66.60 for a barrel of WTI. In the meantime, stocks higher, but UK markets tumbling, with the rout spilling into global bond markets as speculation about a possible exit by Chancellor of the Exchequer Rachel Reeves made investors nervous about the state of Britain's finances. FTSE 100 index down now by 0.1%. Wall Street's largest lenders, including Goldman Sachs and Morgan Stanley, have boosted their dividends after passing the Federal Reserve stress test this year. Among some of those bank names, right now, JP Morgan Chase up 0.6%, Citigroup up 0.7, Wells Fargo up by 0.8%. And Sean Diddy Combs acquitted of most serious charges. He was convicted of prostitution-related offenses. The verdict means Combs escapes the possibility of a life sentence, though he still faces a maximum of 20 years. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. We're all watching, of course, the House floor right now with the series of procedural matters that we're going through here that may or may not lead us to a full smash vote on the big, beautiful bill. Thanks for being with us here on the Wednesday edition. Indeed, I'm Joe Matthew in Washington here on Bloomberg Radio, Satellite Radio, Channel 121, Bloomberg Originals, and YouTube. Search Bloomberg Business News Live to see our video feed here. A UC storm, they're calling it, taking place on the floor of the House right now as members of the Congressional Black Caucus storm the rostrum with a series of unanimous consent requests, not to necessarily get anything done other than slow the process. Democrats, of course, have been locked out of this process. That is the way it works when you're dealing with reconciliation. It's a Republican family matter. Although Democrats are speaking about it, as we heard from Minority Leader in the House, Hakeem Jeffries, earlier. Listen.
Every single House Democrat will stand up for your health care, stand up for your Medicaid, stand up for your Medicare, stand up for the Affordable Care Act, stand up for nutritional assistance for our children, our seniors, and our veterans. So all we need are 4 Republicans to join us in support of their constituents, to have John McCain level courage and stand up in defense of the health care of the American people.
Haven't we come a long way when the Democratic leader in the House is referring to John McCain to get a round of applause from other Democrats? Let's assemble our political panel. Speaking of John McCain, Bloomberg Politics contributor Rick Davis is with us, Republican strategist and partner at Stone Court Capital. I'm also happy to say Jim Messina's back. Democratic strategist, of course, ran Barack Obama's 2012 campaign. Gentlemen, great to see you both, and welcome to the conversation. Rick, I don't know if your ears were ringing there, but we just had a conversation with a Republican member of the House, Greg Murphy from North Carolina, the last, I believe, or only serving physician in the House of Representatives. He's a Trump supporter. He's a MAGA guy, and even he has deep concerns about the changes that are being made to Medicaid, the impact it could have on his state. He's still not a yes. How far are we away from this actually potentially passing?
Yeah, I only wish we had a few of those Democrats that thought John McCain was a hero at the time we were voting for him for president back in 2008 when Jim Messina and his team kicked my butt. Look, I mean, this is a pretty unpopular bill in America. Most polls I've seen really significantly net negative. I think that the White House and the Republican majority have done an average job at best selling it to the American public. Obviously, they've been consumed with selling it to each other.